not going to get the policy changes that they're seeking.
Yeah, that's what I was going to bring up. The Freedom Caucus apparently tweeting, this is a total failure.
Yeah.
What happens next? Because for Speaker Johnson to be able to get this passed, he's clearly going to need help from the other side of the aisle. If this is a bipartisan deal that some Democrats will sign off on as well, what does that mean for his speakership? Because this feels like the same road that Kevin McCarthy was going down.
Same road, and let me just take it back a little bit further on the railroad, so to speak. There is no chance that they could pass this without Democratic support. In fact, because of the tight margins in the House and Kevin McCarthy retiring and other people leaving Congress, they can't even get it to the floor without Democratic support. So this is going to be at a higher threshold, what we call suspension of the rules, which will require 2/3 majority for passage. It will require 270 something votes to get through the chamber. So this needs to be purely bipartisan in the House. And what does it do to Johnson? I don't know the answer to that. I mean, logic would dictate that people understand that Washington is controlled by Democrats with one bastion of Republican control. Democratic White House, Democratic Senate. So you get what you could get, and you don't get upset, as my kids always tell me. And you have to realize that the governing dynamics are not in your favor. You got to build and cut spending year over year based on the deal that Kevin McCarthy cut, and it's a relatively good deal for divided government.
Jake Sherman, thank you very much, Jake.
Thanks, Becky.
Squawk Box will be right back.
BC.
Good morning, everybody. Boeing shares slide. The FAA grounding a large portion of its 737 MAX 9 fleet after a door plug detached from an Alaska Airlines plane. We will have the latest and get reaction from the street. Will a spot Bitcoin ETF win approval? Former SEC Chair Jay Clayton joins us to talk about what it could mean for investors. And one of Europe's biggest grocery chains pulling Pepsi products off the shelf over price hikes. Will the movement spill over to U.S. grocers? We'll talk food inflation with former Darden CEO Clarence Otis. The second hour of Squawk Box begins right now.
Good morning and welcome back to Squawk Box here on CNBC, live from the NASDAQ market site in Times Square. I'm Joe Kernan along with Becky Quick. Andrew is out today. Did they do that this year?
What?
Times
Square confetti? Yeah, there's still confetti out here. You haven't seen it?
Yeah.
Still floating around.
I actually did see a little bit of it.
No, there's still confetti this morning.
No,
You still see it
but I'm old. I watch, what's his face? Ryan
Seacrest?
Yeah. I don't know who any of those people are that he has on. I don't know who the people he has on are. I don't know who the people in California are. I don't care about any of them.
Hide your crazy.
I can't talk like them.
To hide all of
Where is Guy frickin' Lombardo? And where is
well, I can't
Dick
tell you
Clark?
for sure.
People that make me feel like this is an actual important moment.
Let me see if I can call it Lawrence Welk for you.
You know, I saw one guy. I saw LL Cool J. He's pretty cool.
He's pretty cool.
He's a big dude.
Yeah.
And I
actually saw him too.
I saw him and thought he was. So I'm kidding a little bit about it. I did understand some of it, and I know I've met him
like
before. He's been in.
Simpson.
I know. I don't care. I don't care. Did you ever see what they say?
Am I wearing underwear?
You better be quiet. We're going to put you in a rest home. And then he says, I'm already in a rest home. He goes, well, we're going to put you in one that was on 60 Minutes.
Welcome back.
Good to be here. So they did, it all happened.
Yeah, it did.
And it is 2024?
It is 2024.
Got that right? Okay.
And Boeing shares this morning are getting hit pretty hard in the pre-market. The FAA grounding scores of 737 MAX 9 planes after a piece of the aircraft blew out during an Alaska Airlines flight on Friday. Phil LeBeau joins us with more on this. Phil, a lot of questions.
Oh, definitely, Becky. And I don't think we're going to have answers. I would be surprised if we have answers today. Maybe we'll get some more answers in terms of exactly what happened and a move towards a solution in the next couple of days. But if that happens, I think people are going to say, wow, Boeing is getting off relatively quickly in terms of a major scare for the airline or for the company as well as for the airlines that fly the MAX 9. We've seen the video. Everybody has seen the video that came out over the weekend from inside the Alaska Airlines plane. We'll talk about that in just a little bit. Here's the focus of the investigation. The fuselage plug, which is essentially where an emergency door would be, it's been plugged as part of the manufacturing process. There were pressurization problems with this particular aircraft 3 times before this incident. The NTSB describes them, at least initially, as being benign issues. But did that have play a role in what ultimately happened in the air? And the grounding duration is unclear. The seats next to the aircraft or near the plug that was stripped off the plane, they were empty. Thank goodness, because this could have been much worse. And this happened early in the flight. Here's the NTSB talking about just how lucky everybody was that this was not a worse accident.
The aircraft was around 16,000 feet and only 10 minutes out from the airport when the door blew. Fortunately, they were not at cruise altitude of 30,000 or 35,000 feet. Think about what happens when you're in cruise. Everybody's up and walking. Folks don't have seatbelts on. They're going to restrooms. The flight attendants are providing service to passengers. We could have ended up with something so much more tragic.
Very, very fortunate. Here's what's going on with the grounding. Now, there are 218 MAX 9s that have been delivered, but only 171 are grounded. Those are the ones that have the fuselage plug. The remainder are not grounded. United has 79 planes that are grounded. Alaska has 65. 6 other foreign airlines have the remaining 74. And this is a relatively new aircraft in question with Alaska Airlines. So it was only delivered on November 30th. So what happened, or October 31st, I should say, what happened between then and this incident over the weekend? That will be at the heart of the investigation as the NTSB looks not only at the aircraft that is back at the airport in Portland, but also the fuselage plug, which has been recovered. It fell into a backyard in suburban Portland. They now have that. They'll look at that. They'll look at the cockpit voice recorder as well as the flight data recorder. They'll try to get a better sense of exactly what happened with this incident, and does it portend or indicate that there might be a broader issue with other 737 MAX -9s. As you take a look at shares of Boeing, the important thing for a lot of investors this morning, separate from this investigation, is whether or not this has legs. Will this mean that Boeing has to slow down plans for ramping up MAX production, which they are in the process of doing between now and the end of 2026? There is a big schedule increase that is planned for MAX production, including the MAX 9. Also take a look at shares of Spirit Aerosystems. Seems like we talk about Spirit every 6 or 7 weeks. There's another issue. The stock is getting hammered today. Spirit makes the fuselage for the MAX. It made the MAX plug in question that is at the heart of this investigation. We've reached out to Spirit, by the way. They have a new CEO there, Pat Shanahan, who was a longtime Boeing executive, served in the Trump administration briefly, guys. We have not heard back from Spirit at this point that Mr. Shanahan will be talking anytime soon, but he's got his hands full in terms of correcting a lot of the problems that are at Spirit. And again, we don't know if Spirit is directly the cause of what happened with this accident for Alaska Airlines, but certainly a lot of questions for investors today. Guys, back to you.
Yeah, I mean, Phil, the video is so graphic, it's hard not to put yourself in the position of the passengers
Sure.
who were on that plane, and I think that's the instant reaction everybody had. Imagine even driving into work with your windows down and then think about what these passengers went through. But when you look at the stock implications, the Spirit Aerosystems, as you bring it up, that used to be a unit of Boeing, right? The idea that it was spun off at one point?
Yep.
A lot of
It's
questions
based
I
in
would assume
Wichita,
about
Kansas.
that, too.
Yeah, it's been separate. It's been its own company since 2005, and it has diversified its product portfolio. When it was spun off initially from Boeing, almost all of its business, as you would imagine, was for Boeing. This is where the fuselages are built. They're built in Wichita, Kansas. They have diversified. They also do fuselages for Airbus as well. But Becky, we have talked, I think it was like 8 weeks ago. I'd have to go back and look exactly when. There were a couple of incidents involving holes that were improperly drilled that required inspections. We've had other issues with Spirit Aerosystems. This is at the heart of a lot of questions people have, not just for Spirit, but for Boeing as well, in terms of quality control. What's going on? And this has been a focus for Dave Calhoun, the CEO. He has talked about it at length. He will hold an employee town hall tomorrow in Renton, Washington, where the MAX is built, and he'll be there along with Stan Deal, who's the head of Boeing Commercial Airplanes. Stephanie Pope, who's the new COO, is expected to be there. There will be board members there. Boeing is front and center right now for a lot of people saying, what is going on? Explain to us whether or not you have your arms wrapped around the quality control issues there. That's going to be a major question for Calhoun and the leadership team at Boeing, not just today or the next couple of days, but over the next several weeks.
Phil, thank you. That stock off by more than 8% right now, and it's the reason that the Dow's under so much pressure this morning. We'll be speaking with Phil in the next hour. We'll also speak with an analyst about this situation later in this hour.
Join us now to talk markets. And we joins us Katie Stockton, Fairlead Strategies founder and managing partner. She's also a CNBC contributor. We look back at the previous year and try to look ahead. That's just natural because of where we are on the calendar. People are talking about Apple losing some momentum. That could be important for the overall market because it's such a leader. Is this something more than just a, I don't know, a backing and filling period for Apple?
Well, I think we have to contextualize it, right? We had such a huge move from the major indices ahead of this pullback. It was more pronounced for Apple than for most of the mega caps and also for the major indices. And yet, to me, we now have a short-term oversold reading for Apple. It's still within the context of a long-term uptrend. There's good support right around 179, 180. So it's a bit of a proving ground for it. I'm not ready to add exposure yet, but just with a little stabilization, I would say I'd feel actually confident adding into weakness. And that's often hard to do. People talk about, well, buy the dip. Well, here's the dip, and it has people a bit shaken.
I hesitate to ask you about, well, for a technician, you do talk about election years. So you don't need to talk about it in a fundamental way. You can just talk about it statistically, what happens during election years. But also, what about sentiment? I mean, no one expected the type of gains that we saw, I think, in 2023. Could it repeat itself in 2024? And is that likely in an election year?
So the thing about Q4 was that we saw this major breakout, and it was a breakout that was shared not just by the large cap indices, but also the small cap indices. So we saw big breath on this big move, resistance levels cleared, and that does set a very positive tone for the year, for the whole year, in fact, because we have what technicians call these big cup and handle formations. If you look at a chart long-term of Microsoft as one example, Microsoft being a big heavyweight, just like Apple, of course, we have this major breakout to new all-time highs, and that clears the chart of resistance. It shows a sentiment shift and also a willingness now to go farther down the market cap spectrum. So I think that that's going to be key for the market, and also the spreading out in terms of sector participation. We had technology, communications, all the mega cap heavy sectors did best, even with the Q4 rally. But now we're seeing financials as one example kick in, and maybe even healthcare.
I mean, it was a hated rally, and it gave the bears hope that they were going to end up being right about October lows. Now we got to specify which October we're talking about, but right. For 2 straight years, people were married to the October lows and retesting those. And for most of 2023, people were either not in love with the rally or thought there was going to be a come-up-in, so it wasn't going to continue. Was that all taken care of in the fourth quarter? It was solidly.
I would say so. And even earlier in the year when we had a breakout back in May, that to me is where we emerged from that bear cycle of 2022. And we had to sort of concede to the fact that even though leadership was narrow, we had this bull market cycle in place. We can arrive at, for the S&P 500, a price objective of about 6,100 if we see new highs. And we are looking for new highs after this consolidation. And we're really not reading too much into the consolidation because it does follow such a strong relief rally. And with that, of course, you get the overbought reading in market sentiment, in market breadth.
We did have a guy, it was just a couple weeks ago, Becky, 3,500. Still talking about 3,500 on the S&P. Did you just say 6,100?
6,100. And that wouldn't necessarily be relevant for this year, but it's something to sort of remind you to keep a bullish bias when the markets are trending higher. The long-term momentum shift is really very meaningful, what we saw last year. It took kind of a long time to unfold based on the nature of the 2022 bear market cycle. But now we have these long-term momentum gauges pointing higher, and overbought conditions so far are being absorbed very well, and that's characteristic of a bull market.
All right, next time you're on, we can talk interest rates. Is there a way, how do you look at inflation? Do you do charts for inflation?
We don't often chart the macro data in that way. It's a little slow moving for us.
Bonds
for my
to chart inflation. Yeah, you could use
but certainly
the 10-year.
yields. I mean, we think yields will be in a corrective mode, meaning sideways to lower for much of this year.
The yields, not the
yields.
bond. Bitcoin, we won't talk about that either. Maybe next time.
Next time.
We can tune in. That's a long. Is that too long? That's too long to promo that when we don't even know when she's on again.
She'll be on very soon.
I'll be back.
Don't miss a minute.
I will be back.
Thanks, Katie. When we come back, the Biden administration announcing its second CHIPS Act grant worth $162 million to Microchip to expand fabrication in Colorado and Oregon. We're going to talk with the White House's former CHIPS coordinator next. We'll be right back. Welcome back, everybody. The Biden administration has announced a $162 million investment to expand chip factories in Colorado and Oregon as the U.S. continues to bet on American-made semiconductors. Joining us right now is Duke University Distinguished Professor Ronnie Chatterjee, who was most recently the White House Chips Coordinator. And sir, thank you for being here with us today. We are watching these announcements very eagerly to try and figure out what they all mean. What does this latest investment, what should we think about it?
Well, this latest investment really emphasizes the Biden administration's commitment to supply chain resilience. You know, a lot of the attention with the CHIPS Act goes on the most cutting edge chips, those things that power artificial intelligence or your latest iPhone. But what's really important in the first two awards is microcontrollers and other older and legacy semiconductors that you find in automobiles, medical devices, in the grid. These are some of the things that were in short supply in 2021. And these two first awards, which are pretty small, this recent one, $162 million, are a preview for what's to come and are really focused on supply chain resilience in some key industrial sectors. That's what I see from the first two awards so far.
It seems like it's taking an awful long time. I mean, it was 2022 when the CHIPS bill passed. It's been well over a year, and we're talking about $52 billion that was approved just in subsidies, another $24 billion in tax credits. Why does it feel like this stuff is just coming out? I mean, $100+ million is a lot of money, but it does seem like it's taking a long time to get the money kind of doled out.
Well, the $162 million will support two plants, expand and modernize them. But you're right, there's a lot more to come. You have about a dozen awards, according to Secretary Raimondo, that will come out in 2024. I think some of the big ones that people are looking for, the really transformative bets on the future of the industry, that's likely what we're likely to get the news in 2024. These are big, complex deals. If it was the private sector, there would also be a lot of due diligence, a lot of back and forth and negotiations. And so I'm expecting to see a lot of action in 2024, but I'm not surprised that these initial awards have been smaller and really focused on the things that were connected to supply chain disruptions during the pandemic. That's a really important problem to solve.
There was a news story earlier today that we were kind of looking through about Chinese companies saying they aren't interested in NVIDIA's slower AI chips, that they are now looking to Huawei and to in-house solutions for some of these chips. So when we look at security issues and think, okay, we're going to be able to maintain control over this, how long does that last?
Well, you know, according to Huawei's recent product releases, they released a phone that got a lot of attention. They released a computer that got a lot of attention. The chips in that phone are about 5 years old and really don't show that the Chinese are making up significant ground to be at the leading edge. It is a tight window, but 5 years is still way behind. If you look at the computer, the laptop that just came out, they were using a chip that was made in Taiwan in 2020. So I think you have some early evidence that these export controls, which are relatively narrow and not focused on commercial advantage, but really for national security, are working. But this is a situation we're going to have to continue to monitor, both at the advanced chips, the things that power AI, also in the legacy, because the Chinese government has done this in other sectors before. They've plowed a lot of subsidies into key sectors, cratered the market prices around the world, and put a lot of companies out of business. We have to watch the legacy older chips, the ones that power automobiles, the grid, medical devices. That's an area where the PRC is actually making massive investments. With, I think there's 18 new chip factories starting in China this year. That's the area I'd focus on.
Ronnie, how long until we're in a better position just in terms of controlling our own chips that we're manufacturing? Because not only does it take a long time for the awards, it takes even longer to build some of these foundries and other things. When you look out, do you say 2026 we're going to be in a much more self-reliant position? Is it longer than that?
Well, I think you're already seeing industry make a bunch of bets here. I mean, there's $166 billion or more that's been invested by the global chip industry in the United States. So companies are making those investments. They're making a bet that the American chip sector is back. In terms of when these factories are going to get built, these are huge CapEx investments. These are really complicated machine tools. I think it'll take a couple of years for these factories to actually get up and running, build in all the equipment, and start producing at scale. But honestly, we need to start now, because the deterioration of manufacturing in the chip industry took a long time to take hold, and it'll take a few years for us to come back. I like the track we're on. We got to keep watching these announcements, and I'm sure there's going to be more exciting ones coming in 2024.
Ronnie, thank you for joining us today.
Thanks for having me.
When we come back, the Vulcan rocket lifting off overnight in the first lunar landing mission in decades. We've got the details next. The futures this morning are under pressure, particularly when you're looking at the Dow. It's indicated off by about 160 points thanks to weakness with Boeing shares. S&P futures down by 4. The NASDAQ is at the flat line. Squawk Box will be right back.
The United Launch Alliance, that's a joint venture between Boeing and Lockheed Martin, launched its Vulcan rocket, and lots riding on its debut. Morgan Brennan joins us live from Port Canaveral. Morgan.
Hey, Joe, that's right. So this is the first flight of a new rocket, and it is the launch of the first lunar landing attempt by the U.S. since the Apollo era, so 5 decades. At 2:18 Eastern this morning, United Launch Alliance's Vulcan Centaur lifted off from right behind me at Cape Canaveral in a maiden flight that was a decade in the making. It launched an uncrewed robotic lander for startup Astrobotic that, if all goes according to plan, will become the first privately owned spacecraft to successfully land on the moon. Now, ULA, which, as you mentioned, is a JV between Boeing and Lockheed Martin, had a lot riding on this mission, which CEO Tory Bruno called a, quote, dead-on bullseye in an exclusive interview with me this morning.
This was tremendously important for our position in the marketplace and for the government. We replaced 4 families of rockets in 51 configurations with this single Vulcan. It's part of what allowed it to become so affordable, but it also means this is the platform.
So next, 6 more launches for Vulcan this year before ramping to 25 per year. 70 missions spoken for already between the U.S. government and commercial customers, including Amazon as it launches its and builds out its satellite-based broadband service. Launch price undisclosed, believed to be much more competitive with industry leader SpaceX, and it comes as ULA is on the sale block, which Bruno did decline to comment on. As for Astrobotic, its Peregrine spacecraft is headed to the moon. It will orbit there for a few weeks before attempting a soft landing on February 23rd with payloads for NASA and others, including, by the way, the remains of some Star Trek luminaries. It's the first one launched. It won't be alone, though. Intuitive Machines is also launching its own commercial lunar lander next month. And in total this year, Joe, in 2024, 5 U.S. commercial lunar landers are expected to launch to the moon as NASA does prepare to send astronauts back later this decade.
Amazing. Yeah, when it happened, and so Morgan, the payloads are they coming? They're not coming back. The stuff that it gets, is it?
Nope.
How do they do it?
It is not coming back.
Yeah.
So there's payloads for NASA. So Astrobotic and these other landers are contracted with NASA in this special public-private partnership known as CLIPS, Commercial Lunar Payloads Services. And in this particular case with Astrobotic, it's going to attempt that landing on February 23rd to time it with the sunrise on the moon. It's going to land if all goes according to plan. It also has payloads for 6 other countries, some commercial customers. There's going to be all kinds of research it does. It's going to take all that data. It's going to collect it, send it back to Earth, to scientists. It has 10 days to do all of this before the sun sets again, and basically all of that equipment is rendered useless.
Wow. So that's cool. So it can do the experience we'd be doing if it was manned, and then send it back. But when we do send the astronauts back up, they're coming back, obviously. But this is it's totally different kind of mission, but really cool and exciting. I just don't know. Is there anything going on the moon? I figure, we've been there, done that, but I guess there's always more to figure out.
There's so much more, and to be very clear here, we talk about geopolitical tensions here on the Earth between countries like the U.S. and China. You're seeing a very real space race play out where things like the moon and this idea of colonizing the moon are concerned as well. What's so incredible about this moment in time, particularly from the U.S. standpoint, it's being commercially driven. So Astrobotic, for example, is doing this mission for $100 million. A similar mission done by NASA in the past would have cost hundreds of millions of dollars, if not closer to $1 billion. So just to give you a sense of the role that private sector is playing in this.
Great. Port Canaveral, Cape Canaveral, Port Canaveral. I thought it's the Kennedy Space Center. I thought Canaveral was changed. You got to update us on all that eventually,
Space
Morgan.
Coast. Let's keep it easy.
Yeah, okay. See you later. Thank you.
All right, coming up, we've got a story about a different kind of race, this one toward a spot Bitcoin ETF. Former SEC Chairman Jay Clayton will join us right after the break. We'll be right back.
come.
BlackRock has set a fee of 0.3% for its planned spot Bitcoin exchange traded fund, which is notably lower than those charged by some of its peers. In comparison, Valkyrie Investments and Fidelity are charging fees of 0.8% and 0.39%, respectively, for their planned spot Bitcoin ETFs. And I just noticed we're getting a pretty firm bid this morning on Bitcoin. It's almost 45. I saw 44 and change a second ago. Joining us now to talk about the possible approval of a spot Bitcoin ETF is former SEC Chairman Jay Clayton. He's a CNBC contributor and adjunct professor at the University of Pennsylvania, which I say now, and it's like, it's a loaded term all of a sudden. It's so weird.
A lot of ways you can go with that.
You know, it's really loaded is Harvard. That is a loaded term, if there ever was one. But maybe we'll talk about that in a second. I just been flabbergasted so many different ways recently. Now it's like to the left, oh, you know, they're enabling plagiarism and cheating. It's like, if it's in their best interest or if it's in defending some of their sacred cows, nothing, no matter how absurd it is, they'll look at you with a straight face and tell you, oh, yeah. Do you know what I'm talking about? Are you surprised at the way it works?
I do, and all right, let's go there. Why is this happening on college campuses, or why the reaction? Because there's been no real oversight or accountability. And when there's no real oversight or accountability, you get insular. What did people see in those hearings? They saw a terrible response to a question about anti-Semitism, an equivocal response when there was no room for equivocation. But what else did they see? They saw people unwilling to examine the status quo. If you're a company, we're talking about Boeing this morning, right? If the CEO of Boeing comes out and says, you know what, there's nothing to see here, you know, we'll fix it, don't worry about it, we'd all be like, that's not how you act when you're a leader. What America saw was that kind of action from the leaders of institutions that have, what, 14, 15, $20 billion in annual revenue, no willingness to be introspective. And I don't blame the leaders themselves for that. That's institutional perspective. That's what was going on there.
Right, they're a product of their environment.
And, well, if they challenged the status quo, they challenged the faculty,
well, they wouldn't be there.
They wouldn't be there.
But to bear that out, I mean, Boeing's not going to be able to say that because the FAA is stepping in. There's, what are you calling for, federal oversight?
No, well, I'm calling for some oversight. I think they lack any meaningful oversight at all, right? I mean, if public companies, they have incredible public feedback loops. The service you guys provide. You were asking good questions this morning, like, hey, you're asking good questions of the government. Why were these planes flying at all if they can't go to Hawaii?
Did you see the Ackman? You see the Ackman piece today, and we had Ackman on, and I was like, "Wow! Now you notice something's happening." We've had you on a million times where you've been spewing DEI and ESG as, you know, it's some wonderful thing, and now you realize what it actually is. And in the piece today, it's, well, there's DEI with a capital D, a capital E, and a capital I, and there's DEI with a small d, small e. I'm for the small d EEI, and I'm for the small ESG. I'm just not for the capitalized DEI. It's just all crap.
Look, with ESG, the elements of ESG, the basics of ESG, they make sense. G makes sense. Good governance. We just talked about good governance.
Yeah. But the way that it's been,
but with no accountability, no checking, no questioning, the fact that you could say to people, you know what, you can binarily screen investments, and not only are you going to do it least as well, you're gonna make the environment.
So how do we do what about DEI? How do we do DEI now? Was Claudine Gay, was she the best person for that leadership role at Harvard? And when, I mean, I saw guys like Jason Furman die on this hill. That's the hill he's going to die on, that we're not going to outsource getting rid of this. But was she the right person from the very beginning?
Look, I don't know because I wasn't there making those decisions. But I think that people have to ask themselves, are we doing enough rigorous selection for these positions. Obviously, these positions, like I said, $14 billion of annual revenue. You need somebody that has deep management experience and the like.
Why do we care, though? It's a private university.
But what?
Let them wither on the vine, and if this damages their reputation.
That's private companies. Okay, we still care a lot about what private companies do in our society. They're subject to lots of checks. They may not be subject to the public shareholder checks, but they're certainly subject to regulation and the like. If you're a private company in the oil and gas industry, you're subject to all sorts of regulation.
But Harvard moved on this because they saw job placement for their graduates drop significantly. They saw the number of people wanting to get into the school drop significantly this year, and they saw donations down. So
yeah, finally some checks from the outside on what's going on. But look at the place that universities hold in our society. What are parents willing to do to get children a ticket to these exclusive universities? They're willing to do. That tells you how valuable they are. And look, we've all benefited from what universities have produced. The fact that people take what they learn at universities out into the world, and we are the leaders in the world in so many industries, that has its roots in our universities, without a doubt. Now, we can't lose that. And if it takes a little bit of a kick from the government or a little bit of kick from the private sector to get that kind of accountability and introspection, so be it.
There's been some damage. There's no doubt. I was thinking about it. So I have all these sweatshirts for my daughter who went, and I wear them now. And people, it causes conversation. You came in today. You came in here. I was going to talk to you about Bitcoin. I said you're an adjunct professor, University of Pennsylvania, and here we are. 10 minutes later, that's all we've talked about. It's not good.
We should keep talking about it, though. We can't.
What happens with Bitcoin? Is the SEC going to sign off on a Bitcoin ETF, you think?
I think approval's inevitable.
Imminently?
I think there's nothing left to decide.
I know.
Look, I credit the SEC for where they are. Where are we? We're comfortable with the disclosure. Joe just went through the cost of investing in a Bitcoin ETF. People need to know what the cost of doing it is. They need to know, about the underlying Bitcoin market. Is the Bitcoin underlying trading market something that is what I would say is robust enough, efficacious enough, where you can rely on it? It is much better today than it was 5 years ago. 5 years ago, there was wash sales, there was laddering, there was all sorts of things that you wouldn't want to make available to the general public because of that risk. And the last thing, and I think this is missed, is the technology to actually provide the product. The custodying, the create, the redeem. This is a big step, not just for Bitcoin, but for finance generally. If you can digitize, tokenize underlying assets and trade that way, that's a potential significant change across finance, not just in the crypto space.
But you think Bitcoin ETF approval is coming and imminent?
Yeah, well? I do. Yeah. I could be wrong, but that's what I think.
Your opinion matters, former SEC chairman.
I don't like what's happened. And then when you abuse DEI, then you set back the movement, and we're still nowhere where we need to be. S&P CEOs, board members, and people of color that represent. We've got miles to go, but this casts a pall the way that it was administered. We can't ignore that we need to have a lot more work to do.
Well, I think that's where you have to start, Joe. We have miles to go. But let me recognize we have miles to go. We still have problems. Anybody who says that they don't see bias in society doesn't have their eyes.
Old boy network and all that stuff.
Absolutely, I've seen it in every organization I've been. Now, lesser and more people making improvements. But let me give the American people some credit here. If you travel the world, there's no country that is trying to assimilate, respect, provide for more different cultures, religions, and the like than the United States.
Okay, Clayton, thanks. Thank you. Squawk Box, coming right back.
Dental.com.
Boeing shares are under pressure again. They've come, actually, they're not down 20 anymore, down almost 20, 19 and 3/4 as the FAA orders the temporary grounding of certain 737 MAX 9 planes. This follows an incident on Alaska Airlines on a flight on Friday night when a portion of the fuselage blew out midair. Let's bring in Ron Epstein, BofA Securities aerospace analyst. And Ron, thanks for joining us. It's good to see you this morning. What do you know anything that we haven't tried to talk about already as to whether this is an Alaska Air problem or a Spirit Aerosystem supply problem or another 737 MAX problem?
Yeah, good morning, Joe. Yeah, obviously the NTSB has been working closely on it, and I listened closely to their press conference last night. And in fact, all the press conferences they've had, they've been trying to follow the chain of facts. It's unclear at this point the root cause of this. Just unofficially, it seems like it's not a maintenance issue. I mean, this is an airplane that was delivered in late October. So it really was it a Boeing issue, was it a Spirit issue, or was it Spirit doesn't build the door, they get the door from somebody else? The real question here is, and I think you have to put this into perspective. Imagine, Joe, if you went and you bought a car in late October, pick your favorite car, whatever it was, and then you went out just 2 days ago, opened the door, and it fell off. These door plugs are nothing new, right? I mean, they've been used in other Boeing airplanes and other Airbus airplanes. It's sort of like a standard thing. But what happened clearly wasn't supposed to happen. I think investors are kind of, everybody's kind of jumping to sort of, it's their fault, it's their fault, it's their fault. If we knew exactly the chain of events, we could say that, but we don't. But most certainly it shouldn't have happened. And the bigger question here is on an airplane that, right now Boeing is not certificating these airplanes. The FAA is. That responsibility was taken away from Boeing. It wasn't caught by the FAA, which certificates the airplane. It went through the Boeing process, and Boeing didn't catch this. And if it did indeed happen at the supplier, at Spirit Aerosystems, they didn't catch it either. Everybody got very lucky in this situation because this really could have been horrible. Luckily it wasn't. And it seems like the FAA is taking a cautious approach to this, just to make sure that, all right, we fully understand what's going on here. If you were to, from a financial perspective, the modest good news here is most likely this is not a design issue, because it's a very standard thing used in the industry, but a fabrication issue, an assembly issue, and where did that issue happen, and why wasn't it caught? And that's what gives me pause. And at this point, it's one of those things where the MAX program was inching back some confidence. That kind of gets blown away by this. Boeing's reputation was again the same thing. This kind of gets impacted by that. But the reality is, Joe, there's really only two airplane manufacturers, major airplane manufacturers right now, Boeing and Airbus. There's a ton of demand for airplanes. So I can't imagine, unless we're interpreting some of this stuff wrong, that this will have ultimately that big an impact on the 737 MAX program for now. given the situation with the duopoly industry and tons of demand for airplanes. So
hopefully it's not a quality control issue that involves, you know, just in general the way that business as usual has become. I mean, because they can look at every plane that has one of these plugs, that they can obviously look at it now, and I'm sure there's a way they can test to make sure that it's, this doesn't happen again. And in that case, you're right. Nothing, you know, the worst case scenario didn't occur, and now we've got a heads up to look at more closely at all the planes that do. But Ron, we got to run ahead of playing this out. Good to have you on today. Thanks.
Yeah, thanks, Joe.
Okay, coming up, tired of paying high prices at the supermarket for groceries? Well, supermarkets are starting to fight back against the food producers by pulling their products off the shelves. We're going to talk about that and much more right after the break. Squawk Box will be right back.
Francis Carrefour, with thousands of locations in 30 countries, will no longer be taking some Pepsi products and several other brand names to protest what the company considers to be unacceptable price hikes. The move shows that consumers might be approaching a breaking point. I want to bring our next guest for more on this, Clarence Otis, who is the former Darden Restaurant CEO. And Clarence, we have been looking at more than 2 years of extreme inflation when it comes to food prices, not just in grocery stores, in restaurants and beyond. What do you think the situation is at this point, just in terms of the consumer ability to continue to take any more?
Well, Becky, I think for sure, despite the fact that there really is strong employment levels and solid wage growth, many consumers definitely are feeling the pressure financially. You can look across the board at the major spending categories. So food inflation, rents have escalated, fuel costs, they're muted right now, but consumers know that they're volatile and they can spike at any time, and so that weighs. And then when it comes to their digital lives, so think about connectivity, content, devices, those are taking a bigger and bigger share of consumer budgets. And so moves like these are not surprising. I think what's surprising here, because these things happen all the time, is that we're talking about brands that have market dominant positions. And so that typically doesn't happen with those brands. So that is a new signal. Not sure that would happen in the US, but it definitely is a warning shot to producers in all consumer categories.
Clarence, let's talk this through, because I remember a few years ago, Carlos Gutierrez came on. This is probably 3, even 4 years ago, and he said that any CEO who wasn't raising prices at that point was doing a real disservice to the company and to the shareholders, because inflation was going to spiral. He had lived through it when he was at Kellogg down in South America with really high inflationary prices, and he says that's how you have to deal with inflation, get ahead of it. Now it feels like it's the unwind of that. Like we've gotten to the point where you can't really boost your margins anymore. You're going to have to deal with reality and deal with the idea that inflation is coming down. So you better bring your prices down, or at least slow the roll in terms of these price hikes.
I think you're absolutely right. I mean, the cumulative effect over the last several years has been significant, and consumers have reached a point where they just don't have that incremental spending power. And so producers are going to have to focus on the cost side. I mean, the reason why retailers are pushing back is because, a significant portion of their business model are labor costs, and labor costs have inflated. And in addition to that, they've also raised their technology spends to try to get less labor dependent. And so producers are going to have to do the same thing. They're going to have to focus on efficiency in order to protect margins.
I think some of them have been doing that, but I think they've gotten used to hiking prices and the consumers taking it to a certain extent. Does this signal that the consumer is just not going to take anymore?
It does. It does. And it signals that the intensity level when it comes to operating efficiency has to rise. And so people, I don't think, have really been working as hard at it as they need to. And this is a sign that's going to have to end.
Do you think, as a former CEO, that this is a sign that profit margins are going to come down?
I don't know. I mean, I think for any particular company, it really is about your ability to operate well. And so you can maintain margins, but you've got to work pretty hard to change your operating model. And so people have been talking about digitizing, for example, their processes for a long time. A lot of people made a lot of progress, but it's been pretty incremental when you step back and look at it. And so now you've got to double down on those sorts of things in order to maintain margins.
Clarence Otis, it has been a while, but it's really good to see you, Clarence. Thank you.
Good to see you. Thank you.
Okay. Still to come this morning, market historian Jeremy Siegel, and then Gilead Sciences CEO Daniel O'Day joins us live from the JP Morgan Healthcare Conference. Squawk Box will be right back.
Good morning. Boeing shares are much lower in the pre-market following that accident involving part of an Alaska Airlines fuselage late last week. Boeing almost single-handedly now responsible for the indicated drop in the Dow Jones Industrial Average. Congressional leaders reaching a nearly $1.6 trillion deal on spending, but a government shutdown is still not out of the question. And the first U.S. lunar lander in more than 50 years is on its way to the moon. We'll tell you when it's going to try to land, or land, hopefully. The final hour of Squawk Box begins right now.
Good morning, everybody, and welcome back to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan. Andrew is off today. And on this Monday morning, a little bit of a slow start, at least for the Dow futures. Dow futures indicated down by 137 points because of the weaknesses with Boeing. No, not us. I'm talking about the
It's a little bit of a slow start.
Just Joe and I here.
Yeah,
sorry.
coming back.
It's a Monday. We're trying to wake back up. S&P futures
start.
are indicated flat this morning. The NASDAQ is indicated up at this point by about 16 points. You've got Treasury yields, which rose pretty significantly last week. This morning, the 10-year is well above 4%, 4.04%. The 2-year sitting just below that. It's at 4.389%, or just above that, 4.389%, below what we had seen a little earlier.
Well, Phil LeBeau's got a weird job, Phil. You are on call all the time, and obviously you've been busy since Friday. Investigators trying to figure out what went wrong on Friday. When part of an Alaska Airlines Boeing jet ripped part of the fuselage, ripped away from the plane side. Phil LeBeau joins us now with the very latest. Say, Phil.
Hey, Joe, and what investigators are doing today is they're pursuing a number of different areas. First of all, the data recorders being flown back to Washington. Whether or not analysis is done today might be a little bit too quick, but that's one area that they'll be focused on. They're also going to be analyzing the aircraft itself as it's parked at an airport in Portland, looking at the hole that was that happened after a plug on the 737 MAX 9 was ripped off. There you see some of the investigators looking at it, and the focus will be that fuselage plug. By the way, they have recovered it. It was in suburban Portland. They found it. Somebody said, hey, it landed, near my property. They now have it. They'll analyze that along with the aircraft itself. 171 aircraft grounded. Alaska and United adjusting their flight schedules. They've been doing that all weekend, given the fact that the MAX 9, especially for Alaska, is a decent size of the fleet for that airline. In terms of January flights, this is data from Syria. United has almost 8,000 MAX 9 flights that were scheduled in January. Alaska, a little over 5,000. There you see the number of flights scheduled by foreign carriers. Obviously, this is going to change dramatically. Those MAX 9 flights, they're not going to happen until an agreement has been worked out between Boeing and the FAA, and investigators are confident in terms of what should happen with inspections to determine if the remaining 171 MAX 9s are safe to fly. The MAX 9 is about 2% of Boeing's 737 backlog, so it's not a huge part of the backlog, but as they are increasing their MAX production, this raises a whole host of questions regarding the ability to safely manufacture and to have quality controls in place so that you know that every aircraft being delivered is safe. This was an aircraft that was delivered on November 11th. You should not be having this happen to any aircraft, let alone one that delivered just 3 months ago. Quickly take a look at shares of Alaska. They canceled 170 flights, did that yesterday with regard to their overall schedule, and most of those being related to the MAX 9. And then you have United canceling 60 MAX 9 flights yesterday. It was able to adjust its schedule to a certain extent, as was Alaska. But the longer this goes on, the more this becomes one of those situations where the impact to the bottom line, similar to a bad winter storm, if you will, depending on how long they have to keep those MAX 9s grounded.
Yep. I didn't remember what you told me. Did you hear that first time? It was a brand new plane, delivered in November, brand new plane.
Yep. That's old.
Yeah.
We keep calling it a plug,
and it had
but basically
repressurization
it's a door.
issues.
Right.
Yeah.
Right.
No, Becky, that's incorrect, Becky,
no,
in
but
this
just
regard.
when you say plug,
it is where a
I'm
door would
I
go.
understand. It's where a door would go, but when you say plug and you don't see the video, you think, oh, plug for a bathtub or something. It's the size of a door, the hole that's there.
It is. That's where an emergency door would go if the plane was configured that there were enough seats that they had to have an emergency exit there. Yes, it is. It is basically where a door would go, but it's plugged. It's parked. It's never opened. It's not like a door that could be opened occasionally by the staff.
No, but it's a big gaping hole.
It's not to be opened.
Phil,
Well,
do you
now
know
it's a
anything
gaping hole.
about?
Yes, on
do you
that
know?
aircraft.
Do you know anything about whether I'd seen something? I don't know if it's true or not. Do you know if there were infants on the laps of anybody in these planes that were unsecured? Because that's what I'd seen some. Again, I don't know if this is true. Have you heard anything about this?
I saw some of those early reports, Becky. I've not been able to confirm that. We're very lucky, that this happened at a relatively low altitude, 16,000 feet, not at 35,000 feet, because if it was at 35,000 feet, you could see that there would be people moving around, going to the bathroom, the flight attendants doing, drink service up and down the aisle. Then you would have a really bad situation on your hand. And we're fortunate that there were not any passengers seated in the two seats directly next to where this piece of the fuselage was ripped off. That would have been a far different situation, I'm sure.
Okay, Phil, thank you. Again, it's kind of the story of the morning that people are digging into. The other story of the morning, top congressional leaders reaching a deal on fiscal 2024 government spending, but the threat of a shutdown is still alive. Emily Wilkins joins us right now with more on this. And Emily, thought that this was very good news, but it sounds like there are a lot of hurdles that still need to be cleared.
Yeah, Becky, we are not out of the woods yet, but there is optimism in D.C. today. I mean, this was a major hurdle that Congress members had to get over, and we did learn yesterday that the leaders agreed on how much they're going to spend in the current fiscal year. The lawmakers are going to be spending $1.66 trillion overall. Mike Johnson was able to negotiate several cuts of some previously allocated funding. That's going to be about $60 billion in COVID emergency funding and an additional $10 billion in cuts for the IRS this year. And Congress's top Democratic leaders, the Senate's Chuck Schumer and Hakeem Jeffries in the House, said in a joint statement that the agreement clears the way for Congress to act over the next few weeks in order to maintain important funding priorities for the American people and avoid a government shutdown. And the Senate's Republican leader, Mitch McConnell, also said he was encouraged by the agreement and called on Congress to act quickly. So all the congressional leaders are really happy with this, but the deal is already facing pushback from hardline conservatives in the House. The House Freedom Caucus called the bill a, quote, total failure, said it doesn't do enough to cut spending. Now, again, while the chances of a partial shutdown on January 20th have decreased now that we have this overall number, Congress still has work to do. The House and the Senate are still going to need to reconcile their spending bills. They're currently funded at different amounts, and they're going to have to negotiate exactly which program gets what. And that is going to take time to sit down, to write all of that out, and to have those negotiations, plus to deal with the politics and see exactly how many members are going to be pushing back against this final proposed deal. Becky?
I mean, we've got these deadlines coming up. Emily, the odds of making it through the first one, the odds of making it through the second one?
I think at this point, the odds have gotten a lot better for both of them because this top line number, this $1.66 trillion, that applies to both the package of bills that needs to be done by January 19th and the package of bills that need to be done by February 2nd. I think particularly a lot of the defense industry, which was facing major cuts if they had to do a year-long continuation of current spending levels, they've got to be feeling much better this morning because this means that it's more likely that they can actually get some of these bills done, not default to those year-long spending, and then not face that 1% across-the-board cut, which is going to translate to billions less for numerous industries and numerous government departments. So I think we still have a ways to go. We don't want to, declare victory too soon, but I definitely think that getting these top line numbers was the next big thing that had to be done. And I think if they did it in time so that they can actually work through and potentially avoid that partial shutdown that would be coming on January 20th.
Emily, thank you. We'll see you later. Right now, though, we want to get back to the markets with major averages coming off their first negative week in the last 10. And joining us right now to talk about why the rally stalled is Jeremy Siegel. He's Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business. Professor Siegel, what do you think is the first week of this year a precursor of what to expect the rest of the year?
No, not necessarily. I mean, remember the huge run-up at the end of last year, a little bit of profit taking. You don't want to take your capital gains in December to pay in 2023, rather take them in 2024. I'm still bullish here. In 2024, I don't think we're going to have the rise that we had in 2023, but I don't think there's as much difference. A lot of people are talking about the difference between Fed funds futures and what the dot plot is. Wall Street has all these calculations from the Fed funds futures, thinking that those are the expectations of the market. Well, we in finance know that actually they are downward biased numbers. In other words, it looks like there are 6 cuts. By the way, as a result of the rise in interest rates, there's now 5.5 cuts built in. But about 1.5 of those cuts is really what's called risk hedging. And that is, you want to buy those contracts. If something terrible happens, geopolitical risk, pandemic, financial collapse, they will go way up. So they offset the risk on other assets. So as a result, people buy them. I estimate that there's really only about 4 cuts that are built in to the Fed funds futures. And we know the dot plot said 3. So really there isn't that much of a difference between the two right now. And secondly, and this is important, it's not so much we need those cuts, it's that Powell said, if there's going to be some slowdown, I'm ready to cut. That willingness to cut is more important than having the cuts. And I think that, we're not going to be as stubborn on the way down as we were in retrospect on the way up. And I think that that's the flexibility. Honestly, I would love the economy to keep on chugging along, and for them, if it chugs along at 5% Fed funds, that's not bad for stocks. So I think I think those two things, if you combine them, not much of a difference, not all that bad about if we don't have cuts in March or May. I think that profits are going to be good in 2024.
That is a very rational approach, because I keep getting the feeling that people think, oh, rate cuts are a great thing that's going to save us. But if the Fed's cutting rates, it means the economy is dropping, and maybe that negates the whole thing. Your idea that it doesn't matter if you get rate cuts or not, because if we don't get rate cuts, it means the economy is really strong. That makes a ton of sense. Why don't more people talk about that?
Well, I think that's one reason why I don't think the market is, it's as worried about it as others about when they will cut. I mean, another thing that is bad is that they don't cut rate because inflation flares up again. I don't see any sign of that. And by the way, I do think they're going to cut rates because I think inflation is really going to slow down. And that's a real positive for the market going forward. So I think that they should actually cut rates, because slowdown of inflation with the same rate does pinch the economy more. That's been brought up by, all of you and Wall Street also. So I think we are going to have rate cuts, but one has to realize big rate cuts might mean a real slowdown and recession. Well, the stock market doesn't want that. So I don't think we should get as hung up about exactly the pace of rate cuts as so many people are in looking at the market in 2024.
In terms of what you expect from maybe just CPI, if you think inflation is not going up, we've got CPI read later this week. If it's hotter than anticipated, will that cause you to change your mind, or do you think you wouldn't look at any one number and read too much into it?
And truthfully, for instance, people were worried about that wage increase that we saw on Friday. And one has to remember, there's a big wedge between wages and inflation. That's called productivity. And productivity has been fantastic. Last year, 2.5%. That was the most in many, many years, excluding the pandemic year. And what that means, if we have 4.1% wages and a 2.5% productivity growth, that's under 2% inflation. So I was not worried about that wage. You're right. We're going to have CPI and PPI at the end of the year. Remember, the Fed and the BLS still doesn't get shelter right. We've talked about that so many times. So you have to take out an awful lot of things. But take a look at the sensitive commodity markets. Oil's gone up a bit because of the Red Sea, but outside of that, we see nothing really going up. And it's those sensitive markets that are early indicators, in my opinion, of inflation. And that's why I remain calm about that.
Professor Siegel, thank you.
Thank you very much.
Coming up, the CEO of drug giant Gilead joins us from the J.P. Morgan Healthcare Conference in San Francisco to talk about the pickup in pharma mergers and acquisitions, also regulation, and the company's most promising treatments. Stay tuned. You're watching Squawk Box on CNBC.
%50 off.
The J.P. Morgan Healthcare Conference kicks off today in San Francisco. Joining us from the West Coast for an exclusive interview, Daniel O'Day, CEO of Gilead Sciences. Company is expecting nearly 24 updates on treatments this year. I don't know how to view. Good to see you, Daniel. It's been a while. I don't know what I should, if in a nutshell, if I were to describe Gilead right now. Can you do that for us? HIV, very, very powerful drugs that you have, huge revenues from your HIV medications. Hepatitis C, basically cured hepatitis C, but I don't think necessarily either one of those two things would define your company effectively right now. It's so much more.
Joe, yeah, pleasure to be here with you. I mean, you said it, 2024 is going to be a very important year for Gilead Sciences. And that's because of the work the team has done to transform the company, to your point, over the past 4 years. You know, we more than doubled the number of medicines in our late-stage portfolio over the past 4 years because of the investment in scientific research. So it's really a new era for Gilead Sciences in that many of these results have the potential to improve lives on a massive scale. It's like nothing we've ever done before. So in 2024, we're going to get results from around 24 clinical trials, of which 5 of those are in the very late stages of development, the step before approval. And those are particularly in the areas of long-acting HIV prevention, which I know we'll talk about, cancer and lung cancer in particular, and then also COVID-19.
And we also, in the back of all investors' minds are patent expirations, et cetera. Tell us about the HIV franchise. That's got to be your biggest drug. Is it Biktarvy or Biktarvy, or how do you say that?
Biktarvy, that's right. It's the #1 prescribed treatment for HIV today, more than 1 million patients treated, and it's made a significant impact on the epidemic of HIV. But what we're also really excited about is the work we're doing on long-acting medicines. Joe, the current medicines, you take a pill once a day, and we're working on less frequent dosing. This year, we're going to have the first ever twice-a-year treatment that could prevent HIV in people at risk of HIV. And this is a medicine that's really remarkable, actually, when you think about it. It's been 16 years in the making by the Gilead scientists, the same ones that developed Biktarvy. And this is really important because at the end of the day, I believe that moving to a twice-a-year HIV prevention medicine could really change the way we prevent HIV across the globe. And really, we're on the cusp of, I think, seeing a seminal difference in the HIV epidemic around the world. Our goal, Joe, and we're not going to rest until we achieve this, is to end the HIV epidemic for everyone, everywhere.
How would that work in terms of who's going to, and we're not talking about developed countries necessarily, we're talking about less developed countries. How would you get that to every single person that needs it around the world? How do you maneuver through those concerns, Dan?
Yeah, so there's, yes, it's for both the developed world and the developing world. So today we have a very effective medicine that prevents HIV, but it's a once daily pill, and only about 1 out of 4 people that could benefit from so-called HIV PrEP are taking it today. You can imagine, Joe, that taking a daily pill for a disease you don't have in either the developed world or the developing world is a difficult thing. Right. Lenacapavir, this twice-a-year medicine, is a simple shot. It's a simple shot that's administered once every 6 months. We, in both the developed and the developing world, this presents all new opportunities to prevent people from ever getting the disease. And of course, if you do 2 things, if you treat people effectively that have the disease, you suppress the virus to a level where they can't transmit it. And then if you prevent those people that could benefit from PrEP, you really can imagine the whole incidence of HIV coming down across the globe. And we have programs in both the developed world and the developing world getting ready for this trial readout this year.
You have the breast cancer drug that might work on other things. How does that, what's the mechanism? What is the potential for, how many solid tumors are you even thinking about testing the drug on? How's it work?
Yeah, Joe, so this is one of these new mechanisms called antibody-drug conjugates, and the medicine is called Trodelvy. It's a leading antibody-drug conjugate. The way it works is it attaches directly to the surface of cells that express a certain protein, and it carries with it a payload, if you like, that kills that cell. So it avoids all the other complications, or many of the other complications associated with just general chemotherapy in a very effective way. Trodelvy currently has been available for 3 years. It's approved in 2 forms of breast cancer and a form of bladder cancer. But because of the nature of Trodelvy, it can be used in many more cancer types. And this year, one of the 5 readouts that we have in very latest stage of development is Trodelvy in lung cancer, which is, as you know, the largest, most frequent form of cancer. And so we're really looking at making advances now, not only in breast and bladder, but lung and other cancers as we move forward.
I just, when we were having you on, I decided that I wanted to look at a Moderna versus Gilead chart, because Gilead was such an incredible performer back in the from 2010 to 2020, and you didn't. Gilead didn't participate much in COVID in the whole pandemic in terms of revenue boosters, did it? So I wanted to look at that just to see how that. It's very strange. Yeah, that's what I thought. That's what I thought we'd see. So, but you almost almost ended up at the same place. For Moderna, made the round trip. And did you have any did you get involved at all with that, Dan?
We did. We actually had the first treatment that was approved for COVID-19 called remdesivir in the hospital setting.
Yeah.
I don't know if you remember, Joe, but we talked about this, gosh, back in 2020. And it really has made a big impact for patients in the pandemic. It's still the standard of care in the hospital setting for patients. More than 60% of patients that enter the hospital with COVID-19 do receive remdesivir. And in fact, we've gone on now to develop an oral version of the medicine called obeldesivir, which is another one of those late-stage trials that's going to read out this year. But we look at our overall business, Joe, from the standpoint of the impact we make on the pandemic with medicines like remdesivir. But we also want to look at what our underlying business is doing, which is the vast majority of our business, of course. And what you see is that our underlying business, because of the transformation that the team has done over the past 4 years, is now growing quarter on quarter for the past 8 quarters consecutively year over year because of that investment in the portfolio, because of the doubling in the portfolio, and not only continuing to play a major role in HIV and the COVID-19, but also in the cancer work we do. Trodelvy, as we spoke about before, we're also the world-leading company in cell therapy, which is one of those novel cancer technologies that actually has the same emphasis on cure that's a hallmark of Gilead, as you mentioned before, with hepatitis C. We're seeing curative potential with our cell therapies in certain forms of blood cancer. So the totality of what the team has put together is really extraordinary, and it builds upon the legacy of Gilead, but allows us to look to make a much bigger impact on patients, for patients in the future.
Yeah, now looking in, I remember all the remdesivir, all the everything about it that happened as we all went through that over a 3-year period. All right, exactly. All right, Daniel, we appreciate it. Thanks for joining us, and good luck. Thanks.
Thanks, Joe.
Okay, still to come this morning, we will speak with a former FAA administrator on next steps for Boeing and the airlines flying the company's 737 MAX 9 after Friday's Alaska Air accident. And later, California Democratic Representative Ro Khanna will join us on his warning to his own party when it comes to AI. Stay tuned. You're watching Squawk Box, and this is CNBC.
member.
Welcome back, everybody. The first lunar lander in more than 50 years is on its way to the moon. That lander is made by Pittsburgh's Astrobotic Technology, and it caught a ride on a new Vulcan rocket from United Launch Alliance. The spacecraft will take a roundabout trip to the moon, and that trip will culminate with an attempted February 23rd landing on the lunar surface. Astrobotic is trying to become the first private business to successfully land on the moon, though another company is about to try and could win that race. Also, some deal news for you. Johnson & Johnson buying drug developer Ambrx for $2 billion to gain access to its portfolio of targeted cancer therapies. J&J will pay $28 a share in cash for every Ambrx shares. In a release, Ambrx's CEO said that the company will continue to work on its drug candidate for prostate cancer, as well as the rest of its pipeline. You can see Ambrx Biopharma nearly doubling in price this morning, up by about 100%. Johnson & Johnson shares off by 57 cents.
Ron Rivera just got fired. Just if you wondered, Washington Commanders, would you hire Belichick, Washington?
Oh, they've had a rough year.
You think Belichick is gone?
I don't know.
Bob Kraft still loves him, I think.
Bob Kraft was here.
Still loves him.
He said he was not going to do anything mid-season. That was what we heard at one point.
Coming up, former FAA Administrator Randy Babbitt. Babbitt joins us on what went wrong when part of an Alaska Airlines Boeing jet ripped away from the fuselage on Friday. The little plug that you don't even know is there. You're in the plane. And we'll get into potential regulatory steps that the government could or should take. Stay tuned. You're watching Squawk Box on CNBC.
Federal officials say that the door plug from an Alaska Airlines flight that suffered an accident on Friday has been found in a backyard near Portland, Oregon. That plug blew out several minutes into a flight on the way to Southern California, opening a hole in the side of the plane, damaging seats and sucking insulation from the walls. Fortunately, no one was seriously injured. Yesterday, the chair of the National Transportation Safety Board said that the Boeing 737 MAX 9 in question had seen 3 warning lights indicating a potential pressurization problem over the last month. It was unclear if that's related to Friday's accident. The FAA ordered most of the MAX 9s in operation grounded, including all of those that are used by Alaska and United Airlines. And joining us right now is former FAA administrator and pilot Randy Babbitt. Randy, we have been speculating an awful lot about what happened, what could be to blame, but obviously you know a lot more about the industry than we do. What are you thinking about what you've seen so far?
Well, thank you. I think the facts are unfolding for us right now. The NTSB is on the site. They certainly will look into and run through a range of potentials. Was it just a simple one-off failure of a part, or was the part, was it an installation problem? Was it a design problem? Those things will have to be uncovered, which, they're quite capable between the FAA and the NTSB of getting to the root of the problem.
Randy, rather than speculate about what caused this, rather than spend the rest of the time talking about that, why don't we talk about how safe commercial air travel is at this point? It's still the safest way to travel, but I think there are concerns because the number of accidents and near misses have risen pretty dramatically over the last several years. In some cases, you're talking about higher levels than we had seen pre-pandemic as well. What's happening? How concerned should we be as consumers?
Well, I mean, let's start with it's the most remarkably safe system in the world. When you think of when there was a serious accident, we haven't had a fatality in more than a decade. At any given moment, there's 7,000 airplanes in the air over this country every day. And I think what you're seeing is there's certainly more focus in the capability, whether it's social media or other vehicles. There's a way of getting any information out. It doesn't matter if somebody's armrest fell off, it would make the news. And so I think we're highlighting a lot of things, but overall, it's a remarkably sound system and safe.
No question. And I start with that preface that this is still the safest way to travel. But if you look at the numbers, in the first 10 months of last year, rates of serious incursions on U.S. runways had jumped to 0.41 from 0.34 in 2022 and just 0.24 in 2019, according to FAA data. Some of the reasons that people are pointing at for this are you're seeing a big increase in commercial traffic. You're seeing fewer numbers of experience, whether it be pilots, whether it be people working on the ground for some of these airlines. A lot of people retired. A lot of people got moved out. You could have problems with the FAA air traffic control because they're having trouble finding experienced people as well. What would you pinpoint for the reason that the near misses seem to be increasing?
Well, we as you well know, we went from a full operating system in the height of COVID down to 20% of the operation. And people made adjustments, whether it was offering early outs, early retirements, things like that. We spun the system down, and spinning it back up puts a lot of new people into new positions in the reporting. I also would be slightly critical. We've been a little slow to adopt some of the technology that's out there today. For example, runway incursions. We have the ability today, you can buy a gadget, put it on your dog, and find out where he is in the yard. We surely should be able to find out where airplanes are on airports. And we have the technology to do it, but it does take an investment.
So when you look at the overall system, what kind of investment do you think it would take, and where do you think that money should be focused?
Well, I think right now we're in the throes of FAA reauthorization and the finances behind that. If you look at the rate of increase of the FAA's budget, it hasn't really increased much in real dollars in the last decade. We also, we have to acknowledge too, a lot of the positions that you're talking about have a somewhat of a long pipeline of training and entry. You don't just hire a controller and 3 weeks later put them in a position. It's years. The same thing with pilots. It takes a number of years to go from a novice pilot to a commercial airline pilot. And all of those, there's a learning curve that goes with every bit of that. The good news is we've got safeguards around that. These incidents get reported, and I'd much rather read about the report why it didn't happen than not get that report and find out that something bad did happen.
Yeah, you and me both. Randy Babbitt, former FAA administrator. Randy, thanks a lot.
Thank you.
When we come back, California Democrat Ro Khanna will join us with his thoughts on how to make sure America benefits broadly from advances in AI. We'll also get his reaction to the fiscal 2024 budget deal reached in Congress. Stay tuned. You're watching Squawk Box, and this is CNBC.
Our next guest making a plea to business and to his own political party to ensure that AI does not leave the middle class behind. Let's bring in Congressman Ro Khanna of California, whose district is in the heart of Silicon Valley. And Congressman, it's good to see you. Before we get to AI, it says here we want to ask you about the emerging spending deal in D.C. And I guess I also want to point out, I think we've missed some filing deadlines if we were going to ever really do anything with Rojo or Joe Roe. It's too late, probably, right? There's a lot of people that wish there were alternatives, Congressman. I think we've missed our chance.
Well, Joe, you didn't make the move. I was waiting for the call. I was waiting to be
That's because you kept wanting me to be on the top of the ticket, and I don't want to work nearly. I want that cushy VP job. I've told you that before. What do you think of this? I mean, I'm not worried. I'm not sure I'm worried about the Democrats for this deal. I'm worried about the flank that Speaker Johnson might not be able to control for this latest deal of $1.6 trillion.
Look, I'm going to support the deal. I've known Speaker Johnson. We came into Congress together. We have strong disagreements on many issues, but he was willing to sit down and compromise. Is there everything in this deal that I agree with? No. Are some of the spending cuts on issues more than I would want? Yes. But in a democracy with 435 people, you compromise and you keep government open and functioning. And I think the big question, as you identified, is the 20 to 30 folks in the Freedom Caucus, are they going to let Johnson do this deal? And are they going to then let him keep his job?
I'm going to just needle you a little bit here. That's what we do, though, isn't it? We have that kind of relationship. In terms of AI, you say that the Democratic Party cannot claim to be the party of the working class if we allow AI to erode the earnings and security of the working class. And my question is, can you really claim to be the party of the working class when you spend so much money that inflation just goes out of control for 3 or 4 years, so that people are actually making, the middle class are actually making less money than they were making 3 or 4 years ago? I don't think you can really claim to be the party of the working class.
Well, look, we've done a lot to bring back manufacturing jobs in this country. We've done a lot to try to reverse the trend of offshoring to China. We put money in people's pockets with the stimulus checks to give people a child tax credit and help them make payments. Now, it's right that we had inflation. I'm not going to deny that. That was both parties over 4 years to get out of COVID. And finally, now real wages are going up. I mean, it wasn't going up for the first couple of years, but I'm not going to deny that people, when they're sitting at in the grocery line, that they've had higher prices, and that was one of the challenges of managing COVID.
I always make that point, sort of tongue-in-cheek, that, you know, the path to hell, we all want to help people, but if the policies that we do with good intentions end up, you know, hurting the people you're trying to help, a lot of times that doesn't get, I don't know, I think that feeling virtuous on the way in sometimes messes us up in terms of really the outcomes. But that's a discussion for a later time. As far as AI, you are right. And if anybody is going to get screwed, it's probably going to be the middle class from AI. Just the same way as you said, from globalization. How can we prevent that?
Well, there are two ways of doing AI, and Eric Bajoffelson at MIT has a great piece on that. Either you could use AI to help people become better workers, to enhance human capability, or you could just use AI to try to eliminate jobs and eliminate payroll. And I think we've got to be very intentional about saying, how are we going to involve employees in getting better credentialing and looking at where they can be trained for new roles and having them have input on how AI is going to make them better, than just saying, let's have AI do your job and not think about it. You know, I like having a conversation with you, Joe. I don't want to come here and have an AI version of Joe ask me to be on their ticket. And the question is, how do we have people like you be enhanced as opposed to replaced?
Yeah, it's a tough one, bro. And when you let something out of the bottle, it's almost like you can't really control. We thought that, you know, gain of function research was a good idea so we could prevent the next pandemic, and you know, we may have ended up causing a pandemic. And technology is very powerful, and if you can't see into the future, sometimes you don't know where the pitfalls really are. Do you have a good grasp of how we need to control AI from here, and what kind of guardrails we need?
Look, I have enough humility to tell you that no one knows fully what the consequences are going to be, but there's going to be a lot of benefit. I mean, people now can get personalized medicine, figure out what's wrong with them, and treatment that really is tailored to their needs. There's going to be a huge boom in production. Education can improve with some of the tools. But there are two places that I would focus on. One, to have guardrails in making sure that these systems are safe and there's always a human decision maker, that we're not just automating and taking out the human decision maker. And secondly, that the employees that are being affected, the workers that are being affected, are being consulted in the design of these tools, that you don't just have Harvard MBAs who you made the decision, oh, let's just have offshoring to China, come in and say, let's just figure out how do we eliminate payroll without thinking about a company's culture, productivity, and using these tools to enhance human initiative.
How do you think that this is going? Is it a slam dunk that income inequality is going to be worsened if AI takes over, bro? Is that, you just assume that's the case?
No, I don't, and that would be really sad for the country, given that income inequality has been increasing. Look, there's certain things that may make it easier. Now you don't have to learn complex coding, complex math to be able to use machines. And so if we introduced basic technology education in all our schools, people actually may be able to acquire new skills and use technology in ways that are far easier and far more accessible than they used to be. But we've got to get that kind of education everywhere. You come to my district and people are very, very, very optimistic about the future. And I guess my question is, why is that just in a few districts in this country? How do we get the education and opportunity more distributed?
Am I going to see you over in Davos? It's got you written all that. It's just your people. Are you going to be there? You're like Davos, man, like Andrew, right?
No, I've never been there. I start my op-ed criticizing what happened in Davos, where they basically told us for 30 years that we were all going to be fine, and then we had to hop out of the manufacturing class, in this country.
God, you're right. You're right. You're right. So that's not.
Don't announce your candidacy in Davos.
No, I'm not going to. What happens in Davos sometimes stays in Davos. So I thought you might be all right. So anything you want me to tell Klaus? Anything from you? Can I? We'll talk to you later. Thank you.
Thank you.
Thank you. Where we'll go? Maybe not.
Yeah.
Globalization it has been tough.
It's really more of your kind of place, though.
Yeah, it's really more of my kind of place. I get the Stockholm syndrome over there.
When we come back, we're going to get you ready for the Monday morning opening bell on Wall Street. The futures this morning, well, they're okay if you're looking at the S&P or the NASDAQ. Flat for the S&P. NASDAQ indicated up by about 17. The Dow futures off by 133. That's because of Boeing shares. You've heard an awful lot about why this morning. Stay tuned. You're watching Squawk Box, and this is CNBC.
It's over a half an hour till the opening bell on Wall Street. Joining us now on the market, Surat Sethi, DCLA portfolio manager and a CNBC contributor. Just overall, Surat, Happy New Year. You think it's too much to ask to get a similar year? Would you sign on to another 2023 if you could right now?
I would love to get another 2023, but I don't think we're going to get that much of an uptick. But I do think the year is going to end positive. Obviously, the last 6 weeks, we've had this huge run over 15%. So I think, the key now is earnings. Where are earnings going to go? How are companies going to actually talk about pricing, margins? I think that's going to be really important. And also balance sheets are going to be important. I mean, one of the things, Joe, we haven't really seen is, where are credit spreads going to end up at the end of the year? And right now they're extremely tight. So credit market is telling you that things are much better than, most people expect.
We sort of took any rate hikes off the table. Maybe they're still off. Maybe the possibility is that inflation's not conquered. What do you think?
I'm in the camp of I think it's going to be higher for longer. If you just look at kind of the fundamentals, where companies are, you still have employment pretty high. Wages are already rebased, so it's pretty hard to take back wage increases. And I think the other thing, Joe, that we haven't really focused that much on, if you look at the commodity, the energy side, especially commodities, we are, when you talk about copper, aluminum, steel, it's not that they have pricing, it's just that we don't have enough supply going forward. And I think that's also going to add to the inflationary pressure. Then you look at supply chain, you look at things about shipping, not just, hey, what's going on overseas on the two wars we have, but look at what's going on in the canal. So I think all that said, the Fed's going to be hard-pressed to get the 6 cuts. I think you'll get a couple at the end of the year. And the markets will have to reprice that, especially for the growthy stocks that are taking into account, 2% again.
Okay, so 2 instead of 6 and back-end loaded. The market might not be set up, but that would be disappointing to the market.
It absolutely would, and you could get a correction, but I think the correction would come from some of the stocks that are priced, way above where the market is. So I would look at healthcare. I would look at, defensives like staples, utilities, commodities. Not to say you don't want to be in the Mag 7. You can, but be diversified, because I think having some of the other areas in your portfolio, growth at reasonable prices, and some of the stocks that just have been out of favor. I mean, you look at life science companies, you look at some of the healthcare, bio companies, nobody wanted to own them last year. So I think those are some good opportunities to be in.
Some people were saying that it's safe to load up on duration and in bonds at this point with at least a portion of your portfolio. Do you ever do that, or you just strictly tell people what stocks to buy, Surat?
No, we have them in our balanced accounts, depending on the client's risk profile. And I would agree, for those clients who need protection and they don't want the volatility, I think you can go out, but I wouldn't go out more than 3 to 5 years. I think you do get paid to go out there, but be very careful as to the credit, because again, as I mentioned earlier, the spreads are still very tight. So if you're going out more than a couple of years, you want to make sure that the companies that you own have good balance sheets and good cash flow, because you can get 5 to 7% going out 3 to 5 years. And if you look at the curve, it's saying it's going to be a lot lower in a couple of years. So yes, I would do that, but I would do that based on your risk profile. If you're a growth investor and you're young, I would say equities are still the way to go. But if you're retired or you need your money, absolutely, there's a lot of opportunity. I think, Joe, that's where some of the money's coming out of the market as well, because investors are seeing, hey, I can get 5-6% on pretty safe companies going out 3 to 5 years.
Okay, Surat, we're going to have to end it there.
Thank you, Joe. Happy New Year.
Yeah, Happy New Year. Won't be long. We'll see you again. Let's check on the final check on the markets. The Dow is still down with Boeing under some pressure. S&P basically flat, and the NASDAQ is actually positive.
Barely.
We got one down for 2024, right?
No, we've got 5 down.
Oh, you already got 5 down.
You're back. We have 4 days left.
I'm behind.
You are.
Make sure you join us. Oh my God, we're late. Squawk on the Streets next.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl King today at Post 9 of the New York Stock Exchange. Kramer's at the JP Morgan Healthcare Conference. In San Francisco, David Faber's back at HQ. Dow futures are being pinched by Boeing and the grounding of those MAX 9s. Very busy week ahead. JP Morgan Healthcare, CPI Thursday, bank earnings Friday, of course. Our roadmap's going to begin, though, with Boeing. Shares are tumbling after the FAA grounds dozens of 737 MAX 9s for urgent safety inspections.
Plus, futures are pointing to another lower open. Stocks already snapping a 9-week winning streak. And we're keeping an eye on shares of Apple, perhaps set to bounce from what would be an 8-week low at the open, Carl.
Guys, let's begin with Jim at the JP Morgan Healthcare Conference. Jim, last week you said M&A would be a running theme in this conference, and we're already getting there.
Yeah, we have J&J buying a company, solid tumor cancer. We have Boston Scientific buying Axonics, $3.7 billion, overactive bladder incontinence. Moderna, by the way, announcing a return to profitability perhaps in 2026. But yes, this is where the deals are made, and this is the most looks like the most active conference in many years. And I think one of the reasons why is because we're post-COVID, and so David, post-COVID means that we are able to do deals in person, and that certainly makes it easier.
And I'm post-COVID too, but I'm not allowed to be in person yet. But I'm glad we're all back together, guys, at least virtually. And, you know, Jim, interesting, of course, we often do see a number of deal announcements prior to the big JP Morgan Healthcare Conference. I'm glad you're there this year and looking forward to your coverage of it as well. And no surprise this morning, perhaps, that we did see a couple of these. Again, deals that are similar in size and scope to what we've seen previously over the last few years, namely big pharma buying companies that are relatively small at high premiums that have just finished usually phase 2 trials of a promising treatment. For example, in the case you mentioned of J&J and that company Ambrx, where they're buying, you know, these targeting antibody drug conjugates that they have that conceivably will allow for the new therapies to be much more effective in attacking things like advanced prostate cancer.
Exactly, and one of the reasons why I find myself out here, and Carl, we watch the tape, we see AMD up today, we see NVIDIA up, we see the usual characters up. I think these companies are radically undervalued versus the hardware companies that suddenly we love, and radically undervalued versus these what we think are AI companies. They're using a lot of AI out here. And Carl, it is incredible that life-saving companies are taking a back seat to companies that enable you to plagiarize, that kind of thing. So I really think that we have to start focusing on healthcare as an undervalued cohort. I can't wait. All the companies that are here are doing things like GLP-1. They're doing things that really are changing people's lives. A lot of it's related to government. And I think we have to start realizing this group got radically undervalued versus tech. And I tell you, the differential has to be changed.
Jim, you mentioned Moderna. In addition to all the M&A threads, product sales, modest beat for last year, but trying to get back to sales growth and maybe break even in 26?
Yeah, look, I think Moderna is still in that the hangover of COVID. A lot of the companies out here are hangover of COVID. I'm going to be speaking to Pfizer, Dr. Borla. They're still trying to figure out how much COVID there is. David, a lot of these companies are reliant on vaccines, and there is definitely a lot of scientific evidence that says if you take the booster, you're going to stay out of the hospital. But only 19% of the people have taken the booster, David, because there's a tremendous, really kind of vaccine ennui. And it doesn't even think that Travis Kelce, Kansas City, is changing that.
No, I took the booster and I got COVID, but it wasn't that severe, thankfully. You didn't get it.
Well,
so I'm happy about
goes,
that.
David. I guess that's
having been together last Tuesday. You know, that said, you look at Pfizer.
I tested every day because of you.
Listen, we've had no shortage of conversation about Pfizer and the challenges that Mr. Borla in particular faces, but you brought it up, Jim. I do wonder, you know, as they've closed the Seagen deal and sort of moved forward from this point with the great windfall that they did have from the COVID vaccines and from Paxlovid, I'm not quite sure what the future holds, though, for that company, and there are a lot of restless shareholders there.
Oh, yes. Oh, yes.
Jim, meantime, let's talk some Boeing, dragging the Dow lower, of course, in the pre-market. The FAA is ordering these temporary groundings of numerous 737 MAX 9s for inspection after a section of an aircraft blew out during an Alaska Airlines flight. NTSB says the missing door plug from that jet was found late yesterday. Jim, we talked a lot about Boeing since the turn of the year. Bespoke says this will be the biggest gap lower, though, since 2020.
Yeah, look, I think, first of all, no one's talking about this. You can blow out a hole in a Boeing, and it still just flies. I mean, I think that that's one of the positives. The negatives are this is a Spirit Air problem with Boeing, and Spirit Air is something that they spun off. They spun it off in 2005. I didn't speak to Phil LeBeau about it, but it's time that they brought it back because the quality control seems to be suspect. Now, David, one thing we have to remember before you sell Boeing is there's only two companies in this business. And I did own, David, Boeing at one time. And that I forgot the fact that in the end, no matter what you do, you need Boeing. The system needs Boeing. They'll solve this problem. So, yes, you can sell it today, but no one's going to downgrade it because we all realize this is an opportunity, not something that we should throw away.
He said no one's going to downgrade it.
In terms of
They'll come back and bite his ass.
As an overall concern, though, Jim, in terms of the execution of the company when it comes to manufacturing?
Well, anything that is its life-threatening obviously is very serious. It's just that I do think that they'll fix the problem. The 737s, this MAX hasn't been out. It hasn't been widely distributed, but it is pretty amazing that you could have ones that were sent out at the end of October and they already have this problem. I do think that there's a taint, David. I think that the street is selling Boeing because people just say, you know what, more numbers have to come down because of this. The airlines, I mean, we had Southwest Airlines and they were complaining about Boeing, and then they still went.
If I had Boeing, I would not have Boeing at these prices. That's number one. I would have been out of it a long time ago. It's overbought. Look at the V on that chart. That's huge. It's had too big of a run. And this is just a small correction of what it was last year at 120. I would wait, give it the 3-day rule, see if it holds this 225.58 support, which I nailed to the penny. If it doesn't hold that, if I was in it. That was only if I was in it. Because it can drop. It can drop to this previous double top, triple top high, which would be a better position. Or it can drop down to the 50 SMA, which it did. And that's the 50 SMA. It can drop to the 200, and that's where I'd probably load up and add on to my position. Or if it didn't hold the 50, I'd get out of it. Well, I don't know. It's not good news by any means, and they're going to have an investigation. The government's going to get involved. They're already involved, or they're already telling them that you need to start hiring black people, which I'm really not a fan. I mean, I don't care what color you are or what race you are or anything, but when you go to single out races, to me, that's racism. And they're too involved in government right now. They've been bailed out, so they're going to do exactly what the government tells them to do. I mean, what about the Asians, and what about the Indians and the Muslims? Why is it just black people? Oh, hell, I had some cinnamon right here. Wonder how bad these are. Still good. If I'd known that, I'd had a bowl of cereal this weekend. But I'm a Martin Luther King kind of guy, so I'm not a I don't know, Malcolm X was okay. But that's so-and-so. Here's LeBeau. Let's see what this idiot's got to say about Boeing.
At Boeing, there will be some board members there, the leadership team from Boeing. They're in Renton, Washington, and they're going to be talking with employees tomorrow about focusing on making sure they build the safest planes possible. One last note, take a look at shares of Spirit. Jim brought this up earlier. I'm at a loss for words in terms of what to say here, Jim. We have talked about this off air, on air, repeatedly. Now, we don't know if Spirit is directly implicated in terms of what caused this accident. But we do know that they made the plug and they make the fuselages for the MAX. So there are questions about whether or not Spirit, what role they may have played in this. And
they sabotaged Boeing.
Spirit down 12%, more than 12%.
You know, Phil, we all remember when Boeing kind of offloaded Spirit. It was one of those things that really kind of raised numbers for Boeing. But you know what? And that was the Wichita plant. You know what, Phil? $3.6 billion company.
Spirit might be good long.
Problems. I wonder, is it just too complicated the way Boeing decided to make these planes by trying to organize all these little companies, including Spirit, which they sold? I mean, it just seems wrong to me.
So that's the issue with the electric car. We're going to find out a lot of stuff about the electric car that they wish they'd never got into this mess.
With ideas like, let's break down companies, let's put them back.
Whatever you do, don't listen to their pump, because this is not good news.
Sense. I think the thing to keep in mind when you look at Boeing and Spirit Aerosystems is they agreed a couple of months ago to pump, I think, $100 million into Spirit
just said
to
pump.
help them out as they try to fix their manufacturing processes. Pat Shanahan is the new CEO at Spirit. He's a longtime former Boeing executive, highly respected in the industry, highly respected at Boeing. The belief from people that I've talked with in the industry is that he will get things straightened out.
We got a head and shoulders
Having
here.
said that, they went a long time where
We got a
they had
neckline right here.
after mistake after mistake in Wichita, and a lot of people feel that perhaps Spirit's board waited way too long to make some changes and to address the situation. That's in the past now, Jim. Nothing you can do about that now. The question is, how quickly can Spirit and Boeing address the situation that's going on right now?
Speaking of that, Phil, I mean, Jim mentions the duopoly defense as people try to defend the stock today. The other is that the inspection itself really only takes a few hours, right?
No, you idiot.
4 to 8 hours. Not very long at all. What's happening right now, just so you understand, Boeing, along with the FAA, are sitting down and saying, okay, what exactly happened and what exactly will we ask the airlines to be looking for when they do these inspections of the MAX 9s that are parked? So it's not as simple as saying, just go out and check them. They want to know exactly what caused this accident and therefore what they are looking for in the MAX 9s that are parked.
Phil, appreciate that. A big story moving the whole market today. We'll get back to you later on. Phil LeBeau. Take a look at the pre-market. You can see the impact on the Dow futures. We'll talk about Boeing a bit more. We'll get to Apple, NVIDIA, of course, the banks coming up on Friday, oil and Tesla, some calls on Chevron, Dash, and others when Squawk on the Street continues on this Monday.
They don't know who I am. I'm Washboardjim. I'm going to wait for 2361, I think, would be a good spot for Spirit, maybe. Now UAL, and I need to be looking at banks today too. I know UAL held support this weekend. I mean, on the dip. So That's 39.51. Yeah, we hit that perfect. So I'm going to set an alert right there off this here bottom here. I'm going to give it a little bit of time before I decide to jump in these, or unless I'm scalping them. We got to let this rest a little bit. If anybody was around when the crashes happened, it was devastating to the market, because back then Boeing was like a key indicator for the market. It's not like this AI stuff that's going on, or, you know, before that it was the auto industry. If the auto industry wasn't doing good, then they more or less figured the market was in a recession, or it could be a good pullback. But if car sales were up at one time, that was the leading indicator. Now it's AI that's not even been developed yet, tech. It's different. It's a lot different now trading. You could just kind of just sit here, okay, well, autos are doing good, the market's doing well.
Apple is moving higher in the pre-market after a nearly 6% decline during the holiday shortened week. Stocks down in each of the first 4 trading days of the year. Hasn't happened since 1982.
Apple,
Jim, today
did a
we
video
got
on.
this Jeffrey's report on China sales, and then there's some lingering expectation that we might get some Vision Pro headlines out of CES this week.
Yeah, it sounds like the pre-orders.
We got a triple top right now.
In 2 weeks, and it's going to be released in Feb 2nd, obviously high price point. I like the Empire Strikes Back here. JP Morgan talking about a floor on the stock. Morgan Stanley once again getting more bullish on Apple's AI opportunity, Edge AI. Look, I think that this stock down is really a reflection of the fact that it was up 48% last year, and I do not want to.
Why in the hell didn't you all say that about all them other breakouts we had? I did.
I'm not buying that at all. Apple, iPhone,
You better buy it, you idiot.
Boeing, still working right after. I would
quit laughing at me.
Focus on that, because 16,000 feet drop and it still works. I mean, I don't know. I mean, do you really want to sell a stock that is able to do that? Not that we would be dropping phones regularly from 16,000 feet, but I do think that there is a sense that maybe Apple's come down too much. And the Vision Pro,
Sitting here for 20 years behind this desk, like I've said, that run that we had last quarter was unprecedented. So any stocks that had a huge breakout by the end of the year were a great short. Until that week's over. Now, Apple, like you said, it's had a beautiful pullback. For investors that are long in this stock, I would almost consider it. But we got to break this triple top. See, we got 1, 2, 3. So you want to find a pivot. This is called a Darvis box. It's just a small one. It's nothing big. So easy way of trying to find a pivot point would be take that right there. Well, and I'll show you an easier way besides that. Take that like that and run that down. Somewhere around 180, 158 would be a good idea maybe to get in this trade. That's a dollar pullback. Now you do have 3 candles here with a tweezer top, so that's when I'm going to set my alert. These are 1 hour time frame, and that's right at 181.91. Then I'm going to take it to the 30 minute, which I'm going to be using the TTM black dot alert system here, and I got the ready set go going too. I don't know why that Moxie doesn't show up. The guy that invented this likes to use the 30-minute time frame for swing trading. I'm going to put it on the 5. This is a good opportunity for people that are stuck in this stock to buy into it, I guarantee, after 5 days of hard selling, and then I did AMC over the weekend, a video on AMC. I'm looking for this to break out of this channel, the 21, and create a little pattern. I got these patterns in mind: a double bottom, inverse head and shoulders, an ascending triangle, even a falling wedge, and a higher low. Breakout, pull back, boom. I think Fat Cats, you got to keep it above $5. The institutional buyers will try to keep it above 5. And I wouldn't doubt it if they all got in the back room and talked about this one. It's way in debt. It's a real risky trade, but it'd be a momentum pump. Then we got NVIDIA still wanting to try to break out. Sophie's held up support so far off the knife. Mara should be up today. Coin. Elon Musk's board is mad at him for doing drugs. I guess he was on Joe Rogan smoking a joint, and then he's had history of doing acid, and he's on some kind of medication prescribed. So I don't know. I think that's, if they felt like that, then they should have fired George Bush and Bill Clinton and Obama. They all were stoners, cocaine addicts, crackheads. Obama was. I don't know if he did acid, but I know he did crack. But that didn't bother them, didn't bother anybody up there, the highest office in the world. I can't wait to see what the market opens up like. More news on Apple. Apple should be a good reversal play today. What else did I do? AMC. Oh, mRNA. And Eli Lilly. Jesus said there's some kind of conference going on this week with BIOS. So they're on watch. I do believe Lilly, the momentum behind Lilly is they're chasing down the fact that this could be good for, besides heart disease and high blood pressure and stroke, besides just being, overweight and obese. And it's true with a lot of drugs. I have epilepsy, so I used to take, they used to give me all kinds of different shit when I was young, but the last medicine I had was for bipolarism. It was like $5 a pill. I don't remember the name of it, but it was subscribed for people that had bipolar, and then they realized it actually helped people that had epilepsy. I had petty mole, grand mole, and now I have juvenile, where I have seizures in my brain every 3 minutes. But they're not noticeable. But if you do a scan on me, you'll see, boom, big wave pattern. So I'd never be able to pass a lie detector's test. In fact, I didn't. One time I lost my state ID or my driver. I think it might have been my state ID. I lost an ID, and this guy named Mark Bowles had found my jacket where I had my ID. I left my Army jacket at a party, and all of a sudden these cops come knocking on where I worked at, FBI and the cops, and they said, we're going to have to bring you down to headquarters here and investigate you for 20 counts of stealing and selling stolen goods. And I said, what? Me? And so they put me on a lie detector's test, and they questioned me for 8 freaking hours. And I said, man, I have nothing to do with this. And I couldn't pass the lie detector's test. Finally, they let me go. That was back in 1979, 80. I never was a thief. The market should be a little bullish into earnings, and they're going to write off this Boeing thing, and the market will still run. There are not too many people in here today. Surprised. Yabba-dabba-doo. Acon has 8 million in volume. Acon, and that's on a scan that I got from in the scanning room. It's got 8 million in volume. What the heck? It's got some kind of news or something here. ATEC strategic partnership agreement with advanced commercialization of Nokiscan partnership agreement. I don't know. Don't seem like news to make a stock pop unless it's a low float. It's popped before, back on the 20th. Granted U.S. patent, so they got a patent for diagnosing painful and non-painful interventional disc, severe low back pain, which I have. We've got resistance on the SPY at 468.83. We've got resistance. Well, that's going to pop. Are we open? Oh, the market's open.
Off, and at the NASDAQ, the Invesco NASDAQ Biotechnology ETF Jim, speaking in news flow, between the healthcare conference you're at, CES, ICR Consumer, CPI Thursday, banks on Friday, some argue this is really the first full news day of the year.
Oh, absolutely. This is an actual series of events that are occurring that I think are define things. I mean, have the banks run too far? We've got some research that says they have. Have the healthcare stocks lagged? Well, I can tell you that they've had these parabolic moves, but there are healthcare companies that are so cheap that they're interesting. And, you know, Carl, the news flow, this kind of Apple don't sell it news research, that, again, is just trying to support Mag 7. And I think Mag 7, I still think is going to be under pressure because people want money to be able to buy these different areas, and there's Mag 7 fatigue. And I think to not acknowledge it is to take a look at Apple and say, listen, we've got two major firms that say buy it, and this is all it can muster. I think you have to be careful. I think patience is warranted when it comes to Mag 7.
Well, we were just talking about Apple and the Vision Pro. Tim Cook with a tweet about 15 minutes ago, Jim. The era of spatial computing has arrived. Vision Pro available in the U.S. on February 2nd.
Well, look, I'm going to get the Vision Pro. I'm going to pre-order it. And the reason I am is because I just think that I like sports. It's an crazy way, just an incredible way to watch sports. I happen to like Apple Plus. I've been watching pretty much everything on Apple Plus. But what I think is really great is this. I mean, you can toggle very easily. I was on an airplane. I was on the front row seat
AMD
where
popping.
You can't have your
We got to pull back on Apple here. Watch Apple off the 200.
But David, I think the problem is, and I do like the Vision Pro. Don't knock me here. But it is something you put over your eyes. So far, that has not been a way that people like to be able to receive information.
No, it hasn't. I mean, God, I can go back to Google Glass. Remember that? When that's a long time ago at this point. And then obviously we think about Meta. I mean, is this a competitive product to what Meta has out there in terms of being able to access the metaverse again with
watching the video?
What are essentially goggles, although they continue to try to downsize them in terms of size and weight and everything else.
We got a tweezer bottom on the 1 minute.
There are two Metas. There's
on
the
Apple.
Quest 3, and then there are the Ray-Bans. And David, the Ray-Bans
We got three white soldiers bleeding out of the gate on the Spy.
Insight. And you know what? They look like Ray-Bans because they are. And I think
got a
you have to
hammer
remember that the problem
on the
with Apple would be,
SPX.
do we really want something that is a little bit heavy? I like it. I like to be able to go back and forth between my research and what I'm watching and be able to communicate with others about watching the same thing, which you can do.
Mara going crazy.
Meta has got, until people try the Ray-Bans, I don't think people realize exactly how cool they are. David, you're cool already. I need the Ray-Bans in order to be able to go to the next level.
If you say so, Jim, that's fine. So, right, it's going to be like Keanu Reeves in The Matrix, right? Didn't he have those Ray-Bans on that sort of, he could see everything and do whatever he needed to do and jump back and forth from the real world to the digital world?
Well, it works, and it's just, all you got to do, David, is say, hey, Meta. I mean, don't say, hey, Siri, because that will be received poorly by Meta.
Yeah, as Buffett says, never talk about father on Mother's Day, Jim. Boeing's obviously the obvious drag on the Dow this morning, Dow down 150. Bespoke did do some nice work, Jim, looking at declines of at least 5%, or at least downside gaps of 5% plus. Stock tends to bounce back over a reasonable time period afterwards.
Oh, absolutely, and I think that, again, if you're one of these companies that has a Boeing
Watch
Max,
Baba here for a scout.
You mentioned how long it takes to check out whether something's
About
wrong.
$1.
Again, there are no alternatives because Boeing and Airbus are sold out for years, and there's just been such tremendous demand.
Yeah, I don't have
The
a
stock
purple.
can be down, of course, as Phil said, because the deliveries, which are what everyone was so hopeful for the Max, have to be slowed. But you know what, Carl, in the end, when the stock settles maybe around 215, 220, you got to buy it because it is a great year for transportation already, and I think that continues.
Although, Jim, Bernstein today, as we mentioned earlier, cutting Southwest to underperform 24. Their point is that the discount airline model is clearly not working. Everybody's going premium. Got an upgrade of American and Morgan Stanley on that same note. I just wonder what you make about the pricing dynamics within the industry separate from the Max.
Well, I think that Phil was talking about what you actually need fewer plays. The thing is that you and I talked to Southwest last week, and they're just making a lot of mistakes right now. I hope they come out of it. But David, I think that when you look at what's going on in travel and you look at what's going on with the airlines, people want to be able to buy new. And you know what the theme, David, this year is newness. We want to buy something new. We're tired of buying Alphabet endlessly. So look at American. Now, I know, David, American is not a market
Jim.
anywhere near Alphabet, but we are percentage gains buyers. We don't care about how big a company is. We want to get 5% gain.
Okay, I've had enough of you. See if Boeing holds support here at 225.58. Its options should be cheap. 230 strike or the 232.50 if you want to take a chance. 240. We got a 1, 2, 3 bits, so it's got to hold here and then bounce back up for a triple top to 235. But I'm going to wait here. Let's see if we get. NVIDIA to launch China Focus AI chip, second quarter of 2024. We got a hammer off this engulfing candle. I'm not sure if China's going to go for it. We're at 502. This could be the time. We're at resistance right a little bit more. And I'm going to short Lilly. Damn it, I was too late. I should have done it. Right there when they pop like that, they're the best one to short right now. Boeing's up a little bit, up $20 on the contract, the 230 strike. I'm not in it. I'll be right back.
Target. Listen, we'll see. I'm sure there'll be a decent amount of conversation yet again, as there should be, most likely, about the broader economy, what they're seeing in terms of loan demand and concerns about commercial real estate, specifically office. Although, again, as we pointed out many times, and the banks are happy to tell you, overall, if you look through as a percentage, it's just, Jim, not necessarily going to add up to something that's going to become a clear and present danger. That said, over time, as we've also pointed out, there are going to be significant losses when it comes specifically to commercial and to office space. And I would reference.
We hit resistance on NVIDIA.
We're talking about levels of vacancy, the likes of.
If this breaks, we'll go a lot higher. We'll go higher. If not, we're going to pull back.
In 1979, well above what 19.3%.
We're definitely at resistance right now.
Office space in this country is currently not leased.
Think about this. I talked about it over the weekend in my videos. And this is something that it's a good perspective on thinking. We had 4 days of hard selling last week. So when these guys come in on Monday, they're excited about that sell-off, and they're going to add to their dip. They're still bullish. especially when something pulls back, when the market pulls back like it did. Not saying to jump in anything, you got to let it kind of consolidate, but we did break out of here now on NVIDIA. And then we got the ETFs coming out on the Bitcoins. And some think it's already priced in, but I don't know about that.
As they might be.
But it's a new week, a new day, a new Monday.
And then the question
It's like a
becomes,
new
what do you do
year.
with a lot of these buildings in these areas where you simply cannot imagine that there is going to be enough economic growth to make up for these other trends, so that they're going to be empty for a very long period of time, and an eyesore, frankly, for many areas as well.
Well, you're absolutely right, David. Carl, I walked for a mile on Mission Street, which was one of the major streets for business.
And the Boeing sell-off,
Front side.
it's up $30 a contract
Almost
now.
every building had a.
We break the 21, we'll move higher. It's expected the 21 for a very long time this morning. So if we break the 21, you could probably take it to 229, but I want it to consolidate.
Come in this hot. So I want to just kind of make people a little more discerning. There are ways to be able to find a bank stock, let's say something you don't like in a bank stock, and that happens after you have a move like 135 to 170, which is what JP Morgan has had since the Fed pivot. And that's really a remarkable run.
Apple's
It's
breaking
the
out.
opposite, by the way, of
This
so
is their
many
big
different
pump.
stocks that when we take a look at, I mean, it's acting like a tech stock. It's not acting like a bank. I like the regional banks more, Carl, because they're still where they were during the banking crisis.
There'll probably be no mention of all the downgrades that Apple had this week. Last week. It's just way oversold. Not oversold, but I mean, where it was. I called 180 support this weekend in my blog. We hit just 4 cents under 180. We hit 380. And PayPal's on watch. Pissed I'm missing the video. You watch that every day, Mike.
Necessarily anything is quite as positive as you might have thought.
Don't chase.
Given the 216,000 job headline.
We'll be right back.
Well, look, I do think that it was kind of a Goldilocks number. It's what the Fed wants. They want to keep employment high, but at the same time, they don't want wages to go up. But I do think, and by the way, Lulu was actually down because people were expecting even better numbers. I think that's asking too much out of Lulu. Carl, look, I just think that when you see Abercrombie, by the way, people don't talk about Abercrombie. Look at that stock. ANF has been by far the best. Secondly, I think that the turnaround in Gap matters. Look at that. They don't have AI that I know of. I mean, does Hollister have AI? I mean, they've got six-packs, but not AIs. I'm not speaking about pure.
You know, the one call this morning, Jim, that made me think of you was this upgrade of Dell over at JP Morgan. They go to overweight on the AI refresh cycle that you were talking about last week in the wake of that Microsoft Copilot button story.
David didn't have a chance to make fun of me for the fact that nobody else bought on this one. I keep thinking that both Dell and Hewlett-Packard, now HP, that Hewlett-Packard should benefit. It's clearly a refresh cycle by AMD up this too, because if you get a button, David, a button for Microsoft Copilot, that's a radical move. Haven't had something new like that since the 90s. Don't you think it's going to have an impact?
I do. And Jim, to your point, you've been talking about it fueling a potential refresh cycle in the PC market for months now. Others seem to have caught on to that AI could actually be a significant add-on, so to speak. I'm not quite sure what it allows you to do. You may have the button, but you're still going to have to pay for the service.
Right, but the button is going to allow you to be able to talk to your PC and make it so that you can make reservations for dinner, cancel things, make a reservation for a plane. Obviously, don't have to type in things. People are tired of a keyboard. I mean, we don't like keyboards. We think it's a relic. You know, David, what is that with the QWERT? I mean, what is that?
I don't even know. I couldn't explain that to you. Although I don't know.
It's the gay button.
I like
Hey,
I'm not,
Meta.
I have not gotten comfortable just talking.
He didn't know, but that's the button for the gay.
Wake up and smell the coffee.
Okay, I'll try. I can smell again and taste, so that's good.
Hopefully it wasn't too bad, David. We did miss you. It's good to have you back. Really quick, actually, Jim, you know, I'm just looking at the NASDAQ, which is clearly outperforming this morning, and it's all about NVIDIA. CrowdStrike's in there, too. I noticed top pick over at RBC
Oh,
today.
yeah, Workday. I was going to see Workday pull back.
People don't want tech to go away. They want, look, enterprise software probably has the most IPOs in the queue. Do you really think that people want this thing to disappear? I think that people have to, look, there's money to be made here. And also I think that Apple has just been such a source of discussion that people just have to have that stock go higher in order to make it so the Mag 7 rallies. I would point out that Microsoft is the one that is the biggest beneficiary of the obviously Copilot's working. CrowdStrike endlessly raising them. Do you know they've never missed a number since they came public? I mean, incredible. I would lump in Palo Alto, PANW, because they are the competitor to CrowdStrike, and they are doing incredibly well. And Nikesh Arora. Hey, David, Nikesh Arora is a billionaire. I mean, how about that?
Oh, that's great. I was worried about him. You know, it's funny. I was saying prayers every night. So I'm really glad to hear that. Yeah.
David, are billionaires allowed to do anything they want and criticize anybody and say anything they want? Is that what happens when you're a billionaire? You can basically have impunity.
You get to a level of expertise.
Panthers, we got some.
Once you become a billionaire, you get to a level of expertise on all things. You didn't know that, Jim? You know everything. It just suddenly it happens.
Well, I know.
Not at 999 million, but at $1 billion, you are expert in all areas, and so you can opine about anything.
You can throw cups. You can throw cups. You can challenge MIT. MIT was a great university, but you can just throw them under the bus too if you're a billionaire.
He's a billionaire. He must know what he's talking about.
Sure.
Guys, on that note, a quick reminder, you can always get in on the CNBC Investing Club with Jim. Sign up and find out more at cnbc.com.
Oil's the one, energy.
Use the QR code on your screen. It takes you right there. As we go to break, let's watch bonds. 10-year back to 402, coming down over the course of the morning. We're going to get Bostic this afternoon, and some more Fed speak this week.
Amazon's
tomorrow,
up.
Williams Wednesday,
Google.
Kashkari Friday. I'll be right back.
No, it's Boeing. Boeing's back down to support. I'm trying to figure out what kind of pattern we're going to have here. Man, I'm just so pleased I nailed that support to the penny. And I charted this up yesterday. I think I'm going to give it a shot here. I had it at 415 there. What's that other one? SPR. Dang it, Lily would have been a good one. I mean, I want to short this every time it pops because it's way overpriced. And it's one of the biggest pumps out there. Okay, Apple's pulled back. Oh, there we go. January the 12th. Man, this thing's cheap. Look at the 185 strike on Apple. For this week. Still too much. It is at support. I'm gonna wait. I gotta get a better price.
Boeing and oil are the major drags on the market this morning. Dow's down 150, but the S&P up about 13. Take a look at some gainers here this morning. You got this consumer discretionary, technology, travel, all working. American, Nvidia, AMD, and Delta all in the top 10 this morning. We'll get stock trading with Jim after a short break.
I'll get just one of Boeing. The 230 strike on Boeing. I just got a what? So Boeing went to 512. Now this is the big breakout that we've been waiting for months. And this is their big daddy. So the previous, right here would be their support level, the previous high. And we'll wait for the pullback. Now if we start to build support above the 500, the 498, 500, and we start respecting that number, we could probably swing this $25 at least. Now they're picking on, in a laughing matter, they were picking on acid head Elon. It's had a good 5-day sell-off plus. Definitely right at my support level. Spy's got a hammer off the 50 here on the 1 minute. Damn it, I missed it. Look at that. Just popped just now. Can you believe that? I was getting ready to trade this sucker.
50% off.
Oh, really?
It's time for Jim and Stop Trading.
Yeah, I like Constellation Brands here. It's a name that my child trust owns. But I had Bill Newlands, the CEO, on Friday, and it looks like the beer, which these guys are Modelo and Corona, not affected so far by the GLP-1s. I mention this because I am in GLP-1 headquarters, the JP Morgan conference. I think everybody feels like they have to have a piece of this anti-obesity, anti-diabetes market, and we try to figure out who is hurt by it. Carl, so far not beer.
Yeah, well, we talked on Friday about your view that there might need to be some portfolio management at Constellation, right, between spirits and beer.
Yes, absolutely. I think that the spirits, what you call them, the clears and the browns, talking about the bourbons, the gins, the vodkas, doing badly. The middle of wine, the wine that is not expensive, doing absolutely horribly. Constellation.
We got 3 black crows on Bank of America right now.
Company, the stock would be much
This looks.
Jim, we've been showing the graphic of the companies that
Now,
are going to be
Jim
joining you over the
did
next couple
say
of
that the
days, but
banks
just
were a
to
little
raise the curtain on
overpriced,
what the
and
next
I believe they are too, especially J.P. Morgan. That's the number one. That's the one I called down at the bottom. But some of these banks, if you get a small pullback, I think it'd be grand. I mean, this is, we called this one out at $26 and it run to 34. Boeing here. I'll go get my coffee. I'll be right back. I'd say Apple's the one that's going to be talked about a lot because that, like Jim said, that's their baby. We had broke out of the 1, 2, 3. Yeah, the orders are coming in. You can get probably a pretty good trade on Apple today. I'm going to give you a hard resistance to break. It's going to be the yin yang right around 185. $185.50. I think we'll get there. Anybody go back and watch my video this weekend on Apple? $182.84. I'm gonna try to scalp this baby, or day trade it. Probably day trade it if I can get a good enough price. One thing I've learned about trading is, and especially in retail traders, and even with these imbeciles here on CNBC, and any kind of hedge funds manager or anybody that trades stocks is, and this is one thing that I appreciate with Mike and Randy, is many traders have a very short attention span, and they forget what and they don't pay attention. They don't string along like a good stock. You know, they keep it on their watch list. And that's why I always boast about the 20-day. I mean, keeping a good watch list going. And always go over your stocks. You know, same ones over and over and over and over again. And when you get a pullback on something that you like a Boeing or a Mara. See, Mara's in the red. So we just had a knife here. A little bit ago, Mara was flying. So let's look at Mara. And I'm in this Apple. Watch Mara. Mara's got a head and shoulders right here. You see it? See if it doesn't bounce and reverse right here. 2277. So watch your Mara call. And I was going to get Boeing there, but I'm going to get Mara instead. I got Apple. I'm really excited here on Apple right now. I think Apple's your safest bet. Traders forget about trades, like something had a huge breakout and they get their trade in and they're done with it. Penny pinchers are very vulnerable in that. I mean, penny players. But if you keep an eye on your watch list and not try to overdo it, like here we are, you know, I did a real good video this weekend on Apple. And I nailed it within 4 cents. And I'll show you why I like that 180 here in a bit. This is the only trade I need to take today, and I'm done. I mean, I can get out of here and leave. That's why I like this one trade at a time. Sweet Jesus. Oh, Elvis's birthday? I might have to sing an Elvis song. I sung one and recorded it on YouTube when I had COVID. Yeah, Mike, thanks for that update on the downgrade. I picked that up on Friday, the 6th. And this company brings I've downgraded PLTR for 2 years. I made fun of anybody that wanted to trade it. But I'm to the point now where I think it could be in a good turnaround position. We did hit my solid support here. So PLTR has to break this yin yang resistance level right there to the penny. I didn't look at this, I looked at this. Could have brought it up just a little bit, just a few cents higher, 1 cent. See, we had support, resistance. So this thing pulls back. Now we hit the resistance, it pulled back to the 9, and that's where I'd set my alert. We got a lot of bag holders, rookies that are holding AMC. And if it stays above 5, I think that's the magic number for now. If we go below 5, I'd almost short it. But my opinion is I think fat cats are going to start loading up again. This is BlackRock. He'll tell his yin yangs. So I get some of my enthusiasm on there goes my water, on these people on CNBC. I've listened to them so long. It's been a while. It's been probably 7 years since I've sat there and listened to them for a whole week. Now, healthy is this pullback? How healthy is this pullback? I'll tell you how healthy it is.
News thing that we're at 4% on the 10-year, it implies inflation is no longer, the raging fire we thought it.
Jimmy called a 6 to 9% pullback from the high on the SPX and the SPY last year. And we almost got it.
Mega cap tech up well over 1%. Perhaps some of these names, Nvidia being leading it up over 4.5% right now.
Yeah, exactly, David. I mean, it was an interesting spot to start the year because we were on this one-way trade, this 9-week win streak, where you did have everything work. And I think that what does often happen in January is just mean reversion. So you have, the crowded trades get less crowded. People take profit.
They're going to load up on NVIDIA. This is the big breakout they were looking for.
The small cap outperformance to continue. There's a sense out there that they're rooting for the broadening of the market. They want the banks to keep doing well. I'm not sure that's going to happen in a straight line. So every time the Mag 7 goes down a bit, you had a 10% pullback in Apple, for example. And NVIDIA, much as it's up today, it's done nothing since Labor Day. I mean, this had a massive move, but it was all in the first 8 months of last year. So I do think that at some point, the fact that all those 7 stocks still are the source of a huge percentage of this year's expected earnings growth is not going to go unnoticed.
No, correct.
Appreciate that. I'm Mike Sansoli helping us kick off the hour this morning. Our next guest does expect a step up in volatility and market stress and says that early Fed optimism may be self-defeating longer term. Wells Fargo Securities Head of Equity Strategy, Chris Harvey's with us. S&P target 4625. Joins us this morning. And Chris, it's good to have you back, Chris.
Good to be back.
So, you think that the action so far this year sort of colors your view that last year was a short covering of shorts?
Yeah, toward the end of last year, I think we just exacerbated the trend. You had a ton of short covering. If you look at our short interest portfolio, is up 15% between the Fed meeting and end of the year. That tells you that people were running for the hills, right? That's over. Now we're repricing risk a little bit. You have expectations that the Fed's going to go early and often. I think we need to have earnings come out. We need to bring in expectations for earnings. That'll cause a little bit of volatility. And sentiment, as you know, is really positive at this point in time. So we could get a change in sentiment in the short term.
Is your view that calls for inflation to come down are also exaggerated?
No, inflation is coming down. But I think the Fed doesn't need to
Apple's
move
pulled back
as fast as people expect. Again, we had the jobs numbers on Friday. We have some wage pressure. We still have a strong job market. There's no reason for the Fed to go sooner rather than later. They don't get much out of it. So I think the Fed really needs
If I don't hold this 21, I'm going to
see
stop
how
myself out.
But even those that think that the Fed might not cut as much as the market is anticipating,
Who's this?
acknowledge that with inflation coming down, the Fed is
Oh,
done
God,
hiking,
Sarah.
for instance, and that should be bullish, certainly for companies that have dealt and battled high interest rates.
Is that Snickers she
I think
has?
that's all a fair point. I think what the Fed did is they really capped the rate market, right? So we were trying to figure out what the cost of capital was, right? We had very high. We had
PPI out on Friday.
I don't think we're going to see that again. So really what you've done is you've taken the bottom out, right? You've lifted the bottom at this point in time. That doesn't mean that the high end goes higher. That just means you've taken some risk out of the market. And you're right, that's a positive. How bullish that is, it's to be decided.
Well, you don't think so. You don't think the market's going to go up this year.
Well, no, we really think the market's going to be more flat. What you want to do is you want to trade the market. You want to position in certain sectors. You want some risk off, utilities, healthcare, but you want to barbell that with something more positive, GARPy, which is communication, right? And at the end of the day, don't get married to positions. Really trade around them.
So
That's
what
a
does that
fact.
mean for the
Don't fall in love.
so-called Mag 7? It sounds like maybe you like some of them.
Yeah, we do like some of them. There's a few in that communication space, but really if you're looking for the best risk reward, we think your best risk reward is in mid-cap growth. If you want to buy something, if you want to own something longer term, mid-cap growth is a place we want you to be. Good valuation, good technicals, and longer term self-help. You don't need to rely on the economy for these things to work.
Really quick, just because we got the banks, including Wells, on Friday, where do you think? How do you think they comment on where we are right now?
I think they strike a balance. They say the consumer's okay, but don't get too excited. There's a lot of uncertainty here. We haven't gotten the credit cycle. The credit cycle hasn't hit. A lot of people are mitigating it, and I understand why. But I think they're gonna strike a healthy balance. That there's some good, there's some bad.
We'll see. That's still a few days away. Chris, good to check in with you. Thank you.
Thank you.
Chris Harvey.
As we had to break, here's our roadmap for the rest of the hour. Shares of Boeing are plunging right now after the FAA grounds dozens of certain types of 737 jets over safety concerns. We'll discuss whether this is a short-term issue or a longer-term problem for Boeing and be joined by a Boeing whistleblower with his take.
Plus, Apple CEO Tim Cook is giving new details about the Vision Pro. His comments come as shares hover around 8-week lows, although up today, are close to breaking key support levels. We're going to discuss what is ahead for Apple stock and the company.
And crypto investors holding their breath as the SEC faces a deadline this week to approve or reject the first ever Bitcoin ETF. Talk about what investors need to know ahead of that decision as Squawk on the Street continues after this break.
3 white soldiers on NVIDIA. Let's see here. Support will be the 9. We got a huge gap up on that. If I put this on the daily, the Fibonacci extensions. Can't read that. 512.49. And the next resistance would be 1523. We got a snake breakout, pulled back high or low to the 200 on Boeing. No, I did not take that one either. I should have. I thought about it on that pullback. And I'm still in Apple. Okay, we're at the 200 right now on Boeing, so it should pull back here. I mean, this is a perfect sneak.
Boeing, the biggest loser and drag on the Dow Jones Industrial Average, and one of the biggest laggards in the S&P this morning. The FAA grounding dozens of 737 MAX 9 planes after a piece of the aircraft blew out during an Alaska Airlines flight on
whole
Friday.
door,
Let's get
dummy.
to Phil LeBeau with the latest. Phil.
God.
And Sarah, let me give you an update on where the investigation stands.
piece.
Because the NTSB and the FAA
A
are
whole
both working
frickin'
now to
door.
figure out what happened, but also what airlines who have a MAX 9 should do to inspect those planes. So in terms of the investigation into the Alaska Airlines flight, the focus for the NTSB investigators, it's the plug that was ripped off of the 737 MAX 9 on Friday night on a flight from Portland to Southern California. They have found the plug, by the way, and they are looking at that in addition to what you see here, which is the hole in the side of the airplane. 171 MAX 9s have been grounded. They and United.
They need someone to come in on the outside and not somebody on the inside. I hope they did that. When they say it only inspected takes 2 hours, it's going to take a lot longer than that.
And the deactivated door in question, those are the ones that are grounded. United has 79 MAX 9s, Alaska 65, and then there are 6 other foreign airlines that have 74 MAX 9s. And again, those are grounded until the FAA can determine what is the process for doing an investigation. So you know exactly what you need to check for to see if there are other planes that might have a problem. Quickly take a look at shares of Alaska and United. 343 flight cancellations today. Now these are not all of these are MAX 9 flight cancellations. There's a chunk of them that are directly related to the MAX 9, but there's a ripple effect as well. And there you see the impact, 343 cancellations. Also quickly take a look at shares of Boeing. It is looking at the MAX 9 is just 2% of its 737 backlog. So it's not a huge part of its backlog, but if there are issues in terms of manufacturing 737 MAXs and the ability to ramp up production, well, that's the spillover effect of this investigation. I want to bring in Ed Pearson, a Boeing whistleblower, former Boeing employee, who is the executive director for the Foundation for Aviation Safety. Ed, you testified against Boeing at the hearings for the MAX after they were grounded following 2 crashes in 2019. I'm curious, when you saw the video of this plane flying with a big gaping hole in the side, what was your reaction?
Well, thanks, Phil, for having me on here. Actually, I'd like to say that this was no surprise, unfortunately. I know it's stunning for passengers, but for those of us who've been monitoring what's been going on for a while with the MAX, it really wasn't a surprise, sadly. As we've discussed in the past, the company has struggled mightily with manufacturing, and we've had over 20 production quality defects. It's hard to keep up with all of them. They keep getting reported, and you guys have done reporting on this. So, this is unfortunately has been consistent. We've also had requests for engineering exemptions. After
Here's the
2
snitch.
crashes and 346 people died, and a criminal investigation, everything else, the company is still requesting engineering exemptions for flight safety related systems. So this is very concerning.
You've long had concerns about quality control and manufacturing quality control at Boeing, and you believe this is emblematic of that. What's at the heart of that, do you believe? What is at the heart of that problem, in your opinion?
Well, I think the heart of the problem is clearly there's a rush to produce airplanes. I mean, obviously there's a great demand for airplanes. And inside the factories, there's a phrase they call schedule's king. So even though the company speaks about the quality of their planes and the importance of that, what the employees are hearing on the factory floor is get your jobs done. You know, finish your work, get done as fast as possible, you know, move to the next plane. And that type of rush production, you know, it's shocking, really, if you think about it. All these people have died and $20 billion loss to the company and stuff, like we talked about. And for them to just continue to push, they're opening up a fourth line. This is, you know, we've been watching this very closely. Phil, you know, we've talked about this. Besides the production quality defects, there was, you know, quality control inspections that were removed. And we're talking thousands of quality control inspections removed on individual airplanes. And this, not just the 737 MAX, but other airplanes, the 777, the 67, and 87. And, you know, it's our understanding that the FAA was unaware of these removal of these quality control inspections that have been in place for many, many years. And it wasn't until a couple whistleblowers reported internally, and this is recent, that these quality control inspections were removed. The union has been fighting back to reinstate these inspections, and they've reinstated many of them, but not all of them. And so there's planes that have left these factories with, in some cases, thousands of inspections. I'm talking individual airplanes now that have left the factory without these inspections. And, you know, this is just, you know, I don't even think the airlines know about this. And I don't think that they know that this occurred. And the FAA certainly didn't know until these whistleblowers provided these reports. So it is very,
you know, Ed, we should,
concerning.
Well, I'm going to tell you right now.
Go ahead.
If Boeing was at 35,000, this would have been a catastrophe for Boeing. It would have knifed huge. The fact that nobody died, the elevation, I mean, if this would have happened, and it would have, at 35,000 feet, you would not hear the end of it, and the market would be crashing right now. The fact that there was no life loss, this is, I think, real big news, and it's not going to take 2 hours to figure out what the hell happened here. The government's going to get involved. This is a big deal in my trading profession, I think. I would only scalp it. I would wait. If they were just elevated up a little bit higher, man, it would have been bigger news than them people that lost their life 3 or 4 years ago when they had them crashes. And I would not work for Boeing, for one. If I had an opportunity, I just couldn't. I wouldn't do it. We've had a huge pullback, no, don't take me wrong, and traders are going to try to wiggle out of their positions that they're stuck in. Kramer came out here 3 days ago and said it was a strong buy, and I would have never said that. Not after, look at the run. Look at this run. This is ridiculous. This would have been great when I called it out on here at 120. I did load the boat, but I would have really loaded the boat if I wanted to get a good trade. But not at these levels. It's going to pull back eventually, I think, in this box. It already has. I mean, 215. We're not done yet. I don't want to short it because it's took a tremendous beating right here.
All these improvements, then that's pretty bad. And those millions of miles flown,
you know, they've never prevented a crash, and they provide you zero insight into individual quality of individual airplanes. And in a flight environment, when you have these failures, you know, I'm not saying that necessarily any one particular thing could cause a crash, although some of them are very serious, like stab trim motor failures we've seen. It's a cumulative effect. It's a multiple emergencies that add up, and that's a concern. And so I think the proof is in the pudding. You know, if we were not having all these production quality defects, if we were not having these types of reports that are occurring that people don't know about, and also the production quality, we talked about this before, Phil, they removed production quality inspections. Yes.
I got to wrap it up here, but I got one quick question and a quick answer, if you could, please. What would you like to see happen at the end of this investigation?
At the end of this investigation, I would like the Boeing company to admit that there's a lot of problems that they have yet to admit to. And these problems, there's a lot of them. And this plug blowout is just one example. And there's a lot of other concerning things. So I want them to really do a serious reflection across the board of entire manufacturing and engineering with the MAX. This plane has got problems. And I'm sorry to tell you, Phil, but in my opinion, this plane is a flying lemon.
Oh, God.
All right.
That's going to be tough.
Pearson, we appreciate your commentary, Ed Pearson, the executive director from the Foundation for Aviation Safety. Guys, I'll send it back to you.
Quick question for you, Phil, on the business aspect of all this as Wall Street tries to figure out what the impact is going to be. So one of the notes Bank of America today said, you know, there's a duopoly, and so ultimately it won't end up hurting Boeing sales. Is that the prevailing view, and has that been the case before with some of these quality issues?
Well, at least initially, Sarah, I would say that's the prevailing view. Look, if this investigation were to determine shut down the MAX for months on end, far different story. Nobody's expecting that to be the end of this investigation. Most believe that at some point there will be a determination of doing inspections of the other MAX 9s, and that at this point it does not look like it's a systemic issue. If that's the case, where it's not systemic, you're not going to see Boeing customers move away from the MAX. They're not going to sit there and say, why wouldn't I want to keep the MAX that I have being delivered in 3 months? So yes, that is the prevailing view at this point, Sarah. And there's no indication that this is a larger systemic issue, though you hear criticism from people like Ed Pearson, and it does raise the question about quality controls at Boeing.
Yeah, and a lot of us.
See how he had to come back there and throw that in there?
Hole in a plane flying. Thank you.
The guy gets on TV and says that the 737 MAX is a
Energy
lemon.
is the worst performing sector right now as oil slides to its worst day since back in mid-November.
That's hardcore.
We also have some deals in the healthcare space to tell you about. Much more on the day's biggest movers when Squawk on the Street comes right back. Dow's down 110 because of Boeing. S&P and NASDAQ firmly higher.
SOXL, bullish on NVIDIA, AMD, semiconductor XOXL, had a pretty good strong 5-day pullback. SPY double top. Double top break. I got this little rookie guy pumping AMC. I think he's getting paid by some promoter, because he doesn't talk charts. He just talks, oh, I'm stuck in this. I do believe we're going to do exactly what I said, though. I want to keep it above 5. I've traded these many a times where that $5 means everything to an investor. A lot of investors won't jump into a stock until it breaks 5 or even 10. But this, I mean, listen to this. CEO sends Taylor Swift internal gratitude for AMC. That's the pump. It's not going to be movies anymore because they suck. I can see it 5 years from now. It's going to be like bringing you live concerts at the AMC theaters. And what, they're talking about Beyonce now? I would see neither one of them. I just don't get off on chicks showing their ass up on stage.
Oil prices are down, giving us some gains this morning on news that Saudi Arabia is cutting key crude prices for buyers in all regions for February. Let's go over to Dom Chu. He's got more on what
That don't turn me
this
on.
morning, including energy. Dom.
That's right, David. So those price cuts that you
But
just
I'm a
alluded to
musician, you know.
for
I
both
got,
US
what
benchmark
turns
and
me on is a
international
good
prices
voice.
have now firmly put themselves in negative territory, giving up many of the gains that we saw over the course of the last week to start out the new year. It's having an impact, of course, on the big energy oil names in the sector. You got names like Halliburton, also Schlumberger, Baker Hughes, among some of the downside performers. Exxon and Chevron, by the way, lower as well. Now, analysts at Morgan Stanley...
I don't want to go
downgrading
to
the
a
energy
concert
sector
and watch a
to more of an
stripper.
in-line rating, citing, amongst other things, a softer oil and gas market, and noting that ample supply has made oil prices less sensitive to big geopolitical risks overall, so keep an eye on that sector. Elsewhere, though, we also want to get a check on the flurry of deals in the healthcare sector as well. Boston Scientific acquiring Axonics for $71 a share. That's roughly $3.7 billion in equity value. Shares of Axonics, by the way, you can see they're moving sharply higher, 21%.
AXNX.
Merck is buying cancer
Now that was on
developer
busting
Harpoon
up
Therapeutics for roughly
last week.
$680 million. And then we're going to end on Johnson & Johnson's $2 billion deal to buy Ambrx Pharma, which is another cancer therapy developer. So Ambrx Biopharma, you can see they're up 98% overall. A big deal there. And of course, all those deals come as we await commentary from a number of big pharma and health executives at JP Morgan's big healthcare conference, which is getting underway in San Francisco today. So I'll send things now, Carl, back down to you folks at the New York Stock Exchange.
Dom, appreciate it. Dom Chu. Still ahead, Apple's coming off a rough week, as you know, after multiple downgrades from the street last week. Today, some
Boeing
concerns
just
growing
broke the
over
50
company's China exposure
on the
that
5 minute.
investors need to know. After this break.
PLTR ripping? Yepers.
Welcome back. I'm Bertha Coombs with your CNBC News update. House Republicans on the Judicial Oversight Committee today are recommending the president's son, Hunter Biden, be held in contempt of Congress. They accuse him of defying a subpoena to appear for a closed-door transcribed interview as part of the impeachment inquiry into President Biden. The recommendation needs to go to the full House for a vote before it could potentially be forwarded to the Justice Department.
Well, that guy's a character.
Fears are growing for a wider conflict in the Middle East. Hezbollah says one of its commanders died in a strike in southern Lebanon today. The Iran-backed militant group didn't give any other details about his death, which comes days after a senior Hamas leader was reportedly killed by a drone strike in the Lebanese capital of Beirut. Meanwhile, Secretary of State Antony Blinken met with the United Arab Emirates president today in an effort to keep the conflict from spreading. Now heads to Saudi Arabia to meet with the Crown Prince before traveling to Israel.
That's what got us in this mess.
Well, Apple shares are coming off what are 8-week lows, and it is still trading near its 200-day moving average, despite that move up today. The stock is the worst performing name in the Mag 7 so far this year. Now, that move does come as Apple CEO Tim Cook posts on X saying, quote, "The era of spatial computing has arrived." Apple Vision Pro is available in the U.S. on February the 2nd. Our next guest acknowledges that Apple's had a rough start, but makes the bull case for the stock and says it is time to buy the dip. Amit Daryanani is Evercore ISI's Senior Managing Director. He has an outperform on Apple, price target 220. Amit, a lot of the concerns lately that have sent the stock down seem to be centered on iPhone demand, particularly in China. You say the pessimism is overdone. Why?
Yeah, good morning, everyone, I guess. Listen, I think the pessimism was overdone from our perspective, at least. The weakness seems to be very much centered around China, which I think is extremely well documented at this point. What's perhaps underappreciated is U.S. North America demand is being stable to slightly strong. Other emerging countries like India, for example, have done really well. So there are positives when it comes to iPhone that perhaps are getting overlooked right now. The second part that we keep going back to investors with is the reason Apple stock has done exceptionally well is the consistency of EPS, the consistency of free cash flow, and we think the levers that have enabled that, the gross margin expansion, for example, are perfectly intact as good as 20.
Still trades at what, 28, 29 times earnings for the kind of revenue growth that you're talking about or lack thereof, and even with that recurring revenue coming from services and the margins you just discussed, why does it deserve that kind of a multiple?
It's a very fair question, and what I'll say is I think Apple has, over the last several years, 5, 10 years, become much more of a consumer discretionary product versus a technology hardware product, right? And very simplistically, I think if you...
Sorry, guy, I can't understand a word you're saying. Sounds like you got cotton in your mouth. Oh. They're buying Boeing right now. They might not wait. I'm leery of it. There's a lot of people stuck in this stock, I do know. PLTR has a bull flag right now. Acon's dropped after that big, huge, humongous. I didn't think it was worthy. I traded pennies for a long time. You got to read the news, and the news can lead you into holding the stock or maybe looking for a pullback. You got to define what's the good news and what's the average news, or is this kind of news going to make this stock have momentum? FDA approval is always good. The pumpers like splits and offerings, and I don't trade them. I usually buy puts if it breaks out. But it's all about the news. I'm gonna go make me some better coffee than what I'm drinking right now. I'm drinking stale stuff. Might get me some lunch. See, one thing I liked about Apple is that we touched that 200 here on the daily. I'm going to raise this to the top crow. Now, what did I just call? Oh, Apple. Oh, 200. SOXL.
Welcome back to Squawk on the Street. China's stocks losing nearly $4 trillion in value since 2021 as the country's weight in the MSCI Emerging Markets Index drops to a record low. Our next guest says global investors will continue to reduce their China exposure as part of his 10 big predictions for the new year. Rockefeller International Chairman Ruchir Sharma joins us now. Ruchir, you don't think they're going to try to stimulate their way out of this?
Well, I think they're playing this game, which is a bit of a charade, that they keep telling us that they're growing at 5%. And if they're growing at 5%, then the obvious answer is why stimulate? Why do anything if the economy is really growing at 5%. Now, we as investors know that's not the truth. If you look at the revenues of companies, look at the profits of companies, and the other problems of the property market, you know that the economy is not growing at 5%. But as long as they keep on with this charade that we're growing at 5%, there's no need to really stimulate, right?
Well, I guess the question comes back to their desire to overtake the United States and to become the global reserve currency. And it was always thought that they were just going to do anything they could to get there.
Exactly, but I think that they have a major constraint there, which is that if they try and stimulate just now, they're likely to see a big depreciation in the currency because interest rates in China are way below the interest rates in the United States. So that's one reason also that they're not stimulating, because they do not want to see a sharp depreciation in their currency. They really want to be the world's largest economy in nominal
now watch the
terms.
SPY.
They were on that path where they got to
You got a double top on the SPY.
the size of US GDP. Now for the last couple of years, they've
Could
been
get a
falling
put here.
back, and the exchange rate depreciation has been one factor behind that. So they don't want a weaker exchange rate, even if it's the right policy solution to try and stimulate the economy.
So you're not allocating money toward China. You're not buying there, even though a lot of people think it looks cheap after last year.
Yeah, I mean, it's a very big market. It's still the world's second largest stock market. So there'll be some opportunities that we'll get, but we've typically been halfway China for a long period of time, just because its size is so big. But this whole idea that they're going to stimulate and the market's going to revive itself, I think the problems are much deeper, which is that the Chinese economy faces a lot of headwinds from demographics to debt, and also the fact that Xi Jinping doesn't really believe in a free market economy. He has a much more statist mindset. And so what his incentive is and what he thinks is the right outcome is very different than what investors think. So the entire market today is trading like a state-owned enterprise. The private sector companies are getting derated and their valuations are converging with the state-owned companies. So that's the really big shift in China, which is happening. The whole market is trading like one big state-owned enterprise.
Bashir, great piece in the FT looking at trends for 2024. You talk about China in that piece, and you actually talk a lot about European resilience. And I'm wondering how you square that given their reliance on China trade.
Yeah, I think on Europe, my point is this, which is that they've gone through so many disasters over the last 10, 12 years that it's really the new hopeless continent. That was a derogatory term being used for Africa at one point in time. Today you could use it for Europe, that everyone is very pessimistic on Europe. And my sort of response is that Europe may not shine or do really well, but it could be much more resilient than what people think, just because firstly, the Europeans have saved a lot of their stimulus out of caution compared to, let's say, in America, where a lot of the stimulus has gotten spent by the consumer. Plus, in Europe, a lot of the debt is on floating rate compared to America, where a lot of the debt was taken at fixed rates. So in a way, Europe has already suffered the shock of higher interest rates in a way that America so far hasn't. And also the fact that the energy shock is receding much faster because they had a much bigger energy shock to deal with. So wages in Europe are beginning to grow for the first time in a meaningful way after adjusting for inflation. So those are some tailwinds, I think, in favor of Europe. And it's quite interesting that even if you look at 2023, the average European stock, in fact, did better
SPY's
than the
real
average
tough
American
today.
stock, but it's just that in America, the performance was so flattered by the Magnificent Seven, as we all know by now. So I think even the market is beginning to sense something there. Yeah. Simple point with Europe is deep amount of pessimism. On my list at this time last year, I had a Japanese comeback as one of my top 10 surprises. I think for this year, if I was to pick a surprise, it's like Europe ends up being more resilient, not necessarily a star, but more resilient given how pessimistic expectations are.
Really quickly, you bet on emerging markets. Can they thrive even with China not picking up?
Well, that's what happened last year. Emerging markets outside of China posted a dollar return of 20% on average.
And she's a devil's advocate
Many
today.
markets from Greece to Poland and Eastern Europe, and then we know Brazil, India. Some of these markets, in fact, outperformed the U.S. market too in dollar terms. So the performance of emerging markets is being dragged down by China, but emerging markets outside China have already been quite resilient. So I'd say that even the economies, even the default rates, if you look at it, have been quite low there. So I think that the world is learning to de-risk and decouple from China, as long as China doesn't implode. If China implodes, obviously all bets are off. But if the air keeps coming out of the balloon slowly like it has been, I think other countries in emerging markets can continue to do well, as they did in 2023.
Rashir, thanks. Really good to get to some of your picks and predictions. We got to do a whole nother segment on politics and the year of elections that we have ahead of us. For now, thank you. No, it's huge. I think there's a record number of people in the world that are going to be voting for leaders this year.
Look forward to that segment. Still to come, it is a make or break week for Bitcoin. We're going to tell you why after the break. First, though, a quick check on the biggest gainers on the S&P this morning, as we do see some leisure travel and consumer names that react to some decent guidance. Back after this.
I'm tempting to buy the put right now on SPY, right when my water goes off. The 9th, the 470 strike.
By Buzz today. Welcome back to Squawk on the Street. Crypto investors waiting with bated breath for approval of a Bitcoin ETF. Will it happen? And perhaps will it happen as soon as this week? Kate Rooney, that's the question.
Hey, David, yeah, that is the question. A Bitcoin ETF, it's now widely expected to get the green light this week.
Get
Two
my
sources
soup
close
going,
to the
I'll be right
process now
back.
telling me it's looking like Wednesday, which is also the deadline for Cathie Wood's ARK and 21 shares bid. Then I'm told potential trading would happen Thursday or Friday, but it has been a moving target here on dates. The SEC is expected to approve a handful of applications at once. Those sponsors filing even more paperwork this morning, where we are starting to get a sense of this price war emerging. There are 13 applications out there with different fees. Some are starting at 0 and then rising once the fund hits a certain size. So BlackRock, for example, plans to start at 0.2% and then go to 0.3%. Fidelity at 0.39%. Grayscale looking like the highest here, 1.5%. This one's worth watching, guys. It's looking to convert an already publicly traded Bitcoin trust, GBTC, into an ETF, and known as an uplist. With 27 billion roughly under management, GBTC would become one of the largest commodity-based ETFs if it is approved. The fund used to trade at a steep premium to Bitcoin, but then you've seen it switch, and it's been trading at a pretty steep discount in the past year or so, as much as 45% last year. That has narrowed to about 5%. So if that fund converts into an ETF, the discount
AMD had a good run.
Overnight, starts trading at the price of Bitcoin. Some are taking that as an arbitrage trade, an opportunity there. Crypto prices have shot up in anticipation of this approval. Some are cautious, though, including Kathy Wood, who's among those taking profits, at least when it comes to Coinbase, ahead of any news here this week. Guys, back to you.
Yeah, Kate, Bitcoin itself obviously seems to have been moving up in anticipation of that. If and when it finally does come, as you say, as soon as Wednesday, are there any expectations it's going to further the rise here, or is the news already baked in?
So Fundstrat did a little bit of research on this and looked at some of the historical analogies. You've got the CME futures that launched, and then a futures ETF that already exists. They say there were deep downdrafts after both of those announcements and do expect a bit of volatility and potentially on the downside, but they try to say this time is different. They point to global liquidity conditions at those points when you had strength in the dollar and rising rates, and say that was categorically different. So it's a divisive topic. If it is priced in, you've got a lot of people on Wall Street that say it is a potential buy the rumor, sell the news event, and it has been priced in. You've seen this run up in crypto stocks as well. So one of the big fears out there, although Fundstrat says this time is different, but we will see if and when this does get approved.
All right, we'll see whether Grayscale adjusts that fee structure. Way out of whack conceivably. Kate, thank you. Speaking of, by the way, ARK Invest's Kathy Wood, she's going to be joining halftime today. Not going to want to miss that, 12:30 Eastern. And as for us, well, our live market coverage continues right after this.
Blink. Oh man. Think about Blink. Okay, if we don't hold support here, it's going to be a big drop on SPY. Get an upgrade to a buy from a hold, $7 price target by Needham, Blink. Let some air out of the tire.
Good Monday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen live at Post 9. of the New York Stock Exchange. Today, Boeing shares on pace for their worst day in more than a year after this 737 MAX 9 blowout. We'll talk about the street's reaction this hour.
Then, Lazard's chief market strategist, new role on why the Fed won't cut rates until May. Ron Temple here at Post 9.
Finally, Apple looking to snap a 3-week losing streak. Why the street is saying now may be the time to buy this dip.
Right now, though, in the markets, S&P 500 and NASDAQ both higher, and NASDAQ gaining a little bit of steam, up more than 1% right now. S&P's up 0.5%. Technology is leading, and you are seeing strength in some of the heavyweights, NVIDIA, AMD, HP, Salesforce, Intel. They're all fueling that rise, but a lot of groups are in the green. Consumer discretionary, communication services, staples, utilities, energy under pressure with crude oil prices sliding.
Let's get some breaking news this morning out of the New York Fed. For that, we turn to Steve Leisman. Hey, Steve.
Hey guys, some interesting info out of the New York Fed this morning on inflation expectations. They fell in the month of December for all time frames and fell sharply in some cases. Inflation expectations, in fact, falling below the long run averages for all of these series. That is the 1, 3, and 5. Let's look at the data. The 1-year inflation expectations at 3%, down 0.4. One of the sharpest falls we've seen in this series, which was back 2012. The 3-year down to 2.6%, down 0.4%. And the 5-year even down 0.2 to 2.5%. Take a look at the long run averages. All of these numbers are down below the long run averages.
I got to figure out what I got here.
In some cases, but not all.
I'm going to get out of this trade.
Even the pre-pandemic average. So you can see that this is a definite, from a Fed standpoint.
Oh, this is on that other one.
It's just 1 month's worth of data. It's back to a sense of normalcy of where you would want inflation expectations as a policy maker. The inflation expectations declined for food and rent. They were flat for gas and medical care, but those remain elevated relative to the other prices that are out there. Expected earnings growth declined by 0.2 percentage points to 2.5%. That's the lowest level since April 2021.
Well, I think we can get to the VWAP.
Keeping one's job, however,
I'm going to hold on to this for a second.
With a decline in unemployment expectations and a decline in the probability of the concern about losing your job.
I could get out with a nice
household
profit.
Spending expectations fell 0.2 percentage points to 5%. That's the lowest level since September 21, but it's well above the 3.1% pre-pandemic levels. So some interesting developments here, some sharp declines in inflation expectations, guys.
No, that's something that the markets would like, the bond market, the stock market, the Fed. Steve, so do we really believe that this easing in financial conditions and the continued strength in the labor market and the consumer can continue without keeping inflation flaring back up or sticky?
I actually do. I think Lori Logan is a little bit behind the times in her commentary. I think what's happened is had this tremendous positive supply shock to the economy. And I don't think there's a reason why, if you have increased consumption, you could not have increased supply to go along with it, unless you believe or have a theory that supply chains are permanently clogged or incapable of responding to increased demand. I do see, by the way, a modest increase in the possibility or the probability of a March rate cut. This would be in line with it. One thing I did note, Sarah, when I went to look at this data, the 1-year inflation expectations is very correlated to gas prices. 3-year less so. And the 5-year inflation expectations is almost not correlated at all to gas prices. And so it's really interesting to me to see that go down. And as you know, Sarah, the Fed is much more interested in these longer term terms than they are the short term ones.
Well, there's buying on the back of this, Steve. 10-year yield goes below 4%, back to 3.9 something. Steve, thank you. Steve Leisman.
It's also, I'm sorry, just one more thing, which is it's worth pointing out all of this happened amid really strong economic growth in the third quarter and what looks to be reasonably strong growth, at least at or above potential, for the fourth quarter. So the correlation between inflation and growth really has broken down in this post-pandemic period, which is pointing many people to think it's much more of a supply shock than it is anything to do with the amount of monetary policy restraint.
Yeah, that's the soft land, the immaculate disinflation.
Yep.
Thank you, Steve. Steve Leisman. Based on recent economic data, our next guest stays in that soft landing camp. He expects solid jobs numbers to continue as inflation slows to 2%, and he sees the first rate cut at the May meeting. Joining us now is Lazard Chief Market Strategist Ron Temple. Good to see you, Ron. And you have an interesting perspective because you also see all the activity or lack thereof that's been going on with.
I just have a big issue with this inflation numbers. Like I can't really believe them because nothing of them around. Nothing's dropped in price. Cars are very expensive. Used cars are very expensive. Hamburger. Last week, they dropped the hamburger from 18 to 10, and then I went back in to buy some more this weekend. We're at 20. The same package. It's up 100%. And I told the guy at the meat market, I said, what the hell is going on here, man? This shit was $10 last week. Now you got it marked up to 20? I said, this is nuts. Can we have any consistency, please? So I'm doing without hamburger. Probably eat steak. But I have a weird store up here. They're definitely not the. They got took over by this other company, and ever since then, it's just been nuts.
I'm a little more skeptical of the idea. So the consensus
Used to
for
be price
earnings this year is
cutter.
11% growth for the S&P 500. I believe gold
It's
is
under new ownership.
closer to 5%. So I'm a little more in that 5 to 8% camp on earnings growth, which is still good, considering that we had the sharpest rate hike cycle in 40 years. And so I'm positive, but I think we shouldn't get ahead of ourselves. I think what's exciting, by the way, within the market right now is for the last 2 years, all of the earnings growth in the S&P 500 has been the top 7 stocks. Now it's time for that to broaden out as we move through this next stage of the monetary policy cycle.
So I'm curious what you see in terms of activity at Lazard and how that shapes your view of the economy, because with interest rates stabilizing, shouldn't we see a big pickup in activity?
Merit bounced off that support that I called.
Well, I think generically, when you think about M&A
2277.
activity, historically, there are always a few factors that play into it. It's confidence, as in lack of uncertainty, it's financing conditions, and it's valuation. And so I do think we're setting up for a rebound. And you've seen Lazard and a number of other investment banks talk about green shoots year to date. So I'm encouraged that this is a good environment for corporate activity. And frankly, some of the things we'd all been worried about outside of M&A, like commercial real estate, if the Fed starts cutting rates, that takes some of the pressure off of that part of the economy, takes pressure off of leveraged loan borrowers. So this, again, is lining up to be a pretty positive backdrop.
The headwinds, though, geopolitics, right? Obviously, an election later on this year, ongoing regulatory pressure from U.S. regulators. How hard will it be to punch through some of those things?
Yeah, I think the geopolitics is a new element. We've always had geopolitics, right? You know, we had a whole Cold War for decades, but back then, it was conceptual. You know, you worried about mutual assured destruction. Okay, are you really going to sell your equities because something happened over the weekend that made you nervous? Now, global supply chains are so complicated.
This guy's an idiot.
Customer bases are truly globalized. You can't really ignore it. So I do.
A Cold War is different than a genocide. I mean, give me a break. We've been in Cold War forever.
Optimistic that we're going to work through that through the year. I just think you have to actually have some kind of framework of thinking about different scenarios of what could go wrong and what could go right on geopolitics. And one of the areas of the market I like the most right now is emerging markets. You know, admittedly, I'm structurally negative on the Chinese economy, but I think what's exciting is EM ex-China, where you're seeing the friction between the West and China leading to capital outflows from China. And I think you're going to see a lot of capital inflows in other countries like Mexico, India, and Thailand.
Besides geopolitics, the other big bear case that you hear from the bears, less so maybe right now, is that yield curve inversion. Leading indicators, the leading economic indicators, they spell out recessionary concerns. The fact that, you know, there are long and variable lags to monetary policy that we have not felt yet. There's still a case to be made for that stuff, isn't there?
I mean, the risk isn't totally gone, but I think, you know, people always say when someone says this time is different, it's dangerous words. I think every time is different. And so when I look at what's happening this time, we entered this rate hike cycle after a $5.3 trillion of fiscal stimulus in the United States. It should be no surprise that the consumer has done well. I mean, we all talked about excess savings balances.
And it, what, got us in debt?
Had over $2.25 trillion of excess savings.
$6
when the
trillion.
Fed started raising
I've
rates.
heard more than
So
that.
I do think this time is
in the last
different,
3 years.
and that the households had the dry powder to see their way through higher gas prices, higher rent, higher healthcare costs. And now they're basically getting their confidence back that the Fed has inflation under control.
And getting jobs and wages.
Exactly.
Yeah.
Come on, I'm off the VWAP.
Appreciate it. The perspective, Ron Temple from Lazard.
I'll get out of this trade when we hit the VWAP.
Shares continue to slide
SPY.
after grounding more than 170 planes after that door.
Anybody take the SPY with me?
An Alaska Airlines flight. We'll take a look at some of the reaction from the analyst community today, with the stock on pace for the worst day since October of 22.
Plus, speaking of aerospace, we are live in Cape Canaveral today as the U.S. launches its first moon landing mission in about 5 decades. Of course, our Morgan Brennan is there and has more on what's coming up. Hi, Morgan.
Hi, Sarah. That's right. Speaking of aerospace, speaking of Boeing, the Boeing-Lockheed Martin joint venture United Launch Alliance sending its next-gen powerful rockets to space for the first time on board a new type of spacecraft that is indicative of this commercial space race. After the break, we go to the moon.
I love her. I think I might take profit here. We got a doji. Got a spinning top doji here. $127. Come on, give me 135. If you're in the SPY, I'm looking at exiting. $129, baby. I'm going to trade the SPY every day. At least once. You did? Did you get out? Did you get out, Ricky? Order didn't get filled. To get out? Well, I don't want you to lose on this. We'll see if it doesn't break the 9. This is on 3 minute. And look at the 1 minute. Yeah, the 1 minute looks like it could bounce up.
Possible. We are watching Boeing. If not
Be
for
careful.
Boeing's decline right now, the Dow would actually be positive. Boeing, of course, getting hammered after that panel blew out from an Alaska Airlines flight on Friday, forcing the company and other airlines to ground flights. Our Phil LeBeau here with the latest on the investigation, what we've learned. Phil.
And Sarah, let me bring you up to speed because we've got a number of developments and we think we may have something here in the next few hours in terms of the investigation. First of all, the focus is on the fuselage plug. That is the deactivated door that was pulled off of the 737 MAX-9. Pressurization problems were documented at least 3 times before this flight on Friday night when the blowout occurred. The grounding duration, that remains unclear. Let me give you a sense of what's happening here, because there are 2 things going on separate tracks but related tracks. First, the NTSB is analyzing the flight data.
Make sure you get out.
In addition to analyzing the aircraft, which is parked at this airport in Portland, as well as the fuselage plug that has been recovered. As they look at that separately, the FAA and Boeing are discussing the inspection process that Alaska, United, and 6 other airlines will go through so that they can look at their Dash 9s and say, yes, we believe these planes are safe to return to service. Just to give you some perspective, there's not a lot of Dash 9s out there relative to other commercial airplanes, but there is a substantial number. 218 have been delivered. Of that, the grounding order impacts 171 Dash 9s. Again, the bulk of these are flown by Alaska and United. You've got United with 79 Dash 9s, Alaska 65. 6 other foreign carriers have 74 Dash 9s. Boeing says that CEO Dave Calhoun has arrived out in Washington. He is out in Renton and will be there today and tomorrow. He will hold an employee town hall meeting tomorrow, along with other Boeing leaders. The focus will be on quality control and reinforcing the message that Boeing has to do a better job when it comes to manufacturing aircraft. Finally, take a look at shares.
A better job.
Aerosystems under a lot of pressure.
So it gets me.
It makes the fuselage, also makes the plug, and what role it may have played in this, hard to determine at this point. Once the NTSB finishes its investigation, we'll have a better sense. Guys, back to you.
Hey, Bill, you mentioned earlier this town hall meeting regarding safety at Boeing. What is their message internally right now?
We've got to do a better job. In layman's terms, that's basically what they're saying. And Dave Calhoun believes that Stan Dale and his team are doing a better job. Now, there are critics out there who say, no, that's not the case. I can tell you from discussing with airline executives when we do our quarterly interviews, and we ask them, you know, the aircraft that you're getting.
I don't know about this better job stuff.
You know, they're not. They would love to see them come at a faster rate, but how's the quality? And almost all of them say the same thing. The aircraft that are delivered when they get them from Boeing are ready to go much quicker, and the quality is better than, let's say, 6, 7, 8 years ago. So there has been improvement there, at least anecdotally. That's what I'm hearing from airline executives.
Phil, thanks. Phil LeBeau, obviously a huge story today. For more on what to expect from the stock moving forward, let's check in with Bernstein analyst Doug Barnett. Doug,
they've had 3.5 years to do a better job
than a situation that would.
This gets me. They've took a big bailout during COVID. And they've had 4.5 years, 4 years to do a better job. Then he gets on here and says they got to do a better job. It seemed to me like when they had that 3 black crows right here, this was one heck of a sell-off. I was in the puts. And they were saying back then they got to do a better job. It seemed to me like you would be on top of things right now. They've gone through they got a new CEO, huge liberal. More or less appointed by the federal government. And then we called this double bottom out in September. I was really excited about this double bottom on Boeing. Now we're almost to a double top, and then we had the crash. Real close to it. We had to pull back here for some reason.
However, I don't think you can totally take the responsibility away from Boeing. At the end of the day,
Boeing is delivering this airplane and has responsibility for these issues. And I think you can also, there also, I'm sure, will be work. There were
Ricky, did you get out?
3 issues in terms of pressurization warnings on this airplane prior to this. And so I think there are questions as well. You've got to look at any maintenance work that had been done at Alaska also to identify, is this a one-off issue? Our belief is it's unlikely it's a broader fundamental design issue.
There you go.
I understand what you mean when you say it's a one-off issue, but it's hard not to put it in the broader context, Doug, of the 2 MAX crashes. And I know that was under different management.
I might get back in this sucker here soon.
You said they put all sorts of systems in place, but for investors to wonder if there's still some.
I'm going to show you why I got out of that trade, Rick.
Inside the company, that this is still happening.
Oh, I think you have to ask that question. I mean, this is a serious issue.
I want you to understand
it could
why.
Have been considerably worse. This is an industry where you can't have
Why
failures.
I called it.
Single failures are a big problem. So if this is a one-off manufacturing issue at Spirit, yeah.
I talk about this a lot. I talk about this. It ain't gonna be like this all the time, but when I trade stocks, I look at the time of the day. So I look at the time of the day. You have that morning rush, then right about lunchtime, right about 11 o'clock Eastern, things start to settle down. A lot of times it's time for the fat cats to go out and have their lunch at 11. So they leave their memes in the office and they tell them to kind of calm down a little bit. There's a period between lunch and 12:30, which is 1:30 Eastern time. I would say 1:25. That's when I determine if the market, what's the market going to do next, because they're back from lunch. So you got the pre-market hour, you got the opening bell that runs about 45 minutes, which you can get all the momentum trades out of the way. And then I take a break at 10, which is 11 Eastern time. That's when the market usually kind of slows down in volume. And when the volume slows down, you're going to have a different reaction in the market. And then you got an hour and a half to 2 hours where you kind of do your homework and look for trades, look for stuff that's broke out. So right here at 9:49, I started noticing it's time to go ahead and buy the put, which is right about 10 o'clock my time. That's right, 11 Eastern, the London Exchange closes. That's a good point. Very good point. I didn't really put that two together. I just did it by experience, but yeah, that makes a lot of sense. Huh. Magnificent, you taught me something. I'll give you an A+. But I never really put that two together. You want to? Yeah, it's live on YouTube. You can go back and record it if you like. I'm surprised I didn't put that together. Oh, there's my sweetheart. This girl's a fox. Look how her hair is. Dadgummit. We have only 8 people in here today. What's going on? 10 people are missing. So then you got Power Hour. That's a whole different story. People are getting set up for the next trade. Or the momentum. There she is.
To watch, with your help, we'll see where we get what it looks like come early February. That's our Morgan Brennan today. Big day. Still to come this morning, a new report looking at the surge in activist campaigns. Just this morning, the CEO of Twilio announcing his resignation after some bruising activist battles.
Plus, we're watching Lululemon lower after management said it may come up short of consensus estimates for profit guidance. They raised their revenue estimates for the holiday quarter. Five Below also down after saying the midpoint of Q4 guidance could miss. That CEO will be on Closing Bell Overtime this afternoon, along with the chief exec of Abercrombie at 4 p.m. Eastern.
Lulu, 200, 200, 200. I think this is the 300. The 200 EMA. EMA, SMA. Mama Yay. So AMC's doing exactly like I said it would over in my, did anybody watch my video on AMC? Jimmy said we were going to hit the 50 today. What do you say after that? He drew out these little patterns. So you got the snake. Jimmy said that we had to see a flag. So that's called a symmetrical flag. So we broke up to the 50. Now we got to pull back to this triple top break.
With Tiger Woods. Dom Chu's watching that. Hey, Dom.
He's been a brand ambassador since 1996, Carl, and just over social media. Tiger Woods announced on X, the platform formerly known as Twitter, that the relationship between he and Nike has apparently ended, saying that over 27 years ago, I was fortunate to start a partnership with one of the most iconic brands in the world. The days since have been filled with so many amazing moments and memories. If I started naming them, I could go on forever. He goes on to say, I have had the pleasure of working with along the way. People will ask if there is another chapter. Yes, there will certainly be another chapter. See you in L.A. That's a screen grab of the social media post that Tiger Woods has put up. We have reached out to Nike for an official comment or statement about the relationship with Tiger Woods. We have yet to hear back. We will update you as soon as we do. But again, this is one of the most high-profile relationships in sports and apparel and just history overall for sports and golf, certainly. And Sarah, this is something that I know that you've watched very closely, covering Nike for as long as you have, but this particular deal is going to be interesting for people in the golf world, because since around 2022, in the wake of his accident, his automobile accident that derailed his kind of professional career for a while, he's trying to make a comeback. He's been spotted in FootJoy golf apparel and wear, at least on the shoe side of things, for the last couple of years. FootJoy is a brand that's owned by Acushnet, which is the parent company of Titleist. It's also publicly traded. So a lot of things swirling around, Sarah, with regard to the athletic apparel universe in golf. Nike shares right now, at least towards their session highs. I'll send things back over to you.
Yeah, and I think one reason, Dom, is this has been widely speculated that at the end of 2023 and expected that Tiger would no longer renew after so long. You know, it's a relationship that goes back to Phil Knight, the founder of Nike. He backed Tiger before Tiger was a champion, and Tiger is very important in the Nike sort of evolution and story. Apex Marketing, you know, we go to on some of the brand exposure and what they're worth. They say that Tiger brings more value to the brand than LeBron because
this is something that we really got to emphasize, Jimmy.
Have longer longevity.
Go back and watch that. If you're new to trading, if you're new to my strategy, go back and watch the AMC video I did, because it tells you exactly how to trade the snake and what you need to look for. Once you get out of the snake, you got to look for a flag. In this case, we had the 1, 2, 3. 1, 2, 3. You look at the hour. Let me see what time frame I had that in. I should have pulled up a lot of different flags, bullish flags that you need to look for. So once you break out of that channel, you got to look for a flag. Now that's on a 1 hour. So you pull up the 1 minute, and you got to hold above that $5 to get them institutional buyers interested in buying the dip. If there are, they're probably in it. BlackRock and all these other punks. But when you're trading a flag, the number 3 is the most important number of all. If it don't do it on the 3, then you need to start maybe positioning yourself in a different way. And it makes it so easy. If you just can count to 3, you can trade with me. So at this point, when you hit the triple bottom on the symmetrical flag, you're able to draw the flag out by the 2 resistance levels up here and the 2 down here. So she breaks out and hits the trend line on that 1 hour time frame. This thing right here. Creates the symmetrical flag. 1, 2, 3 would be your entry. You would call that a triple bottom on a trend. Pulls back and holds that triple bottom. So when you get out of you got to look at the candle that's right after that 1 minute and determine if that's a bullish candle or a bearish. This is called a spinning top. This is called a spinning top. This is called dragonfly. This next candle respects that dragonfly. So all that's bullish. right there, you know to take the trade, because that's a spinning top. On the bottom. A spinning top is a candlestick pattern with a short real body that's vertical, centered between the long upper and lower shadows, which is the wick. The candlestick pattern represents indecision about the future direction of the asset. It means that neither buyers or sellers could gain the upper hand. To me, it means that they equaled out, that the buyers and the sellers are even Steven, that there's not no more buyers, or there's no more sellers in the game. They're even Steven. They're breaking even. They're making a decision if they want it to break out or not, or to pull back. On almost every case, they reverse to the upside because the sellers are finished. We come from a downtrend, and then when it spinning top or the doji or the long leg doji or a hammer or anything like that that's bullish will represent, or vice versa. If it's a bearish candle like an inverted hammer or something like that, but you pull up the images and you can always go in here and look. When it's at the top, it's a different story. When it's at the bottom, it's a totally different story. These candles here are what you need to be learning how to use. Spinning top, a shooting star, a hangman, which I call a hammer. I don't know, these things are messed up. Inverted hammer. Spinning top here and a spinning top here. Once it breaks out and you see a spinning top on the top, you could be ready for a reversal to the downside. That means there's indecisiveness of the breakout or the pullback. So I got out of this here SPY put. Why? Because we have a double bottom. If you look at the candle here, we have a double bottom with a spinning top. Now you wouldn't be able to see that on a 5 minute, but you can on a 1 minute. You move it to 5 minutes. It might represent some other candle, like a long leg doji, an inverted hammer. But you had 3 consecutive red candles on the 5 minute. So let me see here what time this was. Yeah, I might have would have sold it right here on the 5 minute. I don't know if I would have sold that. Yeah, I would have, because that's bullish. Because the leg is longer, the shadow is longer than the one on top, which means it's a shooting star to the upside. Got some trend spider alerts. I didn't pay attention to them. Apple. Dadgum. Look at that. I got them at on the 1 hour time frame. SMA 9. Oh, yeah, they were gonna do it anyway. It'd be good if I had it on the right time frame. This is a falling wedge. Trend Spider will point that out to you. I came in here and did different. I called it a snake. And it came back and hit the 9. First thing this morning. That was my alert right there. See that little shadow that goes outside the 9 there? This here is you're in the money, where the most people have the money. Then when I had a confirmation of the 9, I went ahead and set an alert. And they were triggered right there off that 9 when we pulled back and hit it today. So I talk about the 9 a lot. We broke out of the 9, and then she pulled right back to it. Well, I got 2 different numbers. I traded the SPY this morning, but I didn't get that. I didn't trigger it off that alert. What the fuck is that's Apple? Apple got alerted too. Oh, those are Apple. I said SPY? What the heck? I was looking at Apple. Never mind. Damn, Jim, get it right. Apple. If I said Apple. I was wondering what the heck was going on. That was PLTR. That's the wrong one. That was the other day. What was that today? Now, how come I didn't get alerted that one? That was Friday. No, that was today. So we're back up here to a double top on the SPY. The puts are now at 102. If we don't hold the 21, Jimmy jumps in it. Same strike. Now, Ricky, this is called a double top. So when I look at this trade, if we don't hold the 21, which it has here almost all day, 21, 21, 21, 21, 21, 21, 21, 21, we'll buy a put and take it to the 51. Or that's the 100 EMA. Now why I got that on here, I don't know. But there's, oh, because I was watching this other guy trade. The chart guy, I think. Right now, at $1. So what's double top? It's not always like this, but when you're in this time period, a double top is a reversal pattern to the downside. Double top is extremely bearish technical reversal pattern. It forms at the stock, makes 2 consecutive peaks. But this is on a 1 minute time frame, which is different than having it like on a daily or. So you got to be real careful here. Damn it. I was using the Boeing. Shit. What the heck's wrong with me? Okay, I messed up. Or did I? Well, how in the heck did I typed it in on Boeing, but I know I looked at this one. Or did I? What a stupid moron. I'm in it. Might have to re-examine this. This looks better. Because it did do two. I can't believe I did that. Now, when I'm flipping back and forth to charts, sometimes it doesn't do me good. If this breaks this trend line, I'm going to get out of it. I think I deserve a C minus for stupidity. Unless it knifes out real good right here. Then I get an A plus. Hi, James. Fuck. Damn, I forgot. drop. Right now, right now it's kind of like an ascending triangle, so it's a bull flag.
Requiring a change of habits, like intentionally going to a ChatGPT or a Bard. So instead of a chatbot, we could see a Gen AI enabled iPhone and operating system. A Morgan Stanley note this morning says that even more important than Apple's current fundamentals recovering, 2024 will be the year when Apple's, quote, edge AI opportunity comes to fruition and catalyzes a new upgrade cycle, as well as boosting services spend per user. Now, edge is the idea that large language models will be run on devices like smartphones instead of the cloud. And Apple has an
See if we get faked out here, the body's got to get above that.
The framework called MLX, it also utilizes the Apple ecosystem further by allowing developers to build models on Apple's powerful in-house silicon. Now, Apple hasn't overtly marketed the strategy. At times, it has even avoided saying AI altogether, while other mega-cap tech can't say it enough. Now, Cook and the team, they prefer the term machine learning. That is a less flashy, but more technically accurate description. And that might be part of the reason that shares have been hit so hard so early this year. As analysts are warning of weakness in sales of iPhones and Mac computers, there's no AI halo to fall back on versus, say, a Microsoft, which has spent the last year plus making the argument to Wall Street that it is leading the charge in AI. Even if monetization is slow on the pickup, it has that halo. So don't count Apple out as we start this year, guys. It doesn't typically rely on first mover advantage, as we well know. It susses out a market carefully. And another case in point could be the Vision Pro, which is launching in less than a month. And guys, this is another touch point that could form the backbone of its AI ecosystem, which is going to be built a lot differently. Be sure to tune into the Tech Check podcast later today. We're going to break down Apple's under the radar AI status even further there.
All right, good stuff. Thank you. Deirdre Bosa with Tech Check. And Apple is rebounding a bit today. So are the rest of the big tech stocks, and that's helping the overall market. Nasdaq's up more than 1%. S&P higher as well. Dow's being weighed down by Boeing.
Although shaving its losses by quite a bit. We'll see about that. Oil trying to defend 70. Let's get to the judge in the half.
Carl, thanks so much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour, the start of a critical stretch for stocks. As this week brings the CPI, the kickoff for earnings season, the investment committee, of course, debating what all of it means for your money as we move ahead. Joining me for the hour, Joe Terranova, Anastasia Amoroso, Jim Leventhal, Steve Weiss. Check
Apple's moving for me.
A pretty decent day developing in the S&P. Nasdaq's outperforming. Dow dragged by Boeing, as you know, but even it's coming off its worst levels. So the Mag 7 is rallying today. Jim Leventhal, our top story is all about you, because it's all about Boeing. And you have sold Boeing, and you have sold Alaska Air.
Quite a weekend. Let me start by saying how happy I am that there's no loss of life, and I don't say that trivially. I'm going to come back to that in a minute. But fundamentally, there's a problem with Boeing. This news about the door plug that blew out is going to have earnings impact. Here's why. For one, it's going to increase the pace of inspections, the number of inspections of planes that are being produced. That's going to slow down their production rate increases, which is a central part of the thesis for holding the stock. Furthermore, this exacerbates a tenuous relationship with the FAA, which Boeing is relying upon to certify the Dash 7 and Dash 10 models of the 737 MAX. And finally, we were this close, folks, to China getting deliveries and orders of 737 MAXes. You know, maybe that happens. And by the way, I hope all these negative things don't come to pass, all right? I really am hoping these don't come to pass. But it's hard to imagine that China looks at this news and says, yeah, let's take on some more 737 MAXes right now. So fundamentally, that's going to impact the earnings profile going forward. I said I wanted to come back to the lack of loss of life. I can't tell you how grateful I am. But this is not how I want to invest. I don't want to invest waking up in the morning and saying to myself, thank God there were no passengers lost on that plane. It's not an investment I want to have. I'll take the risk that earnings come in poorly for a stock and then a stock goes down and I have to answer to you, the viewers, Scott, you, the judge, my clients and everybody, but I'm not going to take that risk that another accident happens. I want to add a big disclaimer here. I am comfortable flying Boeing planes. I'm comfortable flying any FAA-approved airliner operated and maintained by an FAA-approved airline. That's not what this is about. This is about the numbers that all it takes is one accident for this stock and the conversations that we're having today to be dramatically different.
So we see the intraday chart here is off of the worst levels. So a couple of things come to mind. Is your sort of love.
Okay, Jimmy's in trouble now.
The management team here, which has caused you at times to question the ownership of and the investment. The other is a more hard to gauge thing that happens to every investor from time to time, and that's emotional decision making.
Yes. Like I just did.
The idea of you making sure that this is not a emotional decision that you will come to regret.
Like I just did.
I'll just give you the floor for that because there are two things that I think about.
And certainly I thought about
thinking about looking at the right chart when I'm calling a trade.
It's why I led with the fundamental aspects, the impacts that I think are going to happen here. I'm not going to deny there's an emotional aspect. Okay, I wake up in the morning, I'm about to pay you a big compliment. Okay, Scott, when I wake up in the morning and I know I'm on the show and something's gone wrong with a stock, I think to myself, how are you and I going to interact? You hold my feet, you hold all of our feet to the fire about bad operational results. And I'm comfortable that it makes me a better investor having to face that fire from you. I'm not going to do that with potential safety in airliners. Just not going to do it. That is an emotional decision, but it's backed up by the fundamentals. I will say, and this, I guess, a little bit in my defense, you know, I bought this stock a lot in 2022. I was on the air, so I've got meaningful holdings below $180 a share. I'm comfortable getting out with all of my clients in a nice gain position. So in terms of the emotion, is this something I look back on regret? I'm also buying. Okay, so I'm getting out of Alaska Airlines, where I didn't like that Hawaiian Airlines purchase to begin with, and this just kind of adds to it. I'm buying more Delta Airlines. I'm buying more of the small cap S&P 600.
Dow, why
so
Dow?
I'm taking money out of where I perceive the
Dow's the worst company.
Opportunity is imbalanced to the downside, and I'm putting it into areas where I see better risk-reward opportunities. That's taking the emotion out of it.
Okay, we appreciate your candor on that, obviously. Anastasia, so this move, you know, aside, Jim's small cap buy is interesting. It goes to where this market's kind of been going of late. Now, mega cap's bouncing. We got CPI on Thursday, earnings Friday. We mentioned that. New York Fed inflation expectations today down across the board. That was a big moment. Stocks got a little bit of a bump. Yields got a little bit of a dip. Is this the week that decides the future of the rally, plain and simple?
Yes.
I think it's a really important week, and I think what happened
Jimmy
last
said
week
that
is
3
really
weeks
important
ago.
in terms of setting up a better positive outlook for this week. And what I mean by that, Scott, is that yields have moved higher last week quite a bit, and that was a repricing of growth expectations, maybe a little bit of inflation expectations, and certainly of the path of future Fed policy. But now you look at the 10-year at 405, 408, that's sort of close to where the fair value implied is. So that's good news. The other thing I would say, we came into last week, into the new year, with a very overbought condition when you look at technical indicators. We've corrected some of that across a variety of stocks last week as well. And then to your point about the catalyst for this week, we have a lot that is happening fundamentally. We've got the JP Morgan Healthcare Conference this week. We've got, of course, the CES show, the Consumer Electronics Show in Las Vegas, and that's really going to focus investors' attention, not on the macro, not on the rates, but fundamentally what's happening with innovation in healthcare and technology. So I think a lot of buyers will emerge this week, and you look at some of the stocks, and for example, semiconductors, they've pulled back a lot last week, but we are certainly seeing investors stepping in and buying them.
All right, Weiss, new week, same story. still intact. Don't look at the Dow today because it's skewed obviously dramatically by Boeing, but even it's coming back. Nas is up 1 1/3%. So you got all the mega caps are having a nice little move today.
Yeah, so I think we're okay. I mean, pending what you brought up, which is the inflation number, and pending the heart of earnings season, which again, to me, the number is going to be fine. And then we'll talk about the guidance. Companies tend to be more optimistic than they should. So I think we're okay for now. I still worry about the economy and economic growth going forward. I still don't know now, despite what we see in futures, et cetera, where the market is pinning their hopes on in terms of an easing of the first cut.
Well, by the way, on that, you did have a very modest increase in the probability of a March cut on the New York Fed inflation expectation numbers. Bank of America today suggests that March is still in play. I mean, you know, if you
Apple's looking good. Oh my God!
Inflation front, there's
I'm looking real good on Apple right now.
That the Fed is,
but I'm not looking too good on this one. I just added at 80
rates in a faster clip than we once would have expected.
Yeah, and I think that's why the inflation number is going to be a critical number, because that's either going to buttress that case or it's going to refute it and delay it. Unquestionably, the Fed's going to go 3 times this year, in my view, because the trend of inflation is going to continue to be down. Is that enough for the bulls? I actually think it is. So then we only have to worry about
enough for the bulls.
And then, frankly, we only have to worry about mega cap earnings. So I'm comfortable with those. So I still believe that the market is a mega cap technology market, technology overall. We've seen the semis really broaden. I am worried, however, about, as we saw from FedEx a few weeks ago, I am worried about consumer-driven companies, and I'm worried about very economically sensitive companies, like the Deeres, like the Cats, etc. So that's where, despite the infrastructure spending, which Jimmy appropriately points to continuously, I just don't, I think that's going to be concentrated in a few companies, number one. Number two, it's not going to be dispersed, actually, for a while in terms of the major part of it.
So
you went ahead and took Apple.
Today, RBC goes to 51.50 from 5,000. You've got UBS at 5,000. Bank of America set up for 2024 remains positive. Earnings remain resilient. So, I mean, if earnings remain resilient and you got inflation expectations for all these timeframes going in the right direction, and then these monthly reads, you know, play ball.
It's no longer a double top, I know.
Well, there's nothing about what's happened in the
I'm
first
thinking we're
week
having
that should lead anyone to believe that the prevailing trend.
I'm gonna hold on. I got 80 and a buck,
real quick.
so I'm at 90 cents.
Some news regarding the FAA and Boeing. Phil, what
That's a hammer. That's a bear flag.
Scott,
these are tweezer tops.
Operator message that is basically the guidelines for inspections on those 737 MAX-9s that are grounded around the world, and we're talking about Alaska and United here in the U.S. Well, this message to the airlines in terms of the inspection process has been approved by the FAA. In layman's terms, what does that mean? This is a big step towards those -9 MAXs being inspected and then re-entering service. They're grounded until the inspection process is completed, which, and we're not going to get into all the details of what the inspection includes, but primarily the airlines are going to be looking at those plug doors, which is the door that, or it's not even a door, it flew off on the 737 MAX 9 that was being flown by Alaska Airlines. So what's going to happen now is the airlines will take these guidelines, these rules, do the inspections, and theoretically, it shouldn't be that long before we start to see some of these MAX 9s re-enter service. Do I expect it today? No. Do I expect it in the next couple of days based on this language? Yes.
That's the point that I think I heard you make earlier with Jim, David, and Carl, Phil, is that this happens pretty quickly. This could happen pretty quickly.
Yes. Yes. The inspection process, 4 to 8 hours per plane. And that's the idea at this point. Now, look.
So they're going to look at all the planes?
And they find something wrong with the plug. And therefore, that plane is going to be taken out of service. But if they do the inspection and it meets all of the requirements, then theoretically, this plane is ready to go back into service.
Phil, I appreciate it. Thanks for the update. That's Phil about the latest.
You bet.
And then when they have a plane crash, all hell will break loose.
Forgive me for interrupting you. Just to refresh our memories, we're talking about targets for the S&P being bumped a little bit.
So Jimmy made a major mistake, or at least I think I did. I ended up typing looking at the Boeing chart when I took the SPY trade. I thought I was looking, I know I was looking at the SPY. I had to have been. But somehow I got it mixed up, so I can't remember. But right now we got a tweezer top here. And if I break out of this, I might just go ahead and take my $200 loss. That's on the 5-minute. I might be doing myself a big mistake because I've been trading the 1 minute forever. No, I think I'm okay. Hey, June. Where? This could be like a real nice payday if it works out. Randy once said, "Jim, you're about the luckiest guy I've ever known." This guy's talking about Apple. Everybody was stuck in Apple last week.
Revenue growth is, and by the way, that leads also, let's not forget, to the App Store. So services. So I just don't know why you have to own Apple here at this level.
Yeah, I don't know that today. I kind of agree with what Steven's saying. I don't know today is some form of a referendum specifically on Apple. You know, we keep trying to pretend and play the game that the Mac.
I told you to call me last night. Why didn't you do it? I even did a video for you guys.
Idea that's leading the market higher. It's pulling the rest of the Magnificent Seven up along with it. But statistically, that obviously has a very strong effect overall on the indices itself. So I still look at Apple amongst the Magnificent Seven, and I don't know that you could say Apple is going to be the individual stock that's going to outperform the other Mag 7. And keep in mind, in 23,
they're so full of shit.
It didn't. It actually underperformed the other Mag 7. So there's...
If you listen to these guys before the end of the year, they were saying just the opposite. They said it had to be the one.
Come out with something in 23 to show us what it is. So I don't know. I look at Apple, and to me, out of the Mag 7, it's probably towards the bottom of the list.
Yeah, I think with AI, it's one area where you can't wait and try to pressure the market to come into you, as they tried to do and failed with cable, as they tried to do in other areas. They just can't wait and be last to the party and improve.
That's what I said.
But you don't know what their ultimate plan is. I mean, you're assuming that they're last to
no idea.
the chatbot party, or I don't know. That's how do we know?
We don't know, but the point is that the strategy that's worked is getting in front of that, as we saw with Microsoft. So Microsoft rewrote the playbook. They took a company that was not prime time ready, that some utility, some consumer, attraction because of the uses. And so now that's helped their multiple. and put them out there as a leader. Apple's got to get
different kinds of companies, though.
We've heard in the market, we've read, or I've read in the trade papers, that they're searching for what the solution for AI be. They're searching for the partners, and they haven't found them yet. Ultimately, they will, of course.
I was about ready to give him an F when he said he heard from the market. But when he said he got it from literature, I'm going, okay. But I don't believe in this saying that the market's telling us this and that. I don't believe that one bit. When I'm trading, I can't go with that. I got to have facts.
It's hard to get passionate
Not on
about
these
this.
idiots.
I think the AI solution will come. I think it's kind of obvious to me that Siri is more than a Trojan horse in that regard. I mean, it's in terms of the actual
It's a black
access
dots,
for the consumer to
had a
AI.
little
Siri is
bounce.
right there. You press a side button on your phone, and there it is. So I think they'll get that figured
One
out
black
pretty
dot.
quickly. I'm just not that worried about the multiple compressing, as I said, but I can't get excited. I can't add to it. I'm underweight. I can't get excited.
But I mean,
Was
the stock, you
7.
said, oh, the stock underperformed the mega caps. Well, yes. Okay. So it underperformed dramatically a couple of the
One
names
black
that
dot.
were 200%.
Okay.
It was still up almost 50%. So put dramatically in quotes.
Okay, but you still had the NASDAQ, which was up nearly 40%. I just think that you can't dismiss...
It outperformed the NASDAQ.
Okay, but of the Mag 7, you've already acknowledged that it underperformed. And in terms of revenue growth, it was clearly the one company of the Mag 7 that was most challenged in terms of revenue growth. And I don't think you can dismiss that premise. Look, Scott, I've owned Apple I've owned Apple personally and the index for a very long. I'm a big believer in the company. And you know what? It's probably fair to say that while we don't know what their AI strategy is going to be, because they're Apple, we can be pretty confident that when they present the AI strategy, it's going to be good. It's going to be good. It's going to be effective.
Kind of like the Apple Watch.
To the bottom line. But we still don't know what the AI strategy is. I know what the AI strategy is for other companies like Microsoft. I know what the AI strategy is for Alphabet. It appears as though that's coming around. Well,
you do?
Alphabet at least has presented a little bit more.
Google had a good day
Than Apple has. You have to acknowledge that. You might not believe that what they've presented so far is on strong footing, but at least we have an initial understanding of what the AI concept is.
I feel like they're entirely different kinds of businesses.
2 weeks of selling.
And that was going to be my point. Apple is hardware; it's a consumer product.
Oh man, look!
So I don't know.
135.10.
I sure with Siri.
I mean, it's a hardware and
afford
services company. It's not a
right,
search company.
Right. So and it's not
Oh
a
my
business services
gosh!
company like
It hit it
Microsoft
to the
is,
penny,
and
but it did not
Google
trigger.
Is, Alphabet is. So I don't know how much
'Cause it was pre-market.
AI is going to impact their revenue. That's where it's.
That'd have been a
I'm
good
sure
trade
people
today.
smarter than me are figuring it out. Know where
I'm
it
still
is.
in the
But
SPY.
ask the question to people say, "Oh, they're going to be the leading AI player." I said, "Where? Why? What?" So they'll come up with something, but they've got to go.
Check this out here. I had an alert for 135.10, and the alerts don't go off pre-market. 135.10 to the penny. Google. I should have been watching this morning because I had it on real high alert. Oh, there we go. I'm only down 60 now in SPY. Let's get to the VWAP. Did anybody take this on accident with Bobo? What's the R stand for there, Greenie? I think I'm green. Okay, I'm even. Magnificent. Will you push it off the cliff? Ah, thank you. You just gave me $20. What grade do I want? I want a B if we hit the VWAP. One for not paying close attention. A penalty of a grade. Which would have gave me a C, and then one for sticking with it and adding on. So I'll take a B. Pay attention should be 2 downgrades from an A. You got to pay attention. Well, someone once said to me, "I'm too damn poor to pay attention." Now I'm at 97, so I'm up $140. I got to make a business decision. We had 3 crows. Will tweezer bottom if we just... Oh yeah. If this thing tweezer bottoms on me, I got to get out. This candle here, oh, that's pretty. When you're sweating and your fingers are all wet and you're losing hair, it's time to take profit. You got 1,000 contracts, sir. 200. Somebody's buying in the trade. Someone get out. Anybody got in there, you should have got out with Bobo. My reasons, because we had 3 black crows right here. We could still drop a lot more. Well, the RSI going down, hit the RSI at 30. $34. We could still probably drop some, but we'll see. I got out. When you're in trouble, I can't believe them guys are talking about Apple like that. After the way they talked about it for...
It was 2013, as I recall, and I think
hey, baby.
2017.
What are you doing on TV?
Reject that application along with all the others. Do you believe your application will be approved, and why do you think so?
Can you believe she's 105 years old?
Just give us a sense of where we are.
Sure. Well, we do think the probability is very high that that Bitcoin ETFs will be approved this week. And the reason, as we've been saying, is, the SEC actually, after, denying a number of times, started asking questions, very good questions, very detailed questions, very technical questions. So I think they've asked all the questions they need answered, and I think most of us have probably been a part of that, process.
So let's assume the SEC approves your application. What kind of impact would a Bitcoin ETF have? I mean, we've all noticed this run-up in Bitcoin ever since BlackRock announced their interest from 30,000 to over 40,000. All of this is anticipation of a spot Bitcoin ETF. Could this be a sell on the news event? What happens from here? Let's assume this is approved.
Sure. I think so many people are expecting now a sell on the news that we might not have a sell on the news because, once you hear that enough, that positioning's already taking place. So who knows? It's a very short term. All we know is with our 5-year investment time horizon, we think the flows into this new asset class, especially
Now, ladies, I've been hitting on Kathy for the last year and a half, right? She didn't tell me that she was going to be on TV today when she made my coffee this morning. I might have to give her a telephone call.
Reportedly sold Coinbase stock. This is usually considered a proxy for Bitcoin. So what are your thoughts on Bitcoin now? What kind of, flesh out your ideas a little bit for us.
So on Coinbase, it was up 400% last year, and we as we do normally, and you've seen us trading around Tesla, now trading around Coinbase, a lot of good news. It became the largest stock in our flagship portfolio. In terms of Bitcoin, we think we've got 3 very big.
I won't call her until she's done with her interview, but I'm kind of upset here.
One, it is digital gold, and gold is a $12 trillion asset. I think Bitcoin might be up to 800 billion right now. So we do think there is some substitution taking place. And the institutional flows, if the allocations were as little as 2.5% to 5%, which is where we think they will end up, you'll see 0.5 and then 1%, you'll see a legging in. That could be the biggest reason for a Bitcoin to go up because, we're at 19.5 million Bitcoin outstanding already. 15 million roughly are in long-term hands. They haven't moved their Bitcoin in more than 100.
If John McAfee was still alive, which I think he is, he also got killed in prison. And I think that he was in so much trouble that he might hid, paid them people off. But he would be doing a happy dance right now. I followed John McAfee. I even applied for a job for him, if you know who he is. That's before I knew he was a criminal.
Fund specifically is tracking the movement of the 10-year yield. First off, do you expect that that's the way it's just going to be for the foreseeable future?
I think algorithmic trading has taken us there, high frequency trading. But at some point, we think we've been in very many markets. For example, 2017, when interest rates were moving up, our flagship strategy was up 85%. So,
bullshit. That ain't what you said.
Algorithms have gotten a hold of the market, we think, in the last couple of years, increasingly. But if we are right, interest rates are going to continue down. We think we're moving into a period of deflation, prices actually falling, oil prices today being a good catalyst there. And we think interest rates, if you look at where the long-term treasury ended up 5% in October, and you map that against the ratio of metal prices to gold prices, they had been tracking, the correlation was very tight for the since 2009. And they parted company big time last year, 5%. That ratio would suggest that long-term treasury yields should be down closer to 2%. Now, maybe the truth will be somewhere in between, but we do believe that long rates overshot and that they have and that they are on the way down.
I want to ask you about portfolio management, because I look at so many of your top 10 holdings are up just tremendous amounts over the last 3 months. Really, you know, the rally from the end of October to the end of the year took many of your stocks higher. And I know, you know, the Innovation Fund had its best month, I think, ever in November. But on that note, when you look at a Roku, for example, that's up 31% in a few months, or a UiPath 39, Block 56, Roblox 38, CRISPR 40, et cetera, you get my point. At what point do you look at those and say, I need to trim some of those positions? They've either gotten too large or the gains are just too big.
Double top,
we have
triple
been
top.
trimming most of them. So yes, that's portfolio management. So we do indeed take profits. And if you'll notice, last year, the group that lagged so badly was what we used to call our genomics group, the multiomics group, we now call it. Many people call it biotech. And so you saw us deploying some of those gains into the multiomic space, which is very relevant. JP Morgan conference on this week. We think there's going to be a lot of good news and a lot of catalysts.
Kathy, it's pretty well known, I'm going back to Bitcoin here, that a lot of the institutional, the old wirehouses still don't allow their clients to access Bitcoin. Do you think this spot Bitcoin ETF is going to make a difference? Will
Yes.
institutions become a little more accepting and willing to offer to their clients?
Yes.
Or is there still going to be a significant institutional barrier here? I want to ask
No.
No, actually,
That's a
we
dumb
think
question.
that the SEC approval, should we and
That's
others
a dumb
get it,
question.
is a green light for institutions. We've been talking to quite a few of them, and
But maybe he always knew the answer.
interested now that the SEC effectively is paving the way.
Exactly.
Joe?
Kathy, it's Joe. Real quick, wanted to ask you about the CEO change at Twilio. Does that give you?
This guy tried to pick up on my woman there.
There have been some activist investors involved, so this seems to be the outcome of that. We have believed that the sum of the parts is worth more than the whole. It's I think I checked this morning, it's selling at 2.5 times sales, roughly 15 times EBITDA. And we do believe that it should be one of the prime beneficiaries of the artificial intelligence breakthroughs that we're seeing, because it has so much proprietary data. And so we'll be watching carefully to make sure that they follow through on a lot of the AI promises that they made last year.
That's right, baby.
Kathy, thanks very much. We are going to have much more on the expected approval of a spot Bitcoin ETF coming up on ETF Edge as we launch our 7th season.
Hello, this is Retail Traders. May I help you? Kathy, you did an excellent job on the interview. Man, I'm glad we had biscuits and gravy this morning. And you've done me so well. Yeah? Well, Jim, I forgot to mention your name. Well, that's okay, honey. You did very well. We'll talk later tonight. Is there anything you need? You want me to get you some milk? You need some rice? Or are we going to go out to dinner? Well, I just want to stay home and relax and have a bottle of champagne. Okay. We'll holler at you later.
company in 1990.
Spy's getting ready to break out on Kathy Wood.
Out of golf, so I guess Tiger's moving on. Scott?
All right, Bertha, thank you. It's Bertha Coombs. Up next, we're going to hit today's top stock movers, including Lululemon. That's rebounding from earlier losses today. Big downgrade today for one financial stock. Joe owns it. We'll give you the trades when halftime comes right back.
Man, that's Google breaking out. Double top. Break it. What's this about Kathy Wood on AMC? Is she on AMC? It's another. I bet she does. Anybody on YouTube watch my AMC movie over the weekend? Movie.
Good morning, retail traders. It is Sunday. Today's date is 1/7/2024. Now I'm going to talk about a stock that's been hit by the bears real hard. And there's a lot of people that just are waiting patiently, and a lot of people stuck in this stock as it keeps going down. I'm not here. Cash.
Let's talk about some committee stocks on the move today. We're showing you Lululemon. Interesting intraday move there. So the stock is now positive, but it was down even as it raises its guidance. Kramer earlier today said it's down because people were expecting better numbers.
People are always expecting better numbers. I mean, Jim's right. People are always expecting better numbers from this company.
You guys are.
Have such a high level of expectations for Lulu over the last several years. And you know what? The company delivers. The company continues to execute. They continue to deliver in what has been a challenging environment, and I think today's price action is evidence to that.
Weiss, you sold it back in a year ago.
Yeah, how's that for a well-timed sale? What's the stock like? Doubled since then? Not quite, but look, I keep hoping every quarter they're really going to blow it. I mean, they own the market. You've got Aloe, which is doing
Ultra, dummy.
When they're next to each other, figuratively speaking, in a mall. You see Lulu, there's a line at the register. At Aloe, they're sort of begging people to come in. So I think they've got a fortress brand. And I love the story. I love the clothes. They're too sculpted to athletic bodies, so you won't be able to wear
No, I got them big stuff. Never mind.
But look, I think it's
I'm wrong.
It's a great story. It's just expensive, but it could be like CMG, Chipotle, where it just holds that valuation forever, and I think likely it will.
Joe, what about this Amex call? Downgraded today to underperform, and that's it. Baird. They keep the 190 target. Throw up Amex, please. Well, AXP is isn't especially expensive, they say. we see relatively little upside from here. I believe it should be sold as a source of funds.
Upper teens valuation. I read the note. A lot of the note is predicated on their belief that the macro environment becomes more challenging. If in fact the macro environment does become more challenging, then yes, American Express is going to struggle in that environment. Maybe not to the degree some other companies would, like Discover. But it would struggle in that environment. But the momentum is ridiculously strong for this company. It's been very strong over the last 90 days. It's one of the reasons why, one of the factors that's kept us in the stock since the initial purchase at the end of July.
All right, Jimmy, Citi today mentioned as one of their, quote, underappreciated double winners. And that's by Evercore ISI today. This rating remains in line neutral. You own it.
Yeah, it feels like there's been a lot of analyst upgrades for Citigroup recently, and the stocks were about 33% in 3 months. There's a little bit of a day of reckoning coming this Friday when earnings will come out. And, you know, the memory of Nike is fresh in my mind where that stock was, the upgrades were being piled
It's
on
funny.
and they disappointed. I don't think that's the case here. I think Jane Frazier's expense cost cutting is working. But one thing to keep in mind for Friday is all these concerns about consumer delinquencies, they're going to come home on Citigroup where they've got a very big private label credit card business. Let's see what happens in that business as they report on Friday.
Don't you think that's going to be a buying opportunity, though? If the stock does get hit, if they do miss, that people will focus on the restructure, which will take a few years to play out, and it's still so cheap.
Yeah, I'm sorry, I should say that. I own the shares. I like the shares here because I think at this price, it's already a buying opportunity, and I'm not that worried about the consumer for all the reasons I've listed, mainly that the labor market is quite strong and remains that way.
Your buddy there to your left is like itching to get into this name. I know it. He knows it. He's even said it. So he's watching it closely.
I mean, I'll last thing on this.
I was hoping that was the
right. They buy back a ton of shares. They buy back a ton of shares well below tangible book value.
What are you waiting for, Weiss?
I'm waiting for him to sell.
No, seriously, what are you waiting for?
I'm waiting to get some relief. The stock has been just on a tear over 3 months. Lots of dissatisfied shareholders who owned it for a long time. I thought was that maybe now's the time they just get it off their ledgers. So I don't know. I'll probably step up. I think that
isn't the risk at this point from earnings, right? Jane Frazier's already kind of kitchen sinked it at the beginning. Yeah. Now she's gone through all these moves, so the sentiment is much more favorable.
This would be the last quarter if they miss because of charge-offs. This would be the last quarter of it, in my view. That's not well telegraphed because it is telegraphed the restructuring.
All right, Mike Santoli, he's next with his Midday Word Plus. Anastasia is going to give us her contrarian idea for 2024. We're back after this.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Hey, the videos I did this weekend were excellent. Especially this Boeing and that AMC. And Apple too, all three of them. They're winners today. And then we got this, Mike's been talking about Bitcoin ETF for a couple weeks. Mira, Riot. I bet you BT might even be up today. And I agree 100% with what Nancy said. I mean, Kathy. The guy asked, he said, is this going to encourage other fat cats to maybe load up on some of this stuff? They've been very skeptical for a very long time. I remember when Bitcoin was $200, and I was skeptical. And then when it got to $2,500, I said, what the heck? And I know a girl here, or a lady here in town that had that stuff at 200, 250 or 300, something like that. And she became a multi-millionaire a few years later.
Is it going to go back to 75,000? Or are they going to buy in the ETFs?
We're back. Senior markets commentator Mike Santoli. There he is. Nice graphic and everything for you, Michael.
Wow. I wasn't even aware that was coming. I appreciate the baseball card.
Hey, that's what we do for our guests here. What's your take here on what lies ahead this week and the importance of it?
You know, it feels like inflation, because the trend has been so friendly to the bull case, that's now in the column that says we got this. So I guess CPI tomorrow can challenge that a little bit. But to me, I think one of the conclusions from the Fed minutes last week was that the more attention is on the potential downside risk of the economy. That's the leg of the soft landing scenario that you might have to pay more attention to. So I think that applies to investors as well. So far, it looks like pretty routine pullback stuff. Nothing that really got you alarmed about a change in overall market character. Doesn't mean it's over. I still think you have to keep in mind earnings estimates have been coming down hard for the fourth quarter, for the reporting season about to start. You do have that tendency of, you know, early year chop, especially in an election year. So see how it plays out. But I don't think that the first week of the year, as rough as it might have been for some areas of the market, was something that necessarily stands out as a real stark warning.
Good to get the inflation expectations read that we did when we did it. Right after what happened last week, rates sort of backed up just a little bit. People got a little nervous about whether they're over their skis on what the Fed might do.
Yeah, exactly. Now, I've been a little bit of a, throw some cool water on inflation expectations based on these measures, but it does fit in with the data, too. So it's not something that I think you have to say is some kind of an outlier. So I do agree with that. Yields are definitely softening up a little bit on that. I also see most of the Treasury moves so far this year also as profit taking. If you look at the 10-year Treasury in price terms, it's like a stock that went from 91 to 105 and it's pulled back to 103. So it didn't really change the trend.
Yeah, no, it's an epic move in November. That's clear. All right, cool. I'll see you on Closing Bell. That's Mike Santoli. Coming up, more contrarian ideas for 2024. Anastasia is going to tell us why it is time to bet on this unloved part of the market. She'll do it when we come back.
Confidence.
All right, we want to continue our contrarian pick by our committee members. Anastasia is with us today. So what have you been thinking about?
Real estate, commercial real estate in both public and private markets, and I would actually say across the entire capital stack, equity and also debt. And first of all, Scott, talk about a hated asset class.
That's for sure.
You know, there's so many concerns about maturities and the $1.5 trillion that need to be refinanced. And by the way, some of those mortgages were taken out at 3.5% interest rates. They need to be refinanced at 6.5%. So clearly that's a concern. Then there's the office vacancies, and that's been so well telegraphed and talked about. But we're talking about 17 or 18% vacancy rates. And so as a result of all of that, if you look at flows into commercial real estate, they have slowed to a trickle last year. And for the performance in the public markets, REITs, the IYR ETF is up about 8%, and the S&P was up 24% last year. So I think I've made the case that this is not an asset class that is well liked and very contrarian. But here's my take. Yes, there's concerns about the wall of maturities and who's going to refi that, but there's also a big pool of capital both in private credit and real estate funds, private funds that are eager to lend to the commercial real estate space, because guess what? They're getting paid about 9% for that debt. So I think there are providers of capital. The other thing I would say is, you know, even though they do have to refinance at 6.5% interest rates, some of those companies, some of those real estate operators, they can withstand that because 90% of the real estate companies can actually service their debts and have the appropriate coverage ratios over and above 1. So that's a lot of resiliency. And then, Scott, the last point, office. Yes, it is a concern. Yes, we're going to see a higher defaults there, but it's a relatively small asset class. It's about 16% of the maturities that are out there. It's about 15% of the overall CRE assets, and it's just about 2.5% of the overall physical assets in the United States. So we're not talking about broad-based stress here. So I would be looking to buy public REITs. I would be looking to buy real estate debt. And I think that's exactly what some of the managers we talked to are doing.
All right, good stuff. Thank you for that. Final trades coming up next.
Calm.
They bought up that SPY.
All right, 3 o'clock Eastern closing bell. I hope you'll join me as we walk you through this final stretch. By the way, market's coming back quite nicely, too. Dow might actually go positive before we say goodbye. AJ Oden, Cameron Dawson, Kevin Simpson, they'll join me at 3 o'clock, and I hope you will as well. In the meantime, Mr. Weiss, what is your final trade?
Microsoft, I think you're seeing the momentum. The sellers got out of the way last week. I think the momentum continues. And I think we're actually going to see a pretty good earnings result from them when they report over the next few weeks.
Okay, Farmer Jim.
BlackRock in.
Oh, what did I just do? What the hell? What? What did I just do? I have no clue what just happened here. I pushed something over here and the whole thing just went.
Shares right now down about just about 15 or so points. It's roughly worth 100 points of downside for the Dow. If you want to look at it differently, the Dow would actually be up 100 points if it wasn't for Boeing right now, because of what's happening right now with the 737-9 MAX model jets being grounded, looking into that fuselage that blew off. It's down 6% right now on the trade so far, 233.75 the last trade. But again, if you look at the days so far, we've seen a bit of a rollover here, but we're still off the worst levels of the session. We were down about 9% or so just at the opening bell. So Kelly, keep an eye on Boeing shares a big drag on the Dow. I know you're talking much more about this. I'll send things back over to you.
Indeed, that's where we start today. Dom Banks, we'll see you in a bit. The company, Boeing that is, has now given airlines instructions on how to inspect their 737 MAX jetliners. About 20% of the company's deliveries last year were of this kind of aircraft, according to Jefferies, although they comprise far less of its future delivery pipeline. Let's get over to Phil LeBeau for the very latest at this hour. Phil?
And Kelly, those instructions that you mentioned, the fact that those have been sent to the airlines and they've been approved by the FAA, theoretically, we could see some of the grounded MAX 9s re-enter service maybe tomorrow, maybe the day after that. So that's an indication that the FAA and Boeing fairly confident in terms of what to look for to make sure that this type of an accident doesn't happen again. I shouldn't say
What are they paying you, buddy?
confident, otherwise it wouldn't go back into service. The focus of the NTSB investigation, the fuselage plug that was ripped off of the Alaska Airlines plane. That plane, by the way, had 3 separate incidents where there was problems with the pressurization. At least it signaled that through a warning light that they then checked, indicated they should go forward in terms of the airplane continuing to fly. The data recorder analysis, that'll be done in Washington later today and tonight over the next couple of days. That should give investigators a fair amount of information as well. The seats near the MAX 9 blowout where this took place, they were empty. Thank goodness they were empty. Otherwise, this could have been far worse. Also, thank goodness that this didn't happen at a higher altitude. There were no serious injuries in this 737 MAX 9 accident. As you take a look at shares of Boeing, they have come back a little bit today, but they're still down more than 6%. As we mentioned, the FAA has approved the MAX inspection process for those planes that are grounded. Meanwhile, CEO Dave...
So here we are on the weekly. This is Boeing, and I talked about this during my little video, what I did, the 21 SMA on the weekly time frame. And that landed right on my support level of 225.58. So that 21, remember that when you're knifing, that 21 SMA on the weekly time frame. Then I had the 50 was my second one, second support. I mean, beautiful. Within 8 cents or $1.08, but I'm not going to count that. I'm going to count this. And then bam, double bottom. Boom, baby. Or a 1, 2, 3. If you can count to 3, you can trade with me. I make it so easy for you. Wubbits. Tubus. And what do we call that? That's a triple bottom. It'd be good to go back and watch that video. You could learn a lot from it.
And the market is no longer cheap. Joining me now is Charlie Babrinskoy. He's the vice chair and head of the investment group at Ariel Investments. Charlie, it's good to see you. Welcome.
Great to see you, Callie. Happy New Year.
Happy New Year. It's a busy day. You know what's been busy today? Healthcare deals. Every time I turn around, there seems to be something else going on in that space. Does that entice you as an investor? Do you have any kind of broader observations to draw from it?
I own a couple. We own ZimV, which is dental implants and spinal products, and they are going to be taking over half their business, and the stock is up 100%.
Woo!
So sure, as an owner of small and mid-cap value stocks, M&A activity tends to be good for us because our portfolio companies tend to be bought rather than doing the buying.
Right.
I would say healthcare, there's a lot of change, and change produces M&A, and obviously the rollout of the new weight loss drugs is going to have big implications for lots of people. And some companies in pharma who lived off of COVID drugs for the last couple of years are now looking again for drugs. So there's going to be activity, and activity tends to be good for small and mid-cap value.
You know, we've had a ton of activity in the healthcare space. Again, I don't know, maybe some of it now coincides with the JP
God,
Morgan
look at
conference. We'll talk more
that. That
about
just
in a
makes
bit,
me
but
so sick.
We also, and I was surprised to see this headline that Leslie Picker was talking about earlier this morning. It's been a kind of a record-breaking year.
Every trade, when they break out this Eli Lilly, I mean, look at this beautiful trade right here. If I'd have focused on this first thing in the morning, which I said I was going to do, I'm going to play puts on Lilly every time they pop it. And then would have got out, maybe, I don't know, double bottom. Or maybe this shoulder line, I would have probably took the exit. That would have been a good trade right there.
I don't mean to be dismissive because there are some companies that aren't maximizing shareholder value, but I would tend to say that activist investors don't always add the value that they claim.
One more I'm just going to throw at you because we're showing it on the screen, and we'll talk about the market more broadly. What about Disney? Do you have? We've talked about entertainment stocks.
Mara.
And take kind of on live events versus post-pandemic and the value there. Do you have a dog in that fight? Or are you kind of waiting to see what happens?
Full disclosure, as you know, Melody Hobson, our CEO, is married to George Lucas, and so we do have an absolute dog in this fight. So it's a wonderful company whose stock has been halved. Obviously, their two core franchises in Marvel and Star Wars have had challenges at the box office, but this is a wonderful brand. The theme park business is spectacular. ESPN has also been challenged. It's been a lot of things all at once, and it's driven the stock down. But this is still a great franchise with great leadership. Iger is a very good CEO, and this company, which has faced some challenges, is going to be fine in the long run.
You're not just saying that?
Not just saying.
All right, let me ask you about the markets. The Dow a moment ago just went positive on the session. S&P and NASDAQ are higher. Finally, a bit of a change in sentiment. It was a bad start to the year, and I think depending on how today goes, the January indicator would tell us that maybe the whole year we could be lower. So perhaps you're right that there's been too much optimism.
Yeah, Buffett, one of his quotes that I love is, you pay a big price for a cheery consensus. And I do think we went into this year, and I said this to you right before Christmas, we went from a lot of pessimism, a lot of certainty that we were going to have a recession, to a lot of optimism. And there was way too much consensus that there's not going to be a recession, that interest rates are going to drop, and that the stock market's going to do well. I happen to generally think that consensus is right, but it always makes me a little nervous when everybody's optimistic. Things can still go wrong, often for reasons that we don't expect. I'm personally worried about China, China's residential real estate collapse, China's possible blockade of Taiwan. I think there's still bad things that can happen. So there is a little too much optimism for my liking.
Maybe, Charlie, you can defend me a little bit, because I was tweeting earlier today about the need for rate cuts. Yes, it was after the New York Fed consumer inflation expectations came out. They're back to normal, so kind of that event risk has passed. We know what's been going on with the broader inflation data. And the main kind of response to that is, no. If we cut rates, inflation's going to pick back up again. How could you want that? But I think you're kind of in the rate cut camp too, are you? Can you just explain that?
We have had one of the first drops in the money supply over the last 18 months. And after a spectacular increase with the Fed flooding the economy with cash, they've actually been taking money out of the economy, and we've had a decline in the amount of cash in the economy, and that is producing a return to more normal rates of inflation. We're not going to get down to 2% this year, but I think we're going to get under 3%, and that gives us a much more level, normal rate of inflation. And one of the most important laws in finance is that the real rate of return, the interest rate above inflation, is relatively constant at 1 to 1.5%. So when you have, let's call it, a 2.5% inflation rate, you really should only have about a 4% risk-free rate. And so interest rates were too high. They were ridiculously low at 0. Now they've come down to about where they should be. And if the inflation keeps coming down, the Fed should drop interest rates, and I think that's the most likely path.
Yeah, it sounds reasonable. It's not crazy. It doesn't mean inflation's going to suddenly pick back up again. If anything, it could be better for bond yields in the long run and on a better economy. Charlie, we'll leave it there for now. I hope to pick it back up sometime soon. Appreciate your time.
Thanks for having me.
Joining me from Ariel Investments. I mentioned all the healthcare deals. Check out shares of Novartis and Cytokinetics right now, moving in opposite directions the last few moments as the Wall Street Journal reports that Novartis is nearing a deal to buy Cytokinetics. Now, Novartis is only fractionally lower. The report says the deal could be finalized as soon as this week. No details yet on potential price or other terms, but CYTK shares are popping 16%. It's been super busy on this front lately. Speaking of which, one of the biggest healthcare events of the year is taking place in California this week. JP Morgan's conference coming at a time of increased deal making and tons of debate over the impact of those new weight loss drugs. Some think they could lessen demand for procedures like hip and knee replacements going forward, a headwind for the medical device makers. And shares of Medtronic are coming off a 3-year string of declines after surging during the pandemic. They're up about 13% the last 3 months, though. How is the company responding to all of these challenges? Let's get out to CNBC's very own Jim Cramer. He's at the JP Morgan Healthcare Conference with Medtronic's CEO. Jim, over to you.
Fibonacci's Mike.
Kelly. I've got Jeff Martin. He's going to go right to this issue about GLP-1. You are very upfront about the idea that there may not be nearly as much impact
You got 1, 2, 3.
diabetes and cardiovascular as people are thinking.
Right. Well, first of all, thanks for having me, Jim. It's great to be here. On the topic of GLP-1s, first of all, I said, look, these are an important new class of drugs for patients and having a big impact. But when it comes to the other disease
Bounced off the today. Bounced off the inverse head and shoulders.
Epidemiology standpoint, as well as looking at different scenarios of penetration of GLP-1s, and we just don't think we feel strongly it's not going to affect our growth rates or our addressable market near term or long term.
Now, it is true also, you talk about the gold standard, which is still built bariatric surgery for people who are very obese, which is where the comorbidities come from.
Right. I mean, look, the areas that people question us about GLP-1s would be diabetes, bariatric surgery is one of those. And we've had it's a small portion of our business, a small slowdown there, but over time, what we're hearing from bariatric surgeons is these GLP-1s are actually increasing our funnel as it brings, very obese patients to make them less obese and safer for surgery.
Well, let's talk about what I regard as almost the new Medtronic, because you're doing so many things. One of the biggest sources of, frankly, of fatality, of death, is hypertension. Right. And yet people have kind of forgotten about it, yet the drugs really don't work. People are kind of unaware about it, even though you get your blood pressure checked when you go to the doctor. You've got the first new thing that might be able to solve this incredibly important disease.
Right, well, we're really excited about this. It's been 15 years in the making. And a huge investment, but we just got FDA approval for our Simplicity system, which basically is a procedural-based solution that lowers patients' hypertension, and it lowers it. We've got data going out 10 years, so it doesn't reverse, and we've had no safety issues, and we're seeing consistently lower blood pressure, about 10 millimeters of mercury. Even a small, like 3 or 4 drop is like a 40% decrease in stroke and heart attack. So this, we think, could be the biggest thing our company's ever done.
I think this is fantastic because I've been waiting. You made an acquisition. But the fact is it's got a novel mechanism. Right. And that's what I think, not a pill, but one time only.
One time only, day procedure. I think, physicians feel comfortable doing this. And the patients we've talked to, they walk out.
I'll tell you what,
they don't feel any pain.
Fantastic.
The best answer to obesity, that'd be cut food stamps. People would go to work. Almost everybody I know that has food stamps is obese. Almost everyone.
And what we're trying to do now is make this more of a mainstream therapy. The brain, as you know, Jim, is still a white space. And our latest system, and the system that got approved today, is just another version of our system that has sensing in it. So today we have a commercially available product for Parkinson's and essential tremor that does, it works magic for these patients. But in addition to that therapeutic effect, we're recording signals in the brain, and we are going to learn so much about the brain. So even in late 2023, in September or so, Nature, which is a very big medical journal in our space up there with New England Journal of Medicine, said using our technology, this one particular physician identified a biomarker for depression. I just got off the phone over holiday with an East Coast university, and they're telling me they found a biomarker for addiction, all using our system that is recording signals in the brain, which, Jim, is very hard to do. It's taken us over a decade to figure this out, and we're the only ones that have it.
Well, it's great because the brain, you're right, it's open.
I got a nephew that
something right now.
told me, he says, I don't have to work. I get free food.
It's very important for patients.
Yeah, so look,
I don't need to work.
In the world, I think the amount of data you have is going to be your currency for innovation, right? There's lots of advances in biomedical engineering, but data is going to be how the ceiling. The more data we have, the better quality data we have, the more we're going to innovate. And so what we've done with NVIDIA, we've putting basically edge computers inside interventional suites and inside of surgery suites to record everything that's going on there and provide in the moment, real-time benefits, like in our colonoscopy business, real-time AI processing right there on the edge to identify polyps. What we found in colonoscopy is a very mature segment that up to 50% of polyps are being missed. No one would have thought of that, and then the AI is finding it. And then where I'm really excited is in surgical suites, as we're trying to democratize good surgery, we're building the algorithms using these edge computers, and we'll eventually deliver these into the OR that's providing, think about driver assist technology in the OR. We're not going to be replacing surgeons anytime soon, but we're going to make them better. And surgeons that are using this AI technology are going to be replacing surgeons that don't.
Now, these are millions of people are impacted by these things. Right. Millions. One last thing, I know pacemakers, you've got a new one. It apparently is much smaller. We certainly benefit from a smaller pacemaker.
Yeah. So this is it. This is the micro pacemaker. You know, we first launched this in 2015. It covered maybe 15% of traditional pacing indications. We just launched some new versions. You saw the approval last week. Now we're up to about half. And it's really, Jim, what this has done is it's helped us gain market share, but more importantly, it's growing the market. Our pacing business is now it's a $3.5, $4 billion business growing high single digits because our innovation has lowered the threshold for patients to get pacing. So we've disrupted ourselves and really rejuvenated this market.
Well, I've got to tell you, Jeff, it's great to hear Medtronic doing all these very exciting things. It's really important. And I know you've reinvented the company, and I think that's a fantastic thing. This is Jeff Martha. He's the chairman and CEO of Medtronic. Kelly, back to you.
Wonderful interview, Jim. And it's busy out there, is it? Every time I turn around, there's more deal making. You think that's because of the conference, or is just the space in general? There's just a lot going on.
This is.
I haven't watched this one in years.
Place that a lot of people get deals done, and by the way, there are people who get deals done, and we don't know it for several weeks or months. Right. But everybody's together, and I've got to tell you, I think I'll go do a couple deals myself on that.
Just give us the exclusive. No, Jim, thank you very much. We appreciate it. As always, CNBC's Jim Cramer, Medtronic's Jeff Martha.
Always clean.
We have a
Jim may help you.
Shutdown next Friday, assuming it can actually get passed and signed into law by then. The latest on whether we should expect any significant spending cuts out of Washington this year, and rate cuts. Have you ever thought about how they might impact?
Man, these are old resistance lines.
Brings two names he says could see the biggest benefit, and names you might want
to
avoid. As we head to break, here's a glance at markets. Dow ever so slightly and briefly turned positive, but we're down 6 points, while the S&P and NASDAQ are in much firmer ground. The exchange is back after that.
This is The Exchange on CNBC.
I'm thinking 8. I can't remember when. I think it was either 17 or 18. See, well, I used to do this when I used to change my color of trend lines every year. And I got to where I don't bother with that anymore. And I used to use the same trend lines over and over and over and over. With a strategy that I used to have. For example, like my low support of 81.14, it became a support, it became a resistance, it became a resistance. Year after year, it became a resistance, it became a support, it became a support. And here we are back again. It became a resistance, became a resistance, it became a resistance, it became a support. And I could use these year after year after year. And people thought it was kind of crazy, but once I showed, just like I showed you reality, support, support, then you got the 200, support, 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 support. Every one of these is a chart pattern breakout. Inverse head and shoulders. We got bull flag. We got a symmetrical flag. We've got a snake, double bottom breakout, boom. We got another snake. We got an inverse head and shoulders. Pattern after pattern, double bottom.
Sit.com.
Snake, breakout, pullback, boom.
Welcome back to the exchange. Top congressional leaders have reached a government spending deal for the moment. Emily Wilkins is in Washington
Snake,
with its details.
double
That is
bottom
like another
breakout.
passage. Emily?
Hey, Kelly. Well, yeah, shutdown fears eased over the weekend after congressional leaders struck a deal yesterday. And this is on the overall spending number for the current fiscal year. So it's $1.6 trillion, and it reflects the agreement that Congress and the White House reached last June over the debt limit, plus the side deal to increase non-defense spending. Now, Speaker Mike Johnson was able to negotiate several cuts of previously allocated funding. He's going to be rescinding $6 billion in COVID emergency funding and an additional $10 billion in cuts for the IRS this year, bringing total cuts for the agency to $20 billion. But while Johnson got Democrats to agree to the cuts, it is not enough for hardline conservatives in his party. The House Freedom Caucus called the bill a, quote, total failure for not doing more to reduce spending. In a Dear Colleague letter, Johnson acknowledged that the plan would...
The people at the IRS, they told me the other day, she said, we can't hire nobody. Nobody wants to work for the IRS. So they're hiring anybody they can. Anybody. They got this retired school teacher got her a job there, so now she's going to have 2 pensions. And they're getting a 5% raise. All government employees are. A lot of these jobs that I heard was filled were government-only jobs and full and part-time employment. Part-time employment. That's what this one guy said on a video. He looked at him over and he said, "This jobs report ain't as good as you think. It's mostly government jobs." And part-time work.
I think what's interesting though is that on a more tactical basis, a few months.
But they're making it sound like it's
the
a
market often pulls back, puts in a little bit
biggest
of
thing
risk
ever.
in the price, and that is usually unwound then after the election. And in a sense, the interesting thing is that the U.S. elections these days behave almost like the emerging market elections, where a lot of risk premium is put into the market.
SPX did very good today.
Afterwards. So that is an interesting pattern.
Let me make sure before you move on that people caught that you said. The interesting thing is that the U.S. elections are behaving like emerging market elections, and I think people would sometimes agree with you in more ways than one.
Exactly. So, but it has been the case for a while, actually, not just since 2016, that in the big picture, it's a good year for the S&P. More tactically, at the end of the summer, markets get choppy, and that choppiness gets unbound.
I'll be right back.
What are the clearest trades people could write down now and use as we move throughout the year? Because some of them are a little quirky. I mean, you've got utilities in there, some other sectors, things like that. The dollar is one clear one, and there's like 4 different outcomes. I mean, listen, I'm not a political expert, but as far as I can see, we could have unified Republican, unified Democrat, split GOP president, Democratic Congress, and vice versa. All of this seems to be on the table right now. So what are the clearest ones that for you have obvious trades people could put on?
Yeah, the unified Democrats is probably the least likely, just because the Senate math is favoring the Republicans. And so 2 out of the 3 potential outcomes are actually a divided government, which is the best for the market. So in the big picture, it's broadly positive. But if you go one level below that, the election obviously rhymes a little bit with 2016. And some things will be very similar to 2016, some will be different. The things that will be similar is that we do see dollar strength again. And that is partially because we see the risk of more fiscal spending, and we see the risk of tariffs, and both are dollar bullish. I don't think it'll be as bad as for the Mexican peso as it was in 2016, but broadly speaking, dollar bullishness. We also, remember in 2016, we saw weaker treasuries. This time I think that might again happen, but in a steepening context, because the Fed will still be cutting at the time, probably when the election rolls around. So it's not an outright treasury sell-off, but a steeper curve. And then if you go on the sector level, and the clear trades are usually that Republicans favor oil, energy. But in 2016, it also was very strong for financials and industrials. And that could again play out that way. Democrats, of course, healthcare would perform the best. So I think on the sector level, you have to choose a little bit what your potential outcome really is. But I think in terms of the risk the market will trade going into the election, I think the risk would be a Trump win, and so therefore you could see industrials and financials doing better than healthcare.
Quick last question, Dirk. Let me turn all of this on its head. Now that you've looked at all these playbooks for recent election cycles, does the trading data yet tell you that the market is anticipating one certain outcome here?
It's very early, right? I mean, a lot of the patterns I described start to work out a few months before the election, and when the programs are clearer. And so I think at this stage, the market, I think the biggest takeaway from the market is that it's believing into a soft landing and not a recession. That's probably a bigger call that you can suss out right now from market behavior than how the election will pan out. But I think by the end of the summer, the election will be front and center, and then you will be able to draw much firmer conclusions of what the market is believing and what will be the outcome.
All right, we will check back in a few months' time. Dirk, thanks very much. We appreciate it.
Thank you, Kelly.
Citi's Dirk Willer. Coming up, shares of Apple are off to their worst start since 1982 after logging declines in every session this year. We're looking to break that streak today, finally. Could that change if they emerge as a bigger player in AI? We'll talk about that ahead. Plus, an under-the-radar earnings name up 20% in a month. But could what's happening at the U.S. southern border derail its momentum? The CEO joins us ahead. I'm going to call this a mystery chart. Tweet me if you can guess it. We're back after this.
Lee.com.
Welcome back. The Dow briefly erased a 200-point drop as Boeing shares have bounced as well off of their session lows, but we're not entirely in the clear. Let's head over to Dom Chu for more of the movers this hour. Dom?
All right, so Kelly, we'll start with one of the reasons why that tech and NASDAQ outperformance is happening. That's Microsoft, which is up north of 1% on the day, has some help from analysts over at both J.P. Morgan and Bernstein. They both tagged the software services, cloud computing,
These people are
and of
scammers.
course now artificial intelligence giant as a top pick for this year. Both have.
I mean, you know Wall Street's rigged. Everybody knows that, right? There's no ifs, ands, or buts about it. And I believe these upgrades, these downgrades, is like what maybe would have happened with Atlas Trading or anybody. These people, they get behind the closed room door, about 8 or 9 of them, and they say, okay, we're going to upgrade this and we're going to downgrade that. And probably not at the level they did, but I mean, it's about the same thing. And they get away with it. I've been watching this for a long time, and I've seen weird stuff happen.
Seoul in this upcoming election. The location of the speech links Biden's message to that of the church's history, the site of a horrific hate crime where 9 worshipers
God,
were
I hate him.
by a white supremacist in 20.
He's so frickin' race baiting piece of crap.
Banned in an annual speech to ambassadors. In the speech, he considered the practice a, quote, commercialization of pregnancy that exploits the material needs of the mother. Surrogacy is either illegal or restricted in much of Europe, and several states in the U.S. have banned the practice as well. And after delays due to the writer's strike in 2023, Stranger Things has officially started production for its 5th and final season. While there are no details yet of a possible release date, additional projects are in the works in the Stranger Things universe, including a play.
5 days downgrade off the 200 on the 1 hour time frame. I mean, this is so many good setups.
Stock hitting an all-time high on December.
So you got Doku here, DocuSign. No. So we were all the way above, and then we pulled back and hit the 200. And the 200 EMA. We'll get an RSI crossover alert. Boom, to the 50. I guarantee this country would be peaceful if it wasn't for the Democrats. These Democrats these days, I used to be one, but not since they started race baiting. I just got away from it. almost tempting to get a put here on the SPX. You got a bear flag.
Welcome back to
on
the
this
exchange.
hour.
Consumers are getting more positive about the
We're
economy,
above the
with
50.
New York Fed inflation expectations falling to their lowest since January of 2021. And after the Fed signaled at its last meeting that rate cuts could be on the table this year, stocks are off to the races. But my next guest says the Fed's shift won't lift all boats, especially in retail. It could actually hurt earnings for the majority of his coverage. Joining me now is Simeon Siegel. He's an analyst with BMO Capital Markets. Simeon, if only everyone would do a note like this. I love hearing about the nuances in terms of the top level rate cuts we talk about and the impact on your coverage universe. So what jumps out?
Hey, Kelly, good to see you. So, listen, I think everyone hears rate cuts and they think, okay, companies and people have more money in their wallets and therefore everything is great. The problem is, if you think about it from a corporate perspective, the rate cuts help those who need money, and a lot of retailers are cash rich post the pandemic. And so what we looked for was okay, growth businesses that need money and growth stocks that are valued accordingly. Companies that are heavily in debt stand to benefit. But oddly enough, the healthiest businesses, the ones that have been building up their balance sheets and have watched, like you and I, your personal ability to generate cash, or savings on cash go up, those will see pressure. And so what we found, so you mentioned earlier, Birkenstock, Lifetime, Planet Fitness, we saw these businesses that actually stand to benefit pretty tremendously across various different angles. Those are going to be the ones that are going to benefit from a rate cut.
And explain, Simeon, before you go from there, and most people's minds wouldn't go, rate cuts, Birkenstocks. Why does that company in particular jump out to you as a beneficiary?
So the way we were thinking about it is we basically created 3 buckets and then ranked our group accordingly. And so what we looked for businesses that were growing faster, because if you think about it, growing faster needs the ability, cost of capital going down will help that growth. But also what a multiple is, what a forward multiple is on growth is what that discount, what are the present values worth today? And so if I lower my interest rate, then my discount value goes down. The present value of those cash is worth more now. That's very different than companies that have multiples that are not based on future value, they're just based on consistency. And so Birkenstock is both a growth stock and a growth company, like others in my group. And the reality is having debt in this scenario helps. Not because having debt is great, but because having debt was expensive. And so when it was variable, we watched a lot of companies see that funding costs continue to rise.
Exactly.
If you now believe it's going to come down, that's a relief point.
And you also put Lifetime Fitness in that category. Is that because it's capital intensive?
And they're actually, so the third bucket, which is a little bit lazy, was our miscellaneous bucket. It was who's levered to financing. And so a company like Lifetime, which is working on potential sale leasebacks, sees a benefit there that had been a pressure point. A company like Planet Fitness, as an army of franchisees that need to tap financing to build units, is another one of these miscellaneous buckets. And so it's this idea, it's funny, it's counterintuitive, because it's the businesses that otherwise were hurt, the businesses that theoretically looked less healthy, that all of a sudden now look that much better.
And no, and I think that makes sense on some level. Let me ask you then, you're sort of saying, look, as we go through this, there might be a lot of companies that are adversely affected. Who are they and why?
Yeah, so this is similar, following that counterintuitive part, and I want to be clear because I'm about to knock good companies. Like, that's what this is. This note was let's isolate a very specific factor as opposed to let's look at the health of the businesses, because what happened in December where stocks moved not tied to numbers, they were tied to the rate conversation. And so what my team tried to do is we tried to isolate stock movements that went too far versus ones that didn't go far enough. And so, for example, our math was last quarter, Gap, Ross Stores, and Ralph Lauren saw tremendous lifts from that cash yield. When you're generating such a return on cash, you watched a number that used to be interest expense turn to interest income. And that's been boosting EPS. And so if that were to diminish, the value that you'd get by saving on your cost of borrowing versus what you'll lose from that free money that cash has given you could actually weigh in earnings. I want to be clear, it doesn't impact the EBIT, doesn't impact the fundamentals of the business. But these businesses that trade on profitability, if they trade on EPS, they've gotten that lift. And I think they've gotten it quietly. I don't know if people have fully appreciated how much earnings have been boosted. We've seen anywhere from low single digit to low double digit equivalent of an EBIT number from interest income. It's a big lift.
That's really interesting. So basically, and there's a lot of the public out there who sort of has enjoyed, yes, they don't want inflation, but they've been making money on their savings in a way that they never did previously. And that's been true for corporate America as well. And all of a sudden that's going to go away.
Yeah, and then listen, like I think even the way like it's probably not all of a sudden going to go away, but it's all about the incremental. It's all about that second derivative. And so what we did, what was fun in this report was we created a scatter plot where we just matched stock movements in December versus this who we think will benefit versus not. Because listen, I'm nowhere near smart enough. I'm not going to pretend to call whether and when and how far interest rates are going to go. But it does seem like that's going to be a conversation. I think you and I are going to be talking about this over the year.
Yeah. I'm looking at an iron condor.
Figure out, did things get better or worse for these companies because they traded on that second derivative on the way up?
No, and there's more granularity in the note. I think it's interesting not just for retail, but as a microcosm of how other industries could be affected as well, both positive and negative. Simeon, thanks. Good to see you. We appreciate it as always.
Great to see you.
Simeon Siegel with BMO. Coming up, Apple is by far the biggest points drag on the NASDAQ 100 year to date, shaving off nearly 69 points. Broadcom the second biggest, by the way, at around 30. But Evercore staying bullish on Apple, expecting an earnings beat and saying positive news flow, including that around its Vision Pro headset, maybe you just got the email like me, will help keep its shares afloat. How big of a boost that hardware could provide? That's next.
Market's real strong today. Last week was a flush out. What's a jade lizard?
Welcome back. Shares of Apple are off to their worst start since 1982. Critics say the company's lack of a clear AI business plan is partly to blame. But Morgan Stanley today saying they do have a stealth AI strategy. Deirdre Bosa joins us now for today's Tech Check. Deirdre?
Kelly, that's right. Apple hasn't had the kind of AI halo that others like Microsoft and Google and Amazon have been able to rely on when the core business isn't performing the way it's supposed to necessarily. But Tim Cook's strategy, it has focused on integrating AI within its ecosystem of devices and services. So instead of a GPT moment, Apple sees AI as something that blends into the user experience and is embedded into your device rather than
requiring a change of habits, like intentionally going to a ChatGPT or Bard. So instead of a chatbot, we could see a generative AI-enabled iPhone and operating system. That's Morgan Stanley note this morning that Kelly referred to says that even more important than Apple's current fundamentals recovering, 2024 will be the year when Apple's, quote, edge AI opportunity comes to fruition and catalyzes a new upgrade cycle, as well as boosting services spend per user. Now, let me explain this a little bit. It's a very different strategy. Edge computing is the idea that large language models will be run on devices like smartphones and computers, any other devices as well. It could be the Apple Watch instead of the cloud. And remember that Apple has an installed base of more than 2
burned out on
billion.
that.
So that's a lot of devices that it can work on. That framework is
Can you
called
believe that?
FLX. It even utilizes the Apple ecosystem
185
further by
strike on
allowing
Apple.
developers to build models on Apple's
Oh, it ain't that
in-house
bad.
silicon. So Apple hasn't overly marketed this strategy, but it's certainly
Apple ain't
a lot of
gaining
folks
like
who
it
started
should.
here talking about this.
I got out a lot higher than it is now.
All right, dear,
The dark horse.
Indeed. If we can ever call Apple a dark horse,
Yeah.
horse, maybe after the start this year we can. Dear Jamosa, thank you very much. We appreciate it. Coming up, 2 Texas rail crossings closed last month as migrants converged at the border. And Greenbrier, the largest rail car maker in the U.S., is flagging future shutdowns as a risk and calling the current migration response unsustainable. Greenbrier shares are up 10% since that shutdown was announced, though. We'll check in with the CEO next. Welcome back to the exchange. Shares of Greenbrier, not the resort, the rail company, are up 6% since reporting an earnings beat but a revenue miss last Friday. And while the largest rail car manufacturer in the country remained positive on their long-term strategy and backlogs, management flagged some short-term risks, including the potential shuttering of southern border rail crossings. Joining me now for an exchange exclusive is Lori Tekorius. She is CEO of the Greenbrier companies. Lori, welcome.
Thank you. Happy New Year. Thanks for having me.
Happy New Year to you as well. Biggest manufacturer of rail cars, and it's been a tumultuous period in many ways between the pandemic, even now some of the interferences we're facing in terms of getting shipments around the world. What's the biggest segment of your business?
The biggest segment of our business is our manufacturing operation. And you're right, we have 3 manufacturing locations in Mexico. We have several manufacturing locations here in the United States, but also in Europe, in Poland, and in Romania, as well as Brazil.
So talk a little bit about what you're experiencing on that front at a time when we know that the manufacturing segment of the economy has been in negative territory for quite some time.
Yeah, it's a really great question because there are so many different layers to this. Part of the reason why we have had some difficulty with manufacturing is just being able to get a good, sustainable workforce. We're willing to train people to come and do work, but it's hard work. And so this is where, to your point at the opening there, the issues on the border crossing are really top of mind for me as well as many others in the rail industry.
Hey, explain that. What are you experiencing these days?
Well, thankfully, Greenbrier has not had any significant issues yet in getting equipment out of Mexico into the U.S. market. But we also are a big customer of the railroads. We use the railroads to move our inventory into Mexico in order to be able to build our rail cars. So having these unannounced, indeterminate closures of rail crossings is a really critical issue. And it's not just about my business, Greenbrier. It is about the overall economy because there is so much commerce that moves across that border. Mexico is our #1 trade partner, and to have just the borders closed is crazy. Think about it when you're driving down the highway and someone up ahead throws their foot on the brakes and that backs traffic up.
Yeah.
Traffic doesn't start flowing again just whenever they take their foot off the brake, right? It's going to take time whenever they have these closures to get things moving freely again.
And we spoke with the industry trade group for rail maybe a week or 2 ago about the situation. He was obviously frustrated. So it sounds like we're still at an impasse. Have you gotten any guidance from the administration?
We continue to talk to our policymakers. Again, we work with the railroads, customers, our competitors, trying to get that. They are really focused on, how they deal with the migration issue. I really do hope that the policymakers in DC can find a way to set aside their differences and think about how we can solve this problem. I mean, it's a great country. There are people down there that want to come into our country to have a better life, to work hard. So how do
I can't listen to this kind of stuff. There wasn't a problem until telling me like she wants open borders. She got what she wanted. Who's this Greenbrier? Greenbrier. GBX. Revenue rose 808 million from 765 from a year ago. Consensus was 850 million. Fleet size increased by 700. Wasn't it Yellow Trunking Company that went bankrupt? Used to maintain utilization 98%, net earnings We're at a double top. So they're pumping a double top. Man, they got this, I'm telling you, they got this thing so rigged. This is how they trade on CNBC. They look for the resistance breakouts. And then they get on here and pump it. Probably called her up and said, hey, we're at a double top. Come on over. So I'm tempted to short this baby. It works almost every time. We'll watch it. I bet you it pulls back. Earnings didn't look like they beat at all. Quarterly dividend, now that might be 30 cents, but still. I can't listen to people like that. I don't like lobbyists.
More pharma deals to tell you about. Merck in talks now to buy Harpoon Therapeutics for $23 a share. The move would boost its cancer portfolio. And Johnson & Johnson will buy Ambrex Biopharma for about $2 billion. Ambrex is also working on cancer therapies.
And shares of Cytokinetics are popping intraday as the Wall Street Journal reports Novartis is in talks to buy the company. They're up as much as 16%, about 13.5% higher. Now the company has been going through a sale process, so there remains the possibility of other bidders interested in their promising hard drive.
But we start with the leading story of the day and the weekend. Boeing. Boeing shares down sharply today after a door plug blew out mid-flight on a 737 MAX 9. The FAA ordering dozens of those planes to be grounded and inspected. And let's bring in Phil LeBeau now for more. What's the latest, Phil?
Tyler, as this investigation continues, really there's going in two tracks right now. You've got the NTSB investigation into the incident itself. And let's start first off with that part of the piece of the latest news today. The NTSB and investigators not only looking at the plane that is parked at the airport in Portland, but also at the fuselage plug, which was recovered in a neighborhood outside of Portland that was blown off of the plane. The FAA, meanwhile, that's the other part of this, it has approved the inspection process that it worked on with Boeing. What is that? That allows them to say to airlines who have grounded planes, okay, if you meet these inspection protocols, if everything on there matches, those grounded planes are closer to resuming flights. I wouldn't be surprised if we start to see some grounded MAX 9s re-enter service tomorrow. In terms of the number of planes that are out there, that are grounded, that have been built by Boeing, you have 218 MAX 9s, 171 of them grounded around the world. United has 79, Alaska 65. By far, they have the most of any airline in the world. Those two have the most of all the airlines. 6 other foreign airlines have 74 MAX 9s. United and Alaska are feeling the ripple effect of this. Today, United canceling more flights, not just because of the MAX 9. Many of these are MAX 9, but the ripple effect, 228 flights canceled today. For Alaska, it's a similar situation. Not only have they pulled those MAX 9s out of service, so you have flights there canceled, but the ripple effect means 143 flights canceled today. And again, don't be surprised if we start to see some of these MAX 9s re-entering service tomorrow or the day after.
UAL bounced
as these inspections take place. Couple other things.
I don't
As you
get it.
take a look at this from the perspective of Boeing shareholder, the question becomes, what does this mean for Boeing MAX production? Dave Calhoun, the CEO, will be holding a safety town hall at the Renton plant in Washington. That will happen tomorrow. The focus will be on building the safest planes possible, making sure that they're doing exactly what they should be doing, and that they are not letting quality controls slip. As you take a look at shares of Boeing, remember, they currently build 38 737 MAXs per month. That's going to be gradually increasing, steadily increasing over the next year and a half until they hit 50 per month in the 2025.
Jeez, that's a lot of planes.
Some of that increase, by the way, guys, is scheduled to be happening in the first half of this year into the second half of this year.
I didn't think they built them that many.
Phil, as to why you say that some of these grounded planes may be back in service as soon as the next couple of days, when it doesn't sound as though the investigators really know what caused this anomaly to happen.
I think that could tell you something, Tyler. While they may not know exactly why, or they're not saying publicly why they believe that this part of the fuselage was ripped off of the Alaska Airlines plane, the FAA is confident from working with Boeing in terms of making sure that whatever issue might be at cause here is not reflected in these other MAX 9s. And so they put this process together. The FAA would not approve it if they were not confident that these planes could be safe to fly again.
And Phil, is it also true, according to Jeffries, that only 2% of the MAX backlog is of these kinds of planes, or the planes that have this kind of feature?
No, it's not that they have this kind of feature, Kelly. It's the MAX 9 is a relatively small part of the Boeing backlog. So when you look at the MAX, the bulk of the MAXs that are built, and by the way, Boeing's backlog is primarily about 80-85% 737 MAXs, and then you've got wide bodies and some other planes in there. But the bulk of it is the MAX. Of that, the Dash 8 is the most popular that's being built right now. The Dash 9, which is what's in question here, is a rather small number. 218 have been delivered since they've been approved. Then you look at the backlog, there's a lot of orders, especially Southwest Airlines, for the smallest variant, the Dash 7, that has yet to be certified and approved for manufacturing. And then there's the Dash 10, which is the largest, the extended version of the 737 MAX. That has also not been approved yet by the FAA. But that's in the backlog. That's airlines have said, we want the 10 or we want the 7. That's where a lot of the backlog is.
But not so much for the 9. Okay, thank you, Phil. We appreciate it. Our Phil LeBeau. For more on the fallout for Boeing and what CEO Dave Calhoun has to do now, let's get to our panel. Jason Gursky is Senior Aerospace and Defense Analyst at Citi. He's got a buy rating, a 315 price target on the shares. And Michael Boyd is Chairman of the Boyd Group, an aviation research and consulting firm. Michael Boyd, what's your reaction to the situation here?
A piece of an airplane fell off in the sky, and I think it's not as simple as just, I worship Phil, but I'm wondering if this is a little simpler than it really is going to be going down, because we did have an airplane that had a structural failure. Are there other airplanes out there? I think, as Phil said, the FAA is going to be very, very circumspect about it. The good news is it's not going to affect the air transportation industry in America. It'll hurt Alaska. It'll affect United. But I think going forward, it may be going on a little bit beyond the next couple of days.
I asked Phil the question about allowing these planes back in the air before it would.
I really did not expect AUL to bounce like this. I expected to have a double bottom down here. I really did. And these are huge breakouts, even before the crash. So I don't know. I don't understand. I think I'd be a little nervous of getting into one of these planes, but you never know. But it kind of shocks me.
No, I mean, it's not as simple. What I'm saying here is what we have here is a simple situation where we do have a failure of the structure of an airplane. That we know. It's a serious problem. And as a serious problem, I don't think the FAA is going to let anything hit the sky, hit the runway, until they're sure that it and the airplanes that have already been built and those already at Spirit Aerosystems are completely compliant and safe.
Jason, the stock is moving off the lows, and as I cited earlier, the MAX 9 appears to be a small fraction of the backlog going forward. You also say it's the only configuration, and Phil mentioned there's more demand for the 7 and the 10, but only the 9 has this plugged door configuration. Is that right? And what do you think is going on with the shares today and from here?
Yeah, that's right. The Dash 9 is the one that has this plugged door. It's an aircraft that's largely designed for Ryanair, right? That flies a more dense seating configuration and therefore needs the extra doors. Other airlines aren't flying it as in such a dense way, don't need those doors, and so they plug them. And I think it's really important to note here that these plug doors have been in the Dash 9 going back to the NG program, which goes all the way back to the late 1990s. So this configuration has flown safely since the late 1990s. The MAX has been in service since 2015. So there's a long history of operations here where we haven't had this kind of issue. And it's, just keep in mind, this was a brand new aircraft. It's only a couple of months old. It had recently come out of an MRO facility. So it's not entirely clear what happened here, but it's pointing to something in the near term on the manufacturing side versus a design issue with the aircraft. So shares are down today because, people have got to discount some level of risk associated with this for Boeing. I think the financial implications for the company are going to be pretty de minimis and not material to the overall long-term outlook for the company, though, at this point, particularly if we get planes back up and flying here sometime this week.
So it sounds as though you think that the immediate stock reaction is overblown.
Oh, for sure. Yeah, we put out a note last night that suggested, it's about $70 million a month in potential, compensation charges that Boeing might be facing.
Two airlines.
Grounded aircraft.
I see.
And then, and then maybe 3% of its cash flow target is at risk here if they were never to deliver another Dash 9 again. And they weren't able to convert those orders into other variants of the of the 737 MAX, which I think they'd be likely to do.
But what about the reputational damage to Boeing from now a second really a third widely publicized event affecting this MAX series of jets? Because of course the MAX 8 was grounded for a couple of years having to do with some software issues. And so how damaging reputationally, I suppose, could this be?
I don't know who that question to.
Jason, why don't you go first and then let Michael have a swing at it?
Yeah, I'll be really brief here. I would just say that I think it depends on what the root cause of this is, right? If this was a manufacturing issue at Boeing or one of its suppliers, not great. If it's a design issue, that's a bigger problem. But if it is, the operator itself was doing some MRO work that had an impact here, and this ends up being, at the feet of the operator, then I don't think there's any long-term reputational damage to Boeing.
And how about you, Michael? And obviously, it's what a blessing that apparently the seats immediately adjacent to that door plug were not occupied.
Yeah, I think it is correct. I mean, this is going to be forgotten, I think. But the problem is, Boeing's already been squeezed out of China politically with the 737 and these new orders. Other places in the world, there may be some reticence to order more. But the good news is, you ain't got no place else to go. You've got Boeing or Airbus, and Airbus's stance card is full. So I'd have to agree. In the near term, there might be some snickering, but in the long term, it's not going to have any effect on Boeing's demand.
All right, gentlemen, thank you very much. Jason Gursky and Michael Boyd, we thank you very much. Let's move on now to shares of NVIDIA and some other chip names surging today, helping to give the NASDAQ a boost. And that's on news we're starting to get from the Consumer Electronics Show that is about to get underway out in Las Vegas. Let's bring in Christina Partsenevelis with more. Christina.
Well, NVIDIA is playing up to its strength by announcing today new consumer desktop GPUs that can run on your PC at home. Specifically, 3 new graphics cards for video gamers, which have been more or less leaked in the past few weeks, so nothing too major in news, along with some updates to generative AI, robotics, and auto partnerships. This stock, like you mentioned, is up about, what, is it 5%? Over 5% now, as is the case for competitor AMD. They also launched a new gaming GPU. NVIDIA and AMD say these GPUs and CPUs also cannot be used to run AI at home, and that the chips can power local generative computers, aka AI PCs, a popular theme at CES this week. For those that don't know, AI PCs are computers that can run powerful AI software, with companies like Intel, AMD suggesting it will actually help revitalize the PC market. NVIDIA also noting that all of these new gaming chips are compliant with US export controls put in place this past October and can also be shipped to China, Tyler.
All right, Christina, you mentioned China. NVIDIA's making AI chips for China, also trying to comply with U.S. regulations in the process. You have some updates there?
Yes, so we know that they've been blocked by the U.S. government, so NVIDIA has been working to create these lower-powered AI chips. News from Reuters today that these chips are going to be in mass production for China in Q2 of this year. I reached out to NVIDIA. They wouldn't confirm this, but they said that they are just working with the U.S. government. But the second point, which was the news clipping that you just saw on your screen from the Wall Street Journal, saying that some of these larger players in China don't want these lower-powered AI chips like Tencent and Alibaba. Instead, they may opt to go for local alternatives from, let's say, a company like Huawei. If that should be the case, especially in the medium term, in a few years from now, that means that NVIDIA will slowly start to lose even more market share in China because of these U.S. export controls. Wedbush is a little bit more optimistic. They put out a note today saying that, hey, that's not necessarily the case. It's a net positive that NVIDIA was able to make these China-geared chips. But overall, in the long term, that could mean NVIDIA loses market share and may no longer dominate the AI chip space. But that could be a ways out when you're dealing with Chinese competitors.
All right, Christina, thanks very much. Christina Partsinevelos. Coming up, markets stumbling a bit to start the year, a combination of some suboptimal headlines,
SPX.
key names, as well as overdue profit-taking, I suppose. But is any pullback in this market actually good for stock? Buying a little breathing room, weathering...
Well, that's what they say now, but they didn't say that last week. It's always after the results. What do I have here? Oh, this is the black dot. Now, in the 30-minute, we're approaching the 200. I'm going to be watching this here. This is on 30-minute. 2, 3, 4, 5, 6, 7, 8. So we had the dot. It takes 30 minutes. We hit my trend line. I got that on the 1 minute. And these previous highs right here. So we definitely hit a resistance. I love my SPX and my SPY. The way they're talking about Boeing today, it's like they're trying to pump it up. So I thought this would be a lot more serious. They'd take this more serious than what they have, but I guarantee they would if there was people dead. It'd be a whole different story. If it would have went up 35,000 feet instead of where it was. Lucky for them, it happened sooner than later. because that could have been devastating. I flew that flight from California to Hawaii. It's a long flight, 5 hours. And I flew it back. Getting there was a lot more scarier than coming back. Anybody else take that flight to Hawaii? Oh, here she
increase their
is.
dividend 61 consecutive years in a row. So I count on this year being the 62nd.
Well, I'm going to add you to the Michael Farr fan club of J&J. That's the one he always mentions. He always mentions.
He does.
Stephanie Mean Reversion Link, thank you. Michael Santoli, thank you as well.
Thank you.
And further ahead, we'll talk some carbon capture, looking at the startup taking the fight directly to the main cause of climate change, carbon. We have details in today's Clean Start.
NBC.
Welcome back to Power Lunch. I mentioned this a moment ago, but oil is falling more than 4% today as Saudi Arabia cuts its prices. Got to get to Pippa Stevens for the details. What's happening here, Pippa?
Yeah, that's right, Kelly. So this is all about Saudi Arabia cutting the price of its oil, which is raising concerns that they see the market as oversupplied. So they slashed prices for Asian customers by $2 per barrel, meaning their official selling prices are now at a more than 2-year low. It comes as OPEC and its allies try to put a floor under oil prices through their continued production cuts, but there might be a limit to the market share Saudi Arabia wants to cede amid record production from non-OPEC producers, including the U.S. Now, ongoing protests in Libya means that 300,000 barrels per day of production is currently shut in, but clearly that is not enough to counter the fears of this oversupplied market. Now, nat gas was very much in focus at the end of last week, jumping 15% ahead of the winter storm, but it's retreating. Oh, actually now it is up 3%. It was lower earlier today. Now the mid-January forecast has turned colder, but it's still not enough to counteract high storage, which is about 13% above the 5-year average. As Eli Rubin from EBW Analytics put it, even a severe weather event would create fireworks for spot prices, but do little to support the medium to long-term outlook. But of course, this is always a volatile trade, now approaching that $3 level. Kelly, Tyler?
Pippa, great to see you. Thank you very much. Pippa Stevens. Let's go to Julia Boorstin now for a CNBC News update. Julia.
Hi, Tyler. Well, the Pentagon says Defense Secretary Lloyd Austin remains in the hospital today. A spokesperson said this afternoon Austin is recovering well and his prognosis is good, and he's no longer in intensive care. The Pentagon did not share any details on what procedure Austin had. He's facing backlash right now for keeping the president and other senior government leaders in the dark about the hospitalization. A White House official said earlier today President Biden is not considering firing him. The Red Cross is issuing an urgent call for blood donations. The organization said today it is facing an emergency blood shortage that is leaving patients at risk of not getting life-saving blood transfusions. The Red Cross says its number of donors is at a 20-year low. And the Peregrine lunar lander's mission is in jeopardy. The company behind the first commercial robotic launch to the moon says there is a failure within the propulsion system. It says its team is trying to stabilize the loss and exploring alternative mission profiles. The rocket launched early this morning and was supposed to land on February 23rd. Tyler, back over to you.
Yes, oh my goodness. Well, that sounds like a real setback for that program. Thank you, Julia. Julia Boorstin. And coming up, Vail Resorts down 14% in 6 months. One potential factor holding the stock back recently is warm weather. That's usually good news for a resort stock unless it's a ski resort company. We'll discuss more next. weekend storm blessing some relatively green northeast mountains as New York City nears nearly 700 days without an inch of snow in Central Park. So are skiers happy with the powder? Of course they are. Or are they changing vacation plans, considering the fact that snow has been lighter than normal in many parts of the country? Joining us now is Chris Woronka, Deutsche Bank Capital Markets analyst covering Vail Resorts and other names in leisure and hospitality. Chris, welcome. Good to have you with us.
Thanks, Tyler. Thanks for having me.
Lack of snow. I mean, if you're sitting where you are, looking over Central Park there, or with a background of Central Park, there's no snow. Out 10 miles west in New Jersey, there's plenty of snow. It's like 4 or 5 inches. That being the case, snow has been lighter than normal in many of the northern mountain areas of the United States. Whistler, I hear, has not had a lot of snow. Montana has not had a lot of snow. How does that affect a company like Vail Resorts?
Yeah, well, it affects them less than it used to, Tyler. Many years ago, before they came along with the Epic Pass, which is their big offering that lets you go to any resort on one pass, they were totally weather dependent. Right now, they're getting about 70% of their lift ticket revenue and skier visits from the advanced sale pass, which is an advanced commitment. It's non-refundable. You have to buy it before the season starts, and you're somewhat at that point at the mercy of the weather. And so they have done that to kind of eliminate that. Also, Vail is a much more, they're more diversified than they've ever been. Oh yeah. They have 37 resorts in the U.S. versus 5 when I started covering the company back in 2006.
Yeah, no, and as you say, that Epic Pass has been a game-changing product. Rivals in the space have done similar things, but nothing is quite as large in scale as the Epic Pass is. But I gather that the unit sales of Epic Pass are a little down, even though total revenues are roughly tracking where they thought.
Yeah, as of the latest update they gave us, which was back in early December, they were actually up 4% in volume versus last year on a pre-sale basis. Now, that doesn't mean that's where it's going to end up. That is partially dependent. That is just a past sale number. From here on out, it is going to be partially dependent on weather. There are a lot of folks that don't want to go skiing if conditions are less than optimal. For others, there's options, spa, restaurants, things like that. But for most folks, if they bought the pass, they're going to go a certain amount, but it works a lot better if there's ample snow for sure.
That's fascinating, Chris, that so much of this is you have to decide in, I don't know, pick the month, September, whether you're going to buy the pass and it's non-refundable and you have to have it. So if someone like me wanted to show up and ski on a casual snowy weekend, what would my options be? Can I still go?
Yeah, that's what's difficult now, Kelly, compared to what it used to be. You have to buy an advance ticket now. You can still do it with relatively short notice, but they're really eliminating the walk-up sales. And those are, by the way, if you go out to Vail and you try to buy something the day of, you're going to pay well over $200 for a single day of skiing. Versus if you buy some kind of pass, you can get that same ticket for somewhere between.
Pumping MTN now. There's a triple bottom on the yearly, that's why. So this could probably, I don't know. It's awful expensive though. For some reason it's been in almost a 2-year Darvis box, and we're at the bottom of it on MTN. Never heard of this one before. Warmer weather is wreaking havoc on natural gas prices. Your next ski trip. Industrial player Vails resorts struggle with stalled targets and environmental insecurities. New report claims. And what happened last year? The weather was perfect for you, buddy. And the year before that, climate change. I would invest in this company if he thinks climate's going to tear up his resort. But we got a snake breakout pullback, and I'm getting alerts on AMC. I nailed this one. Bing! That really is a good video if you want to learn some new stuff, especially about the 60 girls. "1960 ladies, no tattoos, no nose rings or green hair." I'm going to do an update on it today. So I've watched a bunch of people call this trade for quite a while. Oh, I'm loaded up at $9. I loaded more at $7. I loaded more at $6.20. I got some more here at $5.30. And I'm the kind of guy that likes to wait and buy at support, not buy at resistance. I know it's a nasty thing to do. There's always some really big grudge max coming out on this one. You see this stuff right here? This reminds me of a painting I did for this lady. I'm going to post it. Let me look at this one here. IG Principal Investment Grade ETF. What was I going to think about there? I was going to do something. Damn it, I forgot already. You think BTC is going to run up? SPY. SPY broke the 200 on the hour. Seems like they want to get everything back in one day. Jimmy said we'd have a green day today. Didn't I, Magnificent? That's one hell of a run on the SPY. What do you think about that, Ricky? Just nonstop. Uh-oh. That's an insult. How dare you? I still got my green thumb. I'm trying to remember that scanner I had out of Canada. Oh, an ice bath.
Wearable training optimization tech.
How long
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Will you enjoy retirement like these folks? As we remind our clients.
Excuse me. Anybody ever took an ice bath before? I have. It's not fun. I couldn't do it now. But when I was active, I did. Man, this thing's still going. $47.40s. God, this is crazy. This SPX. Anybody get any calls? This just keeps going. We got definitely hard resistance right here. This little yin yang right here. We got that bottom and that top. What's going on here? This thing's acting strange. I'm very tempting for puts here. 35 cents all the way to $14.60 right now, $14.50. This is beyond crazy right here. I'm going to try it. That's a double top, and that's a previous low. From there to there. $4.27. Just a little bit shy of 30 cents. Go for it, Jim. The 47.45s, and I'm taking a little risk here. $47.54. Now we've over my trend line. God, this is nuts. This is the biggest run I've ever seen. Not ever seen, but I mean, it's a big one. Fuck. I got out of put calls. Oh, you're in calls? Damn it, Mike. Now I'm questioning myself. That's all right. Wish me luck.
Washington Huskies.
And remind me, are they changing it next year, or?
They expand the playoff to 12 teams next year. Can't come too soon, frankly.
Yes, after this season.
Too many bowls. Thanks for watching Powerline.
Closing bell with the Dow not only reversing its losses, but up 150 points. It starts right now.
All right, Kelly, thanks. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with the bounce and whether the major averages can resume their rally during this critical week. We will ask our experts over this final stretch. In the meantime,
we got it all back today.
With 60 minutes to go in regulation. Pretty nice move today in the mega caps, and that is helping the NASDAQ outperform today. NVIDIA is leading there. It makes a new AI-related announcement. So what does that mean? Well, a more than 5% gain for that stock. And coming up, we're going to ask top chip checker Stacy Rascon what it means for shares going forward. Apple, well, it's jumping too after a 6% slide to start the year. Elsewhere, Boeing is the big drag this hour after that incident over the weekend, grounding its 737
UVWX?
jets.
I'd wait on that.
Recover a little bit, still down 6.5%. Speaking of interest rates, well, there's the 10-year right at 4%. They're declining today following a positive report on inflation expectations and ahead of this week's CPI report. Takes us to our talk of the tape. What the road ahead for your money might look like with earnings season about to get underway and so much more ahead as well. Let's ask AJ Oden, JP Morgan Private Bank Global Investment Strategist, with me here at Post 9. It's good to see you. Welcome back.
Good to see you too, Scott.
Interesting move we are seeing today in the market after a pretty rocky road last week. What do you make of how this year started?
Well, I think the way that this year started is we saw a lot of optimism priced in last year in those last few months, November, December. And then when you add to the fact that the Fed sort of came out with their SEP, adding in a little bit more rate cuts.
Oh,
what we've been
some good
seeing
news for
lately
Pfizer
is
today.
The market's really trying to figure out how
YouTube.
that equities will see all-time highs.
We got some good news on Pfizer. Pfizer says European Commission approves Talzina Plus for prostate cancer. So that's good news.
When do you think we're going to get the cuts? Do you think we're going to get as many as the...
We'll do a video on it tonight. If we stay above the 9 and we break the 21, I think it's a good buy. But that news for Pfizer is pretty good news. Prostate cancer is a big deal here in the States. But that's Europe. Correct? We called it back in here. I gotta look at my option here. I was up about 300 there for a second. I'd take it to 30 and see if it broke 30. And you got an inverse head and shoulders here. It's kind of a, we had a nice breakout here for some reason on the 24th. Unusual option activity. They got a downgrade for 32 bucks from outperform. I don't know about that. Whoa, here, this is not good. Falls after Florida's Surgeon General. That's on the 4th. That's Moderna. Calling a halt on the mRNA COVID vaccine, 19 vaccines. So I kind of heard that today. Okay, I'm getting back up here on my SPX. I heard something on the news this morning that some of these are still in shock over the big run they've had because of the COVID vaccines, but this has pulled back so much since. That's the biggest lagger right now. I'd say if it broke 30, I'd start getting interested in it. From here, I mean, if it broke 30 bucks, I'd start liking it. For now, I'd see if it holds the 29 and pulls back here on the daily, on the 9 EMA. but everything looks good on it. I just don't like trading Pfizer. But it's cheap. It was cheaper a little bit ago, a couple bucks ago. I'd say if it broke this trend line here, I'd be interested in it. That's right around $30. A little under 30. I'd wait and come in tomorrow and it's kind of a bull flag. It can come up here, do a 1, 2, 3, and then pull back and retest, and then break out the fourth time. Let me see here. Yeah, it's a tough call. It was so much nicer down here off the 200. If it pulled back and hit the 200, I'd consider it probably pretty strongly. That's about a 70-cent dip. Does that make any sense, YouTube? Harry? Or John? Are you still around, John? YouTuber? All the money went into mRNA. Now it's probably dropped today. No. 1, 2, 3 resistance with a new high. Oh, God. I keep forgetting about my trade. We're flagging out. Flagging out for a new breakout on the SPX. Watch. Under 1 minute. Right now it's 211, 311. $47.50 has to break. All right. Drop. Oh, here we got a Schwaggard.
2023, and,
Yeah, that's for
and
sure.
we think it's an opportunity to lean in definitely into 2024.
Yeah, energy. How about that? Because I feel like people are trying to place their bets there, but I think there's already skittishness that it's not going to work again. What do you think?
Yeah, I think you have to think of energy as a hedge instead of an outright upside opportunity.
Why is that?
Meaning that if you have higher inflation, a lot of parts of the market are probably going to struggle with higher interest rates. Meaning that if you see oil prices go up, that contributes to higher inflation. Energy will be your safe haven. So see it as a position size more like a hedge instead of an outright bet on upside.
You like energy or not?
you know, with energy, when you're seeing a slowing economy like we are, I think demand is coming down. Ultimately, energy going through a lot of pain. I would say we prefer real assets in general as a way to tactically hedge against any sort of inflation or exposure there. But energy as a sector, not really loving it right now.
I thought you just, I mean, but you paint the case, though, that you're in the firm, hey, the economy's going to be good camp.
It's going to be good. We believe in 2025. This is a slowing year. We're looking at 1.3% GDP. I mean, that's below trend growth right there. And so as demand is slowing down and we're seeing a slowing economy, energy isn't going to be that sector that has strong performance.
Cameron, you feel like, you know, maybe today is the first kind of inkling of it that, you know, mega cap stocks come down a bunch, people get a little scared, but you had to believe at some point there's going to be a buy the dip. Now, you know, NVIDIA made some announcements today, which we're going to get into later with a top analyst, stocks up 5%. Apple's had, you know, a terrible start to the year. You feel like that's the floor, though, underneath mega cap, that the buyers are just going to come in at every, you know, bit of unsettlement there?
Yeah, I mean, effectively what you're saying is that the trend is your friend and that you have an uptrend in these tech.
It was easy to figure that out. I talk about it. The weekly rule, the 5-day rule, the 3-day rule, and the 7-day rule. We had a sell-off, for, you know, not counting Monday, but a weekly sell-off and a big one, a big sell-off. And yes, I agree, you know, it's a buy the dip situation. That's why I called all these trades out in the video and talked about it. 3-day, 5-day, and 7. And I barely do the 7. It's always the 3 or the 5. I'm way ahead of the pack. These idiots in here, they're the 7-day rule. That's what Wall Street goes by. Or they'll probably change their perspective now. This would be a good spot to take it. I'm going to try to see if I can get this thing down here. But I should get out. Because it ain't working. It is, but it ain't. Ah, you dumb butt. Got sauce all over my face. The snake with the tongue sticking out.
Credit quality holds in. You have seen credit delinquencies pick up for consumers. Is that an issue for those that have a bigger consumer business? And if it is, then that's probably what will discern the winners and the losers.
Guys, we're going to make that the last word. I appreciate it very much. AJ, thanks. Good to see you again. Cameron, we'll see you again soon. That's Cameron Dawson. Shares of Boeing, they're under pressure. You know by now that incident on an Alaska Airlines flight causing dozens of 737 MAXs to be grounded. Our Phil LeBeau has been following this story from the outset. What do we know now, Phil?
You know, Scott, we're still trying to find out exactly what the NTSB has learned so far in its investigation. Not surprisingly, they're not giving a whole lot of details. We'll get an update from them tonight. If there's some good news here, especially if you are a Boeing shareholder, it's the fact that the protocol for inspections for the grounded 737 MAX-9s, well, that's been approved by the FAA. What does that mean? It means the airlines that have these grounded -9s will spend 4 to 8 hours inspecting each aircraft. That's the expectation. If the aircraft is cleared, everything checks out. They do everything as they are mandated to do through the inspection protocol. Then theoretically, these planes can resume flying. Some of them may be back in the air tomorrow or on Thursday. relatively quickly. I'm sure the airlines want to get these back in service. And again, that's an important move here, that the inspection protocol has been approved by the FAA. Take a look at United. You see the shares moving higher, especially after the approval came out. They have 79 MAX planes. They canceled 232 flights today. Not all were MAX 9 related. That's the ripple effect of having all of these cancellations because of groundings. And then when you have Alaska, 65 MAX 9 planes. They canceled 147 flights, much like United. Not all of them are MAX 9, but there's a ripple effect there. In terms of the actual investigation by the NTSB, as I mentioned, it will be updating reporters tonight, 10 o'clock Eastern time, on what they have learned so far. They do now have the fuselage plug, which was ripped off of the plane. They found it in suburban Portland. They are looking at that. They are obviously, as you can see here, looking at the plane. They have the flight data recorder in Washington now. So you take a look at shares of Boeing. The interesting thing will be, is this a one-off incident, Scott? Tomorrow, Boeing will be holding a town hall at the Renton plant where they build the MAX. CEO Dave Calhoun will be there. Even if it is a one-off, this is a good opportunity. He doesn't want to waste a crisis to say to the rank and file, we've got to do a better job when it comes to keeping our eyes on the ball. Doesn't mean that Boeing's responsible for this, but he understands that people are looking at the MAX and saying, here we go again. Scott, back to you.
Since we're talking about, airlines, Delta obviously starts reporting their earnings later this week. What kind of story are the airlines going to tell, Phil?
It'll be a strong one for the fourth quarter. Look, you had a clean holiday for Thanksgiving and a clean holiday for Christmas and strong demand. The numbers are going to be pretty good for the airlines. And now the question becomes, how do you take that and leverage it into 2024? We know the first quarter is slow. It's always slow. But the airlines, and we'll find out from Ed Bastian when we talk to them on Friday, they are noticing that certain parts of the market obviously remain strong, international. And then what are they noticing in terms of business? It continues, that business traveler continues to come back little by little. That'll be a focus of our conversation with him on Friday.
Yeah, all right, stocks on the move as well today. Phil, appreciate it. Phil LeBeau, we're just getting started here on Closing Bell. Up next, NVIDIA moving higher today thanks to a big announcement at the Consumer Electronics Show. We got the details coming up. We're also going to speak to star chip analyst Stacy Rascon about how he thinks these new developments could impact NVIDIA shares this year. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
All it takes is one big day like this, don't it, Mike? Your whole life changes. Almost every trader I know that's made it big, it was that one day that really switched them over. I remember my very first big trade with the marijuana sector. The first year they legalized it on the stock market. PHOT, if I remember right, or something. 0.003 to like 25 cents, and I went, my God. That was a lot of money back then. And then it went to 45. And then the next day, in the headlines, insider selling. Everybody sold their frickin' shares, all the insiders, and it dropped. I heard that Pepsi's getting banned, or not banned, but boycotted in Europe.
Today. All right, welcome back. Let's send it to Christina Partsenevelos now for a look at the top stocks to watch as we head towards the close. Christina?
Well, Twilio is higher as the enterprise software giant's co-founder Jeff Lawson steps down as CEO. The move comes as activist investors, Anson Funds, and Legion Partners pressure the company to sell itself or divest one of its businesses. Twilio does say it expects its fourth quarter revenue to exceed its prior guidance. Shares are up almost 6%. CrowdStrike is higher after being named a top pick by RBC. Analysts say cybersecurity spending continues to be a top priority for companies, which should allow CrowdStrike to continue gaining customers and market share. And that's why you're seeing shares up 5.5%. Last but not least, NVIDIA is on the move higher after announcing 3 new desktop graphics chips with add-ons that'll not only allow gamers, but computer users in general to make better use of AI on their personal computers without having to rely on the cloud and services over the internet. So it's the AI PC everyone keeps talking about. NVIDIA isn't alone. AMD and Intel are all pushing the new AI PC with hopes that it'll revitalize
9,000
the PC
stores.
market. NVIDIA up over 5.5%.
All right, perfect setup. Christina, thank you. We'll see you soon. Christina Partsenevelos for more on today's Semi-Search and NVIDIA and this new news. Let's bring in Bernstein senior analyst Stacy Rascon. Welcome back.
Good to be here.
Watching this stock today really outrun the market. It's up 5.5%. Is that on this AI at home, if you want to call it news?
To be fair, I think it was actually up before they made any announcements. So was AMD and some of the others. The sector in general is having a pretty strong day after kind of a lousy week last week. So I don't know if it's entirely because of the announcements, but the announcements certainly aren't hurting.
What about this announcement? I mean, what do you make of it? How significant is it? How should we think about this, AI PC?
Yeah. So look, in terms of NVIDIA's actual numbers, none of this probably matters very much. It's really much more around their data center business, which is getting close to like 80% of the revenues anyways. But I think the idea that like AI in general is proliferating is a good thing. And some of these announcements, they announced the new gaming parts. They made some healthcare partnership announcements and some other things. I think those are all good in terms of just driving home the idea that AI is starting to proliferate. I think specifically around AI PCs, we've been hearing a lot of talk around those.
My grocery bill is almost doubled here where I live in Springfield. And I can go in for a week, buy $75 worth of groceries and have enough food to last. Now it's costing me about $100, $150. And meat, chicken. I used to be able to go in there and buy 9 half-size chicken breasts for like under 10. $22 this weekend. You know when you get the little breasts that are in a pack? Fish. Oh God, I don't even want to go that route. Fresh fish. It's crazy. This here Pace avocado salsa. I'm paying $1.50 more for that now. I was boasting in here last week about how I got hamburger for $10 when it was 18. Then I go back today, this weekend, and it's 22. for the same size of hamburger, up 110% in a week. I know it sounds petty,
Because of
but
those industrial and auto trends, I think.
You know, I admittedly forgot because, you know, every time we talk, I feel like it's NVIDIA's world and we're just living in it. I didn't realize that Broadcom's your top overall pick. Why is that?
I like Broadcom. So look, so Broadcom has a number of things going for it. And for those who aren't familiar, it's got a semiconductor business and a software business. Software business is much bigger now. They just closed on their
Target $1,250.
Of the revenue now.
What?
Their semiconductor business, I think, again, in a
How about that
numbers,
AVEO?
de-risk that semiconductor
That was
segment.
that dropped pretty much.
Guiding their business,
Was it
non-AI pieces,
AVEO or
from,
GEO?
high single digits, even to high teens, depending on the segment. But they actually have a good
AVGO.
AI story. It's actually the second best AI story in the space, I think, after NVIDIA. They're involved in making custom compute offload ASICs for the hyperscalers doing their own AI chips, as well as the networking side. And that is very strong. And that's actually bridging the gap from the shortfalls in some of their other core businesses, which are cyclical shortfalls. And then in the meantime, they did just buy VMware. It is massively accretive. And you're going to run into a 2025 sort of Broadcom by the time all the synergies are in. They'll be doing pretty close to $60 a share in EPS and high 70s, bumping up on 80% gross margin and $30 billion in free cash flow. I mean, it's cheap. It's got some multiple expenditure, but it's still very, very cheap relative to the space and relative to the quality of the business. I really like Broadcom.
You know, AMD has had a really good run of late. You know, and Dr. Lisa Su has really been out there making the case for that company that, hey, we're here too, and we're going to be real players. You suggest that the stock might be over its skis, and you do have a perform rating on it. Why is that?
Yeah, it's funny. So I don't just say this on TV. You probably shouldn't listen to me for AMD. I seem to be incapable of calling that stock properly. we downgraded it actually early last year, and it was on a thesis that gross margins were too high and numbers were too high. That was absolutely true. That happened, and nobody cared. They did something really, really smart. When the AI story from NVIDIA actually, there was one when they had sort of the print heard around the world in the middle of last year, AMD latched onto that, and to their credit, they actually do have a roadmap with products on it. There is some demand because people are looking for a second source. And they left themselves some room for that narrative to run. They said that they'll do, quote unquote, more than $2 billion in AI revenues. MI300 is the product. They'll do more than $2 billion in revenue this year. They left room. That could be 3, it could be 4, it could be 5. It's a rounding error relative to the size of the business, but for AMD, that may be good enough. And it is very possible that as long as that AI narrative can hold, that people may continue to overlook some of the shortfalls in the rest of the business, which have clearly been there, and I worry are still there as we go into next year. But that AI story for them, they don't need to do $60 billion or $80 billion, whatever it is that NVIDIA is going to do, right? If they do 4 or 3, that may be enough, and that may keep the stock going for now.
But that's kind of my point of what I asked you earlier. It's like you mention AI, you talk about it a lot, and then bang, you get the AI bump, but then the rubber has to meet the road at some point. And anyway, I guess we'll see. I gotta leave it there, Stacy.
I still worry numbers could be a little high, but I it's like I said, that narrative could carry them. It's been carrying them for the last several quarters, even as numbers have proved to be too high.
Yeah. Well, I appreciate your honesty on your AMD calls. We'll talk soon.
All righty.
All right, that's Stacy Rascon joining us back on Closing Bell. Up next, the deal-making frenzy in healthcare, not just today, but to start this year. We're going to bring you up to date of all of the stocks being impacted and what it could mean for not only M&A going forward, but for that sector and your money. Closing Bell is coming right back.
Such a pretty world today. You notice, Mike, I ain't been
About
singing.
25 minutes of the closing bell. Several
I'm doing it for you,
deals
buddy.
being announced today. Leslie Picker here with all of those details for us. Hi, Leslie.
Hey, Scott. Yeah,
I know you love my voice.
A healthy amount of deal activity. This morning alone, we saw an announcement from Boston Scientific to acquire Exonics for $3.7 billion.
Let's stop playing music.
Treatment deals, J&J buying Ambrx for $2 billion and Merck buying Harpoon for $680 million. And then the Journal reporting a short while ago that Novartis is close to inking a takeover of Cytokinetics, which has a promising heart
Damn.
and a $10 billion
I got that one wrong.
valuation. Of course, this flurry of deal making
Big time.
is not a coincidence. It comes amid the JP Morgan Healthcare Conference taking place in San Francisco. There are reportedly 8,000
God.
people attending.
I can't believe I got that so wrong.
Annual occurrence where healthcare companies can talk up their recent deals and discuss future ones. The conference comes on the heels of an active December where just 3 pharma giants, AbbVie, Bristol Myers Squibb, and AstraZeneca scooped up
That Pfizer guy in there on YouTube, I don't know, man. We might be getting a bounce off of it
more deal making
if it follows all these others.
declining interest rates sent the Spider S&P Biotech ETF surging
John.
about 25% since the start of December. So lots of
Can't believe how wrong I got this.
surrounding this space, Scott.
Are we going to be talking, Leslie, about other sectors than healthcare when it comes to deals and a pickup? Is this just the beginning, do you think?
You know, it's interesting because one of the key drivers of M&A is very healthcare specific. It is that a lot of these companies are facing patent cliffs whereby some of their key drugs, the patents are expiring and they're able to, other companies are able to create generic versions of those. So that's kind of
What's the
driving
lotto play in the
M&A
close?
here, as well as, of course, those declining interest rates that we saw at the end of the
Jimmy
year.
wants to play
When you
put.
think about the IPO pipeline, when you think about the M&A pipeline and how that interplays with rates, we could start to see some more activity.
No, you go
if
trade
rates
it.
do stabilize. But
Not
there
on an
still are some
aggressive run
concerns
like
around
this.
Regulation. Private equity says that there's still some, disconnect between what the buyer is willing to pay and what the seller is willing to sell at in terms of valuation. So a lot of the hurdles that we saw last year are still in place. That said, activist activity is something that people are pointing to as a key driver of potential M&A in 2024.
All right, appreciate that, Leslie. Thank you. We'll see you in the market zone with another report as you follow the money. All right, up next, 5-star stock picks, Capital Wealth Planning's Kevin Simpson. He is back to break down his latest trades, how he's also playing earnings season as it gets ready to get underway. Closing bell back in just 2 minutes.
Mara hit the 1, 2, 3 and decided to stop. But that ain't saying nothing. It could be breaking out of that tomorrow and run back up to 32 or 31 something. We had the big breakout on NVIDIA today, so that's the one we got to watch. Nile didn't bounce today.
50% off.
Great call on Apple.
All right, welcome back. Stocks rebounding today after a weak start to the year. This ahead of earnings from the big banks later in the week.
I'm swinging some of these calls, and I sold some today.
It's good to see you. Welcome back.
Hey, Scott.
You're always active, and here you are. I
Apple.
see that you sold J.P. Morgan. We're talking about earnings
It's
starting
now
at the end of the week, this
190.
one included. It was a big winner. Why'd you sell it?
Well, you know, we trimmed this position, Scott. We love J.P. Morgan. It's been our top bank position for a long time. Over the past 2 months, the stock's up 25%. So that gives us an opportunity to sell into strength. We still have it as a full position, but when you've got something that makes that kind of move, especially a company that isn't an AI-related stock, you want to take advantage of that, right-size your positions. We still think that it's going to do very well. They beat earnings 82% of the time. They might be a little bit light year over year, but they're talking about 10% growth. We also sold a covered call on it heading into earnings because you do get a little bit of volatility increases when earnings season starts. So it's another little trade technique that we were able to take advantage of.
Are you bullish more or less of financials in general or not?
Yeah, you know, I'm bullish on the market. I think if we look at this year from a longer term perspective and we think about where we start the year and where we end the year, we're positive on how that shakes out. Whether the Fed starts cutting rates in March, you know, I don't know, that might be a little premature. Whether there's as many as the market's hoping for in terms of 6 or 7 cuts, I'm not sure that's the case either. But from a broader perspective, we think stocks are going to be higher. So we want to sell into some strength modestly, and we definitely want to be buyers on pullbacks.
So you think earnings are going to be good?
Yeah, I think they're going to, because we're looking at a low bar. You know, we always talk about earnings season as this majestic a goal, but we always tend to set the bar just to the point where we can look smart and get over it. But that's not a new
All
story.
right.
Home Depot, you added to it.
Same thing in terms of our thought process on Home Depot. We think lower rates are going to do good things for the consumer. We think it'll do good things for Home Depot on larger purchases, home renovations. This is a stock that's done well in the period of this rate spike. And looking at this position and right-sizing it, there was a little bit of a pullback last week. We added it, we rounded it out to a 5% position. What I like most about Home Depot at this time of year is that they traditionally give you a dividend boost in January. For the past 5 years, that dividend increase, Scott, has averaged about 16% annualized. So if we're looking at a hedge against inflation, strong dividend growth is the lifeblood of our portfolio. And we're expecting Home Depot to raise their dividend again when they announce quarterly earnings in Q1 here.
Is that your preferred housing-related play?
It is, yeah, 100%. In the retail space, we also own Walmart.
Anybody on YouTube?
Fans of Home Depot and
I post little videos in here over the weekend and sometimes in the weekdays of calls that I'm looking at for the week. And these 3 here, Apple, Boeing, and AMC. And then I did one here with the volume's real low on it. couple days ago, I did a video on walking away from trade ideas. Was I getting complacent? A lot of traders get complacent. You can find yourself getting complacent and miss out on good trades. Like last week we had the hard sell off, so I figured it was enough. And this today, Monday, boom, we made it all back, almost. I think like a fat cat sometimes, and you got to always be a bull when you come in here every morning, because you just don't know, you know. They'd rather see the market go up than down, for sure. So I've always had that bullish instinct. Let's go back and watch a few of those if you're bored. Looks like the banks took a beating today. We got Merck, JP Morgan, Citibank, Bank of America. Now, earnings come out on Friday. I got a little earnings thing up there in the room there. You see it? Earnings update. So we've got Bank of America, BlackRock, Citibank, Delta Airlines, JP Morgan, United Healthcare, and Wells Fargo Wagon Friday. And PPI numbers come out Friday on the 12th. I don't think it's going to matter. Like I said in previous videos, it's going to be all about the earnings. The market made it all about the Fed and interest rates here in the last 9 weeks, not counting last week. And I said, no, they overdid that. They overblown it. So they're going to use earnings as an excuse for the pop. You wait and see. Well, we predicted earnings were going to be good, so that's why we positioned ourselves in this here manner. But I'm going to be really into earnings probably starting tomorrow here on the banks. JP Morgan, the guy's right. This was an interesting call that I made here. This is called an inside harmony. And I've nailed this. And it just nothing but straight up ever since. Now you're starting to flatten out. Now they got a price target to 220 on this. I remember someone idiot saying last week. JP Morgan's the best bank out there. Here's Bank of America, says 188. There's 212 by Barclays from 186. Maintains overweight rating. But I remember seeing 120, I thought. 234. Oppenheimer cuts Morgan's price target to 234 from 243. Morgan Stanley's the worst one of them all, and it's even up for the year. I should have loaded every bank stock that I had that I called when I called the bottoms on them. Johnson & Johnson, I bet you it does bounce. Just in sympathy of healthcare. We're above the 200 on the yearly. And that's a yin yang. So if you come back and you touch that 200, I'd probably jump in the trade. Just around 160. Ten more minutes left. I got so many mixed messages about this coming year from hearing these guys on CNBC. So I got to go with my own instincts. They're probably happy with that little bitty pullback we had for 4 days and say, let's go, man. One lady nailed it on the head today. That's the government spending over $6 trillion in the past 3 years. And it hasn't all been spent. And it's coming out, a lot of it's coming out this year. To cut the budget, they decided to pull some money from the IRS. Well, they give them $80 billion to hire new people. They knew that was way over. $80 billion. I got audited twice during the Clinton administration. I had an art gallery in Sedalia, Missouri. And I was going to college. I had to work them two in. And Bill Clinton got me twice. He did the same thing. He increased the IRS by 30%. So if you don't think you're not going to get audited, you have a real good chance. Unless they cut more of this budget. I got audited because of I depreciated my equipment too much. And I had a bunch of art that I depreciated, and they didn't like that. I said, this shit ain't worth what the price tag. I'm gonna depreciate it. Picture frame molding. I mean, I could spend $200 to $300 on a stick of molding easily back in 1994, 95, 96. A 10-foot stick could run me $350, $500. It wasn't cheap, but that was the best you could buy. So I ended up turning it into a ready-made shop, and I lined my walls with a bunch of ready-mades and did a lot of cost cutting that away. Stuff like this here. A 10-foot stick would run you about $193. This is on Amazon. That's not, they didn't have it. Wow. I don't think they had Amazon back then. That probably would have cost me $400 to $500. Let's see if Larson Jewel's still around. These people wanted me to go work for them. Sold a lot of that. Picture frames plush. Finance sector green today. And the banks are down.
Yeah, Scott, take a look at shares of Boeing. The reason that they're being dragged lower, this is a report that first came out about 15 minutes ago from the Air Current, matched by our Leslie Josephs at CNBC.com. Essentially comes down to this. United Airlines has found loose bolts on door plugs of several Boeing 737 MAX planes during inspections. Now remember, some of these planes were inspected initially by United as well as Alaska on Saturday after there was the incident with the Alaska Airlines plane on Friday night. That was before the FAA said, no, we're going to ground all of these until we have protocol here. But this reporting from CNBC.com's Leslie Joseph, as well as the Air Current, John Ostrower, essentially says, look, some of these planes that were checked out have loose bolts in the door plug on the 737 MAX 9. And if that's the case, Scott, it raises the question, which is the primary drag on Boeing, which is the quality controls and the lack of them, or appearance of the lack of them, at the Renton, Washington factory. So that's
it's very scary.
Scott, and we have reached out to both United as well as the FAA, as well as Boeing.
We'll have to go through every bit, all of them.
Scott?
You know, Phil, and forgive me for putting you on the spot if you don't, but just from people you've been talking to, assume these bolts have been found and they're loose. Are we talking about something as simple as just tightening the bolts to get the planes back in the air, or something more significant?
Hard to say, Scott. I don't know exactly. And look, I don't imagine that this is like a bolt that you and I see around our house and we tighten it up and that's the end of it. It's far more intricate than that. Having said that, Scott, loose bolts is just a terminology that I can imagine people who are Boeing shareholders are looking at this going, if this is true, if this is part of the problem here, what's going on? I mean, this sort of comes down to craftsmanship 101.
It's not good.
Be cropping.
And they're wanting to hire people because of the color of their skin, where they should be hiring people that are for experience.
You know, Jim Lebenthal, for example, who's been as big a Boeing share supporter as I can remember, dumped those shares today, said enough is enough.
I said the same thing.
Watching that story unfold. Phil, thank you. Let's not get anything else between now and the end of this day. That's Phil LeBeau. Mike, we're going to go out here with some nice gains.
We are, and we got another little uptick when you saw the sort of market on closed orders. So that showed that there's some urgency to get money into this market before it gets away from you. Most 2% from a 2-year high to really bring out.
Yep, today was a big day, so we got to consolidate today. I mean, I think we need to consolidate off this run. Now, Boeing used to be a market leader back in the day. I mean, they went straight to Boeing. If Boeing was doing good, the market was doing great. And that went on for years. And same thing with the car industry. If General Motors was doing good, then we're in a bull market. And you see where General Motors is. It's never moved. If you go back and look at the chart, the only time it moved is during EV and I call that the EV breakout. This is the one that always got me, was General Motors. Why, how would they say, stuff like that? "20 years. It's been in a Darvis box for 20 years. We had the crash of Obama, and then he bailed out General Motors. For the third time they got bailed out and had a big bounce. Then the EV. So this thing been flat for 20 years and always been flat. It's always going to be flat because it's called Government Motors, not General Motors. And this used to be a leading indicator for the market. And I always asked myself, why? Because, we didn't have computers or all this neat stuff that we have today, the cell phone, the .com era. We had nothing to rely on but spending, and if people bought cars, then the market was always bullish. But nowadays it ain't like that. Until the EV gave it a big push. And then it was Boeing, and now it's tech stocks, the internet. Ever since the internet bubble, since 2000, since 2000. Thank you, Al Gore, for creating the internet. He went on a campaign and said he created the internet. Then he sold his newspaper for $600 million. And never got investigated on that. $600 million. And the paper was a piece of crap. I don't know if anybody ever remembers that or not. Really, today was one of them days, man. If you were in the market, you could have really made a lot of money. It's SPX. I just love trading this stock. It's been the biggest payoff trade that I've ever traded in my life, besides Tesla. It's just amazing how much you can make off this in a day. And they're so easy to read. That's the funny thing about it. If you study charts with me, you can understand why. Now what? You gonna stick on me? Right off the 200. Pull back to the 200. We got 1, 2, 3, boom. Take that trend line and line them up on the body of the candle. Boom. 5-day sell-off. Boom. What took 4 days? What took last week? We made it back. Plus. In 1 day. That's called the 5-day rule. Watch. 1 2 bits, 3 bits, 4 bits, 5 boom. 1 2 3 4 5 boom. 1 2 3 4 5 boom. That's called the 5-day rule. And I talked about it in some of them videos I did this weekend. Apple the same way. This was like a 3-4 week sell-off on Apple. 1 2 bits, 3B, 4B. 1 2 3. Well, we came in on Monday, Tuesday, Wednesday, Thursday, and Friday. Boom. 1 week. Okay, well, I'm going to relax and have some time to myself. The bolts being loose, they're going to have to go through the whole plane. So this is going to get dragged. If the government gets involved again, this could have been real bad. If they were at 35,000 feet and that door went off, we would have never heard the end of it. This stock would have tanked probably a good, more than just 10%. You heard these guys and you're making excuses all day about it. Oh, we're not worried about it. The door fell off, blah, blah. I mean, you're stuck in a tube in the air. I remember the first time I took a plane ride, and that was to Vegas. I know every time I go into an airport, I'm lost. I was leaving Jamaica, and I said, "Hey, you work here?" And he said, "Yeah." I said, "I'll give you $10 if you take me to where I got to go." In Jamaica, when I did that trip, $8 to $10, that's what they made every day. I said, "I'll pay you $10." And it only took him 3 minutes to push me up to an elevator and say, "Right over in that corner is where you got to go." He made a day's work, and I didn't, I snuck it under his hand so nobody could see it. I shook his hand. I said, "Here's $10. Take me to blah blah so I can get on my flight back to America." "Yeah, man. Right away, sir." When I got into Dallas, I seen everybody going into this big section, so I followed these other people, and I end up following as employees into the employee lane, and I walked all the way down there, and I said, "Ma'am," I said, "I'm trying to leave." I'm trying to get on a plane. "Oh, sir, you got to walk all the way back where you come from." And it took me, and I didn't know how to get out. I didn't know nothing about the updates and the little scanning machine where you had to put all your information in, and man, I felt lost. Now I got money. I think I can just go to somebody and say, "Hey, here's $100. Tell me how to get out of here." We hit my resistance, 185.51 to the penny. I had 185.51. We hit 185.60. I was off 9 cents. On Apple. And nailed the dip on Boeing to the T. In my video that I did this weekend. Same with Apple. I said we're going to hold 180. We hit 179.96. $0.04 off. I go back and I watch every one of these. After I do them, I've done it ever since I started. Everyone me in Vegas did. I went back and I watched every one of them. And I learned so much just watching myself doing the videos. I'm going to show you an old an old one here. How much? I haven't changed that much, my trading strategy. I've added a lot of moving averages and to Wall Street market update with Vegas and Jim back 5 years ago. Let's see if I got one, an educational one in here. 5 years ago on a cannabis.
Yeah, that's a key part of this as well.
What kinds of suppliers?
I'll be perfectly.
Well, what kinds of suppliers should we have questions about at this stage?
Well, the most.
Hello, welcome to Wall Street Aftermarket Report with Vegas and Jim. Today's date is October the 14th, 2018. And hello, Vegas.
Hello, Jim. How are you?
Oh man, I'm doing great. Got a good night's sleep. We had a great week last week. We predicted that the market would recover. We had a good Friday and can't wait for Monday.
Well, I don't blame you. The markets were challenging last week, and people were looking to place some options, shorting the SPY. So there were some good opportunities to make some money, and obviously being cautious. So we hope to see a good day tomorrow. But of course, what's on everyone's mind, of course, is hot is hot.
Oh, excuse me. That's me smoking a bong hit.
So, as you guys know, in 72 hours, it will be legal.
I'm going to do that again.
And obviously being cautious. So, we hope to see a good day tomorrow. But, of course, what's on everyone's mind, of course, is hot is hot.
Oh, excuse me.
So, as you guys know, in 72 hours, it will be legal in Canada to purchase, possess, or grow recreational cannabis, with some considerable caveats depending on which part of the country you live in. So on Wednesday, this Wednesday, the 17th, the country will mark a historic movement at the end of the criminal prohibition on marijuana. And what's interesting is obviously people are counting down the legal cannabis, which is measurable now in hours. Many retailers and police forces and the general public are actually still curious and uncertain about how the rollout is going to actually go. So, stay tuned on that. One of the challenges is, people are not sure how it's going to, how it's going to affect society. So, who knows what's going to happen? All we know is it's going legal, and there's a lot of hype with pot stocks. So, on that note, I do want to talk about a whole list of pot plays, and I will just actually name the tickers now. So, if you want to grab a pen, you should be writing these down, and we're going to talk about them one by one. So, the ones we're going to talk about will be ACBFF, ALEAF, TGODF, PURA, TLRY, and TCNNF. So I'm going to turn it over to Jim because we're going to talk about ACBFF, Aurora Cannabis, and we're also going to talk about a leaf. So Jim, what do you got to tell us about those two companies?
Well, I know that ACBFF and A-Leaf will be uplisted to the NASDAQ, which is going to be very good news. And you're going to probably refresh us on TGODF. And
yes.
And so that's basically what I wanted to say about them. And unless you want me to talk about the charts or you have more to say, go right ahead.
No, I wanted you to, can you talk about the charts first, and then I'm just going to give a commentary on ACBFF and the connection it has with TGODF, because I don't think a lot of people know, and maybe some of you do know, but there's a lot of people that probably don't, so I'm going to talk about that momentarily, but I would love if you could talk about those amazing charts.
Okay, ACBFF, here we are again. We're getting up to past that $10 level, and that's where we kind of called a resistance at $10. Now this thing's had a high this year already of $12.30. Now we know this is the big week that we've been waiting for, so we're expecting this thing to go ahead and bounce on up this week. You can see it's already had a great breakout for the last month. It has real nice pullbacks, and then when it pulls back, it bounces right back up. So we're at a resistance right now. We closed at 10.52. Let's see if we can take this to 10.81 tomorrow, maybe a little higher, around $11, and that's going to be your next resistance. And we'll just keep bringing it up and playing the pullbacks on this thing. This is ACBFF. Then we got a leaf. A leaf is one that we called out, and it kind of pulls back a little bit. I think it's just now starting to pick up momentum. And I'm going to get, I don't know why I got these. I guess I called me a little flag right here. You see that little flag? That's called a pennant flag right there, and how it broke up. You had that big run right there on the month, and then I called this flag out last week. And right when that happened, man, bingo, that thing run up to about 271, then pulled back to support right here around 224. So we got a green flag on it again Friday. We think it's going to go ahead and bounce back up to this resistance level of 267. And then we're going to catch the momentum and maybe ride it up to this long resistance of 320. And that's a leaf. And I just want to go ahead and pull up the 5-day chart on it. See how we pulled back. So we're ready to break out again. Keep a good eye on this stock. We want it to break this resistance level right here at 236 come Monday morning. And then the last one here, I just now got notified of it, so I'm not real fresh on it yet. But let's take a good look at it. TGODF. I have not charted this up at all. I'm going to pull up the year's chart. What I'm seeing is a good pullback here. We got a low support of around 416 with a good pivot point of 442. And then that first close there, it closed at 455. So we're going to run it up to this next channel here at 469 and maybe hit it up here to the 50-day SMA at 493. And look, you still got a big mountain here to climb. So let's see if we can get it up to this final resistance of 526. And we're going to keep a good eye on it. I haven't monitored this at all. This will be the first time this week I'm going to be watching it. This is TGODFF. And those are the three that you're talking about, Vegas.
Yes, and I actually just want to talk about the connection between TGODF, which is on the OTC side, and on the Canadian market, it's under TGOD.
And that was 5 years ago, 5.5 years ago. And I think I was already trading with Vegas for a couple years ahead of that. And that's it. That was right before they legalized it in Canada. And we had Canada at that time, the market, that was the only sector that was running at the time. And they had a big run, like Cron ran from under 10 to 30 bucks, and CGC ran, the TLRY ran to $300 from 25. So always, when there's a new trend in a sector or like AI, they'll pop and run, and then eventually they'll kind of sizzle out. And we've seen it many a times. We've seen it with the EV car run. You know how Nile ran to 65, how Tesla ran from 58 to 2,000. And we've seen it in all sectors. I've seen it in the .com era. When I was trading .com era, we had a bunch of companies. I think there's 300 companies just in EV car companies just in China. So we've seen it in Bitcoin. Back in the old days, there was nothing. It was just healthcare and energy, and when I first started watching stocks in 1980, my first trade was Walmart and General Electric, and I was just freshly out of high school. So things have changed during that period from 1985 to, I used to work at Walmart and I inventoried Walmart. I drove around in a Bluebird bus with a 10-key calculator fresh out of high school. And we all rode this big Bluebird bus. And we'd go to town, and then we inventoried auto zones and factories. We had a little crew of about 6 or 7 of us, 8 of us that rode in a van, and we'd go from AutoZone to AutoZone. Texas. I was doing an AutoZone one time, and this Mexican lady come up to me, and she thought I worked there, and she said, "Will you help me with my car?" And I said, "Yeah." I mean, she was cute, and I was a youngin' back then. "Yeah, I'll go out there and do that." So I went out there and fixed her car, and she said, "I got a present for you." I was all right. I was hoping for a kiss. And she handed me a couple joints. That was back in 1986, maybe. I'm going to get on out of here. So we got the AI bubble working on us now, and we got this healthcare thing with, they're pumping the heck out of LLY. Just the fact that it's more than just a weight drug. You know, it could help people with diabetes and heart disease. And if you lose weight, anything, you know, that amounts to losing weight will improve your heart, your health, diabetes. I mean, there's a lot of good things that happen. I've always tried to keep slim. It's always been on my mind ever since I was a kid. My nickname was Slim Jim. The coach asked me, he said, "Son, are you sure you want a box? You're a toothpick." I said, "I might be a toothpick, but I'm fast." I think that matters more. You know, 5 or 6 good licks before they blink an eye. And so I boxed for a few years, and I played baseball. "Son, you're a little small to be playing baseball." And I said, "I'm fast. I can run fast. I don't have to lug around a lot of weight." So they put me as pitcher and catcher and first base and shortstop and third base. And I didn't like catching. It was hard on my knees. So I'm going to get on out of here and relax and watch a few of my videos that I like to relax to and cook some dinner. Today was a very exciting day. It's one of them kind of days where you just don't want to sit back. You know, it was definitely right out of the gate, we called a bull day. And I think it had just a lot to do with because we sold off so hard. And these people are bullish. Greedy. This market's got very, very, very greedy. I mean, it's a lot different than it used to be. If you had like a 20, 30-day good green day on the Dow or on the NASDAQ, 30 points, 50 points, that was a good day. And now it's 200, 300 points a day, or a pullback of 200, 300 points. you know, bouncing up 150 and then coming back even, and then we were down on the Dow today 150 points. I mean, kind of think about that. The spreads are a lot bigger now than they've ever been. And all these people that were watching the I guarantee it, a lot of these people sold out right at the end of the year or at the first of the year when we started having that red day, and then bought the dip. AMD, they're you know, kind of saying that they were all over, tech was overpriced, but nah, tech's here to stay. It's part of the gig economy. Computers, tech, I mean AI, it's all, I don't think it'll ever change. I don't know what will be next. Might be a whole different thing when it comes to robots. Have people working at factories instead, and we'll have robots working in factories, and all these other little bitty companies will start. That could be the next thing. So we'll catch you later. Retail traders. Thanks, YouTube. I think you're on there. Hit the like button down there.